back in the hunter-gatherer days. The hunters have to literally go out there, kill animals, and hunt for food on their own. With their own will, with their own power, spending a lot of time in the jungle, worrying about whether they will die by some freaking saber-toothed tiger or some shit. Don't give in to instant gratification, right? Be patient, take the right trade, take the perfect trade setups that will actually give you a higher chance of you making money, and preserve your capital for these trade setups instead of spamming them on those shitty little trades that will take throughout the day. So for me, what I like to do is to set alerts at like a key level where I want to enter for a buy at. So when price eventually reaches that key level, that is when TradingView will notify me, send me a notification telling me that, hey Brad, you know what, Euro USD is at this key level. Then that is when I can open up my laptop and then analyze the charts and enter the trade from there. As simple as that. I don't stare at the charts all day. Lastly, time. Trading is actually a maybe get rich quick slow scheme. Does that make sense? Right? I came into trading with the mindset that I'm gonna become a funded trader, or I'm gonna become a profitable trader within the first 6 months. And that was the wrong mindset, because I remember I studied trading for 3 months, and then I went on to start my first live account after 3 months, and then I blow my first account, which was $500, and then I blow the second account, $500 gone, and I kept on blowing accounts after accounts because I was skipping the process. I wanted to get rich quick fast, honestly. I was damn sick of being broke, and I wanted to become a millionaire trader and live this dream lifestyle that every trader is living, right? So I skipped the process, I skimmed through all the study materials, quickly went to the live account, started making a shit ton of mistakes, lose a whole lot of money, lose pretty much 80% of my life savings back then, and then I just made mistakes, and I just ended up didn't really becoming profitable until maybe like my 2nd or 3rd year. So guys, understand that trading requires a lot of time and consistency. It's all about consistency. When people see me make over $50,000 in a month, or even 100k in a month, right? They think that I just made this 50k in a month. That is not true. I didn't make that in a month. It's hours, hundreds of hours on the charts, spending years on the charts, and reviewing my trading journal, figuring out what works and what doesn't work. That is what got me to making 50k per month. But it's not overnight. It takes a lot of time. And you guys need to have the patience to really trust the process and trust the fact that you will make it as long as you are disciplined enough to do the hard things, the uncomfortable things that separates the profitable traders from the losers. With discipline come profits. So these are the 5 things. You have to have a set of trading rules, you have to have solid trading discipline, and need to accept risk. And you also need the patience to wait for the perfect trade setup. And lastly, you need to give it some time, guys. It's not gonna make you a millionaire trader next week or maybe even the next year, right? It all depends on what type of trader you are and how good you are. Some people can become profitable traders within the first 1 year, but some people can take maybe 3 years or even 4 years to become profitable traders, and some can take 5 years but never ever see any consistent profits. Like I said, it all depends on you. Depends on whether you are disciplined enough to do the hard things. If you do that, I can guarantee you there's going to be a higher chance of you becoming a profitable trader. 4 months left in 2023. Alright, rather by the time this video get uploaded, it's 3 months left to 2023. Make it worth. Make it count. Now, if you want to learn how to master trading within 6 months, watch this video next. Trust me, this is the best video that you'll watch on trading that's on my YouTube channel. It will teach you everything there's to know on how to master trading and how to make 6 figures from scratch. Watch this right here. And remember, you're just 1 trade away. Mwah! 80% of trading losses can be prevented if you become more aware of your emotions. If you don't separate yourself from your emotions when you trade, your emotions will separate you from your goals. Emotional control separates the unsuccessful traders from the successful traders. Now, emotions are not the problem here. Emotions are not necessarily evil. They are signals to use and learn from. So treat emotions as signals and get curious about what they are trying to tell you. Become a detective and get excited to get up clues and get curious to understand what they mean. A lot of traders still think that you need to control your emotions to be a good trader. That is just not true. What you should do instead is to develop the ability to first recognize your emotions and then understand them. You need to understand your emotions so that you know what you are actually dealing with, and you can actually develop a plan to deal with these emotions when they arise. Emotions are not necessarily negative. In trading, there is no good or bad emotions. There is just emotions. If you use emotions correctly, emotions can actually fuel your performance. Just like how Michael Jordan went on to become the best NBA player, the greatest of all time. Someone talk shit about him. Michael Jordan knew how to read into his anger and channel it into his performance. It's a skill that most of us can learn how to cultivate. So a few years ago, I was having family dinner with my aunt, who is like the most evil woman in the world. And she told me that I can never make it in life. And then she told me that I will never amount to anything, just like my father. I took that personally, and I went out there to become the best version of myself. Whenever I feel like giving up, I think about all those people who doubted me, all those people who didn't believe in me, and I wanted to succeed so bad to prove them all wrong, and eventually I did. So use your anger as fuel and work harder. Work in silence and let your success make the noise. Don't treat them with kindness, torture them with success. Now, back when I was still a broke 17-year-old college student, there was this one time where I managed to grow my small $500 account into $10,000. Instead of withdrawing my profits, I got greedy and I wanted to turn that $10,000 to $50,000. So just to see like how far I can get. So the next day, I knew that non-farm payroll was gonna come out at around 8:30 p.m. Singapore time. So I waited for that and I just told myself that why not just try your luck and trade it for some quick profits. That is called gambling, not trading. At 8:30 p.m. when the non-farm payroll news came out, price started collapsing. So I immediately entered for a sell with a 3 standard lot size. At that point of time, my heart was pumping so fast because I was literally risking my entire account on that one trade. It was all in on nothing. And then price started reversing against me and it went all the way back up by 100 pips. At that point of time, I got margin caught and I blew my account, and my account literally went into like negative. When I saw that, I froze. I didn't know what to do. I was so devastated that I started crying on my bed and I started punching my pillow. I regret taking that trade so much. I wish I could turn back time to stop myself from taking that one trade and just withdraw my profits. Now I'm back to square one. I'm back to $0. The worst part was that I just told my parents that I made a few $1,000s from trading and I can potentially do this full time. Now what should I tell them? I never told them the loss. The next day, I asked my dad for $1,000 so that I can pay my school fees, which was a lie, and I immediately deposited half of that into my small account. So now my small account have another $500 to trade with. I wanted to get back the $10,000 that I lost so bad. So I started revenge trading. I forced trades even though there's no clear confluences, there's no clear opportunities in the market. Bad trades lead to losses, and I ended up blowing that account as well. Now bear in mind that at the point of time, my dad was already 60-year-old and he's still working hard as hell as a real estate agent to put food on the table. So do you know how embarrassing it was when my dad asked me where the money went? So I did this for a few times. I'll deposit money and blow that account until one day I was so sick of losing money. So that one day I decided to get my shit together and started learning how to become a professional trader who does not trade based on his emotions. So that was when I first started learning about trading psychology and the mental game of trading, which is exactly why I'm making this video, to remind my past self, or rather remind you guys that technical analysis is not all there is to trading. You need proper mindset. You need to defeat the mental game of trading, which is the hardest. The biggest mistake that you can make as a trader is to be attached to your trades. You are attached to how you want things to be, rather than acknowledging what they are. If you are attached to your losses and wins, your whole trading journey will be hell. For example, let's say you enter for a buy here and you start seeing the trade go against you and price starts falling heavy. Liquidity. Instead of being flexible and pivoting your position, you continue to sit there pray to God that eventually the market will reverse and go back up so that you ended up getting out with a big loss because you can't take it anymore. In reality, the market was neither good or bad because it's doing exactly what it does, go up or go down, which is why you need to accept these three harsh truth about trading. The market is always right. The market does not care about you. The market is not a human, but an irrational, uncontrollable entity. To trade well, you need peace of mind. To get peace of mind, you must learn detachment. Once again, emotional control is not the solution. Emotional resolution is. Develop the ability to stand aside and observe not just the market action, but also your thinking. Watch the market with a mind of interest and curiosity, not one of judgment and labeling. Give your mind the time and space it needs to open and reflect. So from now on, I want you to monitor your emotions before, during, and after you trade. This will allow you to know yourself better as a trader so you know what to work on. So here's my 3-step system to reach emotional resolution. The first step is to map your pattern. To have a clear understanding of what you will encounter on a daily basis, you should identify an overall macro view of your emotional volatility. You also need to get a clear understanding of what these emotional reactions look like on a micro level so that you can quickly spot them and minimize the damage when you are live trading. Start looking closely at the specific emotions, thoughts, decisions and actions that are automatically triggered when you are trading. They are the data that will help you understand the entire problem. For example, let's say you're scrolling through Twitter today and you start seeing some traders saying that this crypto coin is up 20%. Immediately, you feel a sense of missing out. You don't want to miss out on this once in a lifetime opportunity. In this case, it might look like FOMO on a surface level, on a macro level. But if you dive deep, FOMO can actually mean more than one thing. It can be a sense of greed, because you think that if you miss out on this opportunity, you won't be able to find other good money-making opportunities in the future. That is wrong, because there's always opportunities in the market. If you miss out on this one, the next one comes in the next 5 minutes. In this case, FOMO can also indicate anger. You can get pissed off because you see feeling violates your sense of control. I want you to look at the instances where you experience FOMO and try to write down specifically what's going through your mind and what are you feeling at that moment. When you map your emotional patterns like FOMO, greed, and doubt, you will realize that these patterns happen very frequently and consistently. And if you don't fix them, they will always come back to you and hold you back from trading success. When you are trading on a live account, you are dealing with an emotional higher power that has the ability to shut down your brain. Listen carefully. Your own emotions shut down the part of your brain that control your emotions, which is the tricky part, because it's easy to be rational and logical before you trade because you haven't experienced any emotions yet. But once you are put inside the trench, facing the enemies on the other side, trading your hard-earned money, you start to experience all these emotions and you won't be able to think clearly. To fix this, you need to look at the early warning signs when the emotions are still small. You have to be prepared by understanding your emotional patterns, understanding how to disrupt them and learn how to catch it early. Because if you don't, your emotions will get a hold of you and you will just keep making the same mistakes over and over again. You will just keep losing money and blowing accounts after accounts. There will be absolutely no progress in your trading performance, which means you will never become a profitable trader. I have created the rational framework to help you map out your emotions, and I'm giving it to you for free. Link in the description. Use the rational framework to map your emotional patterns and also to record down your trades. So now I'm going to show you how to use the rational framework. And so if you go to the link in the description to download the rational framework, right, you'll be directed to this website where you have to fill in your email. After you have filled in your email, you submit it. This rational framework template will be sent to your email. So you need to open your email and check
it out. Now, basically, when you come onto this rational framework website, you'll see that the rational framework, emotions are not evil, they're signals to use and learn from. Get curious about what they're trying to tell you. So they're just like a little reminder for you. And then over here, this is the whole purpose of the rational framework. Use the rational framework to map your emotional patterns and record your traits. And basically, whenever you want to map out your emotions, just press this add a framework, and then you can write down maybe the date, like okay, it's 19th June. And then you can see this is all the things that you need to fill in so they can really map out your emotions. I have done like a little example for you which you can see right here. So let's just go through the example real quick. So the first thing you have to fill in is the triggers. What compelled or triggered you to get into the trade? Maybe it could be you saw your confluence, your favorite confluence, morning star formed at this key level, price reverse at this key level. Whatever it is, fill that in. Next, put down the thoughts. What are you thinking about before you enter the trade? This is basically like a thought process, right? Like what is your mind telling you before you enter the trade? Example, missing out on this trade. Next one is like the whole point of this entire framework, emotions, right? How do you feel before and after taking the trade? Do you feel angry or scared or fear of missing out? Whatever emotion that you are feeling, write that down, okay? Write down the emotion that you feel before and also write down the emotion that you feel after taking a trade. Example, maybe you could have been having a bad day, right? Maybe you just broke up with your girlfriend. Bad day, then you could write, oh, I'm sad today. And perhaps that's not the best environment to trade in, but you still decide to go on to trade and they end up with a loss. Oh my god, I see a huge candlestick right now. I have to get in right now. Fear of missing out, put that in. So, or maybe another thing is, I want to get back at the market for causing me to lose a few trades in a row for the past few days. Past few days, I've been going through a losing streak, and now I want to revenge trade so that I can get back the money that I lost. So that can be another example of an emotion. Next, put down your behavior. What do you do with your position? Do you scale in or do you scale out? Whatever that you do with your open position, write it down. Example, I'm hyper-focused on one position, so I did not scale in, even though I saw opportunities to scale in. So that could be a mistake, right? Because in trading, you want to add on to your winner. So if you're winning big and you see opportunities to scale in, to add on, by all means, go ahead and scale in. Next, actions. What are you doing when you are inside the trade? Are you constantly checking your profit and loss? So, example, I'm constantly staring at the charts and looking at my profit and loss. I can't even stand up to go to the toilet, right? This is bad, guys. Please don't ever be just mindlessly looking at the charts. Next, changes to your decision making. Did your initial decision change? Do you move your stop loss and take profit unnecessarily? So example is I'm focused on revenge trading and getting my money back. Next, changes in market perception. Are you viewing the market for what it is, or are you imposing your thoughts onto the market? So maybe you could be thinking the market should go up now. I think that I can predict where the market is going to go. Last but not least, calm down to these trading mistakes and be honest with yourself, right? No one will be looking at this journal, this framework. Just be honest with yourself and jot down any and every single trading mistakes that were committed. Example could be revenge trading, forcing trades when there is no opportunities, getting out of a good trade. So yeah, I've written down my few examples: revenge trading, being too close-minded and imposing my thoughts on the market instead of being flexible and adjusting my position when I saw that this was not a valid reversal. And I also failed to look at the overall big picture because I did not do my top-down analysis. I was stuck in one time frame and I only focused on one time frame. So all of this could be trading mistakes that you can review and learn from so that in the future you do not commit these mistakes, right? So this entire framework will allow you to map out all your emotional patterns and really get a better understanding of your feelings when you are trading. So like I said, before you trade, go onto this page right here, add a new framework, type in the date, whatever you want to type in to like kind of remind yourself that, okay, this is the trade I took. Maybe it could be a gold trade, right? And then hashtag number one gold trade. And then over here, there you can write down, okay, the triggers, the thoughts, the emotions, the behaviors, actions, changes, and trading mistakes, right? So use this framework to your advantage. I really took out my time and spent a few hours creating this entire rational framework so that you guys can really become a better trader and get a better understanding of your emotions. So yeah, just go download it, man.
Use the winning trading journal to record and journal down your trades. And then use the rational framework to monitor your emotions when you are trading. If you can just do this for 21 days straight, it will eventually become a good habit that will help you become a better trader. The second step is to identify the roots of your problem. You can't correct a problem you can't see. So to get to the real reason behind your problems, you need to dig deeper. You need to uncover the hidden flaws, biases, and wrong ideas, including errors in learning that are preventing you from progressing. And you can refer to the first step where you have mapped your pattern. Look at the rational framework to identify the signals that a problem has been triggered. Recognize that a problem has been triggered so you can actually correct it. So if you want to identify the roots of your problem, follow these 4 steps. Describe the problem in detail. Explain why do you have this problem. Explain why the logic in step 2 is flawed. Come up with a correction to that flawed logic. Most traders can get consistent profit on a demo account, but struggle to do so in a live account. On a demo account, they feel calm and relaxed and can execute the trades with precision. On a live account, they feel uncertain, hesitant, and they start overthinking. This didn't exist when they trade on a demo account because the results don't actually matter. Losing and winning on a demo account doesn't really have an impact on your life at all, so emotions are rarely involved. The basketball player who can shoot all the free throws in practice but end up missing the free throws in NBA. The new actor who is able to speak clearly during rehearsals but starts stuttering and can't deliver on stage. The music artist who can sing beautifully in the studio but forgets her lyrics on stage. Just like the basketball player, the actor, and the music artist. If you believe that demo and a live account is the same, there's a fundamental flaw in your concept. The flaw here is not that you will feel some emotions on a live account. The flaw here is expecting your body to trade live without emotions, which is simply impossible. Most traders believe that there's a quick fix to correcting their emotional problems with greed, fear, anger, confidence, and discipline. Just like how you can't become a profitable trader overnight, you need to go through a learning process to eliminate a mental problem. Think for a moment about the quality of the trades that you've taken over the last 6 to 12 months. There are times where your decisions are spot on and you win every single trade. There are times where every trade you take leads to a loss. Aiming for perfection in trading is like aiming at a moving target because there are so many variables that can impact your trading performance, like whether or not you had enough sleep, you ate right, exercise, or you felt physically healthy and emotionally stable before you trade. Now, add these variables on top of how complex and unpredictable the market is. Now, the key here is to focus on reducing your variations in your trading performance. Treat yourself as an athlete. Do you want to become the LeBron James or Tiger Woods in trading? That means you have to make sacrifices. That means everything in your life have to revolve around trading. That means you need to have enough sleep, eat a healthy diet, and exercise so that you can optimize your body and your mind so you can perform your best when you trade. The third step is to correct your problem. Instead of focusing on growing your account, focus on correcting your current greatest weaknesses consistently. If you want to improve as a trader so you can make more money from trading, you must commit to eliminating these weaknesses or problems. These weaknesses have the power to hold you back, and if you don't work on them consistently, you will never become profitable at trading. This is part of your growth on the journey to become a profitable trader. So you must do this. This step is where you attack the problem by doing the correction. Here's where you learn how to stop your reactions in real time and minimize your mistakes. Firstly, you need to understand that when your emotions are high, logic is low. Correcting your reaction is a combination of having the correct logic and ensuring the logic is so clearly defined in your mind that it's strong enough to stop its patterns in its tracks. So after you have identified the pattern, you want to disrupt its momentum, because if you don't, the trade is going to become a loss and you will get the same results as you always do. So as soon as you recognize that your pattern has been triggered, take a deep breath or stand up and go take a walk or even talk to your friends. Next, you want to inject logic to drown out your emotions. You can do this by talking to yourself and coming up with logical sentences about the emotions. Here's a few examples. If you are lacking confidence, tell yourself, I spent thousands of hours on this plan. Am I really gonna let this one trade change it? If you are scared to fail, tell yourself, sometimes the risk from staying on the sidelines is the greater risk. If you are losing focus, tell yourself trading is a business, so I have to run it like a serious business that demands my best. When the session is over, I can focus on other things. Not now. I know this sounds stupid as hell, but trust me, this will work. The whole concept here is to increase your logic when your emotions are high, so that your logic can overpower your emotions and you can actually think clearly with your head. Create specific and achievable weekly goals with daily benchmarks to measure progress. This will allow you to focus on sucking less rather than making money. Focus on the process and execution instead of the P&L. In this way, you will be able to tolerate the ups and downs of trading much better and also enjoy trading more because you are focusing on what you can control. So now rinse and repeat this whole system. What's the result of this three-part system? The result is when you trade, you will realize that you are more calm and you have a peace of mind. You are not trying to control your emotions or letting your emotions control you. Instead, you are aware of your emotions and you have came to a resolution with it. Imagine not having fear, greed, doubt, or confidence or discipline problems at all. That alone is worth the hard work to get there. And if you use this three-step system, you will get there. Throughout your entire life, you have been conditioned that mistakes and losses are bad. When you go to school, you get looked down upon because you have shit grades. When you go to work, your boss scolds you for making careless mistakes. So naturally, we feel that mistakes are bad, losses are bad. But what if I tell you that losses are not bad? Pretend you are a gambler for a minute. Let's say you are playing a roulette right now. If it lands on red 6 times in a row, will you expect the next one to be black? Or let's say you are rolling a dice. If you roll a dice and it doesn't generate a winning number, will you be angry? Now this is what we call the gambler's fallacy or the Monte Carlo fallacy. This fallacy occurs when you believe that a certain random event is more likely or less likely to happen based on the outcome of the previous event or a series of events. In trading, anything can happen at any point of time. You must accept the fact that the market can do anything, anytime. Trading is not about predicting the future because that cannot be done. Once you can accept this fact, it is much easier to take losses without taking a hit to your self-esteem, which means you won't feel like a shitty trader when you enter a losing streak. Because for each trade that you take, you expect a random outcome. You know that a single trade is unique and has no memory. No matter how confident you are, the chances of you winning that trade is still 50%. Expect there to be losses 50% of the time. Embrace the fact that losses and wins are inevitable to any trading strategy. If you can't learn to accept small losses, sooner or later you will take big losses. What separates successful traders from unsuccessful traders is the ability to accept trading unpredictability in the short term, but equally have faith in the law of large numbers in the long term. When you truly accept the fact that trading is simply a probability game, concepts like win or lose, right or wrong will no longer matter. Now, how do you achieve peak performance when you are trading? Just like an athlete, it takes thousands of hours of practice and training to become the best trader possible. We have to develop the skill to make good risk and reward decisions. And to do that, I have 3 steps for you. Plan the trade, trade the plan, review and adjust the plan. Plan the trade. If you fail to plan, you plan to fail, which is why you must have a solid trading plan so that you can be consistent in your decision making. So you know what are the trades that you should take and what are the trades that you should avoid. A trading plan should explain where to enter and exit the trade, how to manage the trade once you are inside one, and what is your correct position size that you should be using. A trading plan must be structured to minimize losses when you are wrong and maximize profits when you are correct about a trade. A trading plan will help to redirect your decision-making process from your emotions and prevent you from making mistakes based on your emotions. Trade the plan is about taking the trading plan that you have created and following it religiously. Your plan is useless unless you execute it. Fear comes from uncertainty, fear of losing, fear of failure, fear of making mistakes. If you have a trading plan that is proven to work, it will remove some of that uncertainty. Do the right thing at the right time. This means following your trading plan, executing trades based on your trading plan, knowing when to get in and get out, and how you're going to manage risk and losses. Review and adjust the plan. Professional athletes are always reviewing their past performance and thinking about ways they can do better next time. We are the same. We need to review our trades and look for the small improvement that we can make so that we can potentially become better and actually test out this improvement. 90% of your losses occur because you do not follow your trading plan. You keep moving your stop loss because you are afraid to be wrong, so you'd rather be right than to make money. You over leverage and use a lot size way too big for your account because you are greedy. A lot of these trading psychology issues can really be fixed if you just follow your trading plan. And we only realize this after the trading day has ended, after we have already committed the mistakes that lead to the losses. If you are doing the right thing all the time, taking the trades that are aligned with your trading plan, then you have nothing to worry about. If you focus on trading your system with unwavering discipline and focus, the profits will eventually come. Focus on your process and not short-term results. One trade can have a random outcome, but 100 trades can be used as a filter to profit from your edge. If trading is a video game, I have literally gave you the cheat codes to win. And if you want to participate in the giveaway of 200k funded accounts, you need to watch all 4 videos of Roadmap to Mastery series from the start till the end, and also follow me on all my social media accounts. Link in the description. And also go on to my Instagram at The Trading Geek and tag 3 friends on the most recent post. I will randomly pick 2 lucky winners to win these 100k funded accounts, and I will announce the results soon on my Instagram at Guangyi or at The Trading Geek. Right, so make sure you follow me on there. This is the final episode of Roadmap to Mastery series, and I hope that you have learned and enjoyed every single episode. Now, watching once is not enough to fully grasp and understand the concepts being shared in these videos. You have been conditioned to be a losing trader for so long, and to rewire your brain and reprogram your subconscious mind for success, you need to go and rewatch the 4 episodes from Roadmap to Mastery series again, and this time take action. I hope that you'll rewatch this series again and again and utilize it as a tool to trigger yourself to find the answers that are already lying inside you. You don't have to believe and use everything within this series. Grab a hold of the things that you think are useful and put them into action immediately. You won't have to implement all of the strategies or use all of the tools in the series to make some major changes. All 4 videos have life-changing potential individually. However, if you use all these 4 videos, you will be able to create, live and enjoy the life you have always been dreaming of. How are you going to live the next 5 years of your life? Because 5 years from now, your question is, where would you have arrived and who would you have become? Now is the perfect time to design the next 5 years of your life. Stop waiting. Check out all the resources that I have linked in the description that will help you become a profitable trader. And as always, remember, you're just one trade away. Mwah. Now we have entered a new era where making money is as simple as clicking a few buttons. Wouldn't it be nice if you can live life at your own terms, do what you want, travel to wherever you want, and just buy whatever you want? Those are the same questions that I used to ask myself as well. Now there are 20-year-olds out there just like me who are taking advantage of this digital economy to get paid as much as doctors every single month without having any prior work experience. So today I'm going to show you everything you need to know to go from 0 to making 6 figures from trading. And the best part is you don't need a large sum of capital or spend hours upon hours on the charts. I started trading with less than $100 in my bank account, so anyone can start. Literally anyone. Whether you are in that, being a trader means you have to look at charts the whole day. Nowadays, I only spend about 30 minutes or less on the charts every single day, and I trade for about a total of 4 hours a week. This is exactly why I have so much freedom with my life. Now, the first thing I want to mention is that if you have failed at trading in the past, it is not your fault. There's a lot of information out there and it can be quite confusing. Majority of the trading advice doesn't even make you money, and this information overload is preventing you from success. If you have been concerned in the past that you just can't succeed with trading, I want to reassure you and put those fears to rest. You can do this. You just need the right person to teach you. Now, the big banks want you to think that you need a lot of money or some fancy college degree to become successful at trading. I'm here to tell you that they are wrong. They have their own reasons for wanting you to think that, but it's not true. If you ever thought that the government and the banks actually want you to fail, you are probably right, because they don't benefit from you succeeding. They want to keep you poor, they want to keep you in debt and in need, so you can always depend on them. The difference with me is that I actually care about your success and truly want to see you living your dream life. So that's what I'm here for. I know you want to live your dream life and provide for your family, and I want to show you how to make that happen during this entire lesson. My goal for this presentation is to help two types of people. For those who are beginners, you will get to learn everything you need to know to start trading. And for my more experienced traders who have been in the market for a while now, you will learn how to make more money from trading and how to stop losing and become profitable faster. For everything that I'm about to show you today, I want you to know that I'm speaking from experience. My name is Brett Goh, or you might know me as the Trading Geek, and I've been trading since 2020, and I've made over 6 figures from trading myself, and I've literally shown my live withdrawal on YouTube multiple times. I have a YouTube channel with over 400,000 subscribers and over 100 videos on trading. And I've also coached multiple students, some of which have went on to become profitable traders themselves who are making thousands of dollars every month consistently. So let's just say I know my shit. Now this is one of my students who have graduated from my mentorship program. Her name is Ease, and she's a fitness influencer on Instagram. And she messaged me recently telling me that she has made over £6,000 in just a span of 1 week from trading, which is absolutely insane. So if you watch till the end of this class, I will show you how to get the exact trading system that she is using to make this much profits. Now, I know there are distractions all around you, but this strategy that I'm about to show you is potentially going to change your life. And I don't want you to miss a single crucial step, so please make a commitment to stay focused. Can you do that for yourself? Close your Instagram or TikTok, stop reading the comments on this video. Give me your complete attention, and you might even want to grab a pen and paper to take down some notes. So for the next 40 minutes or so, this is exactly what you will learn. Secret number 1, the most profitable high income skill in this era. Why do I choose Forex trading over any other online money making methods? Secret number 2, reframe your mind for trading success. You need to delete all the useless knowledge that you have learned so far and start learning valuable trading wisdom that will actually help you out on your trading journey. Secret number 3, how to master trading in the next 90 days. You can get started with literally less than $100 and little to no risk. And last but not least, I'm going to share with you my number 1 trading hack, and you can literally get to copy the exact system that I use to extract profits from the market. So what's the most profitable high income skill in this era? By now, you should know that it is trading. Now, that's me in Thailand, living the digital nomad lifestyle, a lifestyle that many traders can only dream of. There I was, sitting on the beach with a beautiful sunset in the background, and at that moment, I remember I thought to myself, damn, I'm so grateful for this life. This is why I've been working so hard for. Now, I don't want you to just dream of this lifestyle. I want you to actually experience it yourself. So why become a day trader? Because you get access to freedom, time freedom. Day trading is flexible, which means you can trade for a few hours and then do whatever you want for the rest of your day, be it spend time with family or work out. Location freedom. Day trading can be done in anywhere in the world, which means you can be sitting on a beach in Bali and then traveling around Europe the next month and even visit the mesmerizing Lake Como in Italy. Financial freedom. When you are working a regular job like a clerk or an office job, you are given a fixed monthly salary. In day trading, there is no cap to the amount of money you can potentially make. In trading, you don't get paid by the amounts of hours you work. You get paid for your decisions. However, there's one condition. Like I said in the first video of this series, 90% of traders fail. These are the things that only the top 10% of traders get to enjoy. Now, the next question you might have is, what should you trade? Forex, stocks, options, or crypto? Now, I have tried trading all of them and I found Forex trading to be the most profitable. So why did I choose Forex trading? When you are trading stocks or options, the market is only open for 8 hours on weekdays. On the other hand, the Forex market is open 24 hours from Monday to Friday. This means that you can trade at any time you want. It doesn't matter what time is your full-time job. You will always have the time to trade. If you are working a 9 to 5, you can trade from 6 p.m. to 10 p.m. If you are still studying in school, you can trade during the times where you are more free, like during your holidays. Forex move based on economic and business fundamentals, such as inflation, interest rates, production, etc. These things don't change so quickly, so the value of the assets doesn't change that quickly either. On the other hand, cryptocurrencies have no such fundamentals. The only thing moving them is investor sentiment, like greed and fear. And that's a bad thing because sentiment can change in a flash. 1 minute, Bitcoin could be going to the moon, and the next minute, it could be going to shit. Now, these are the main reasons why I choose to trade Forex. The Forex market is the most liquid market in the world. This means that there is always a large number of buyers and sellers looking to make a trade. The high liquidity in Forex means that transactions can be completed quickly and easily. So the transaction costs are often very low. So you don't need to pay like a crazy amount of commission fees to the brokers. And like I mentioned just now, the Forex market is a 24-hour market, which means you can trade at any time you want. You can easily start Forex trading with a small capital because there is leverage in Forex trading. Leverage allows you to make more money from trading with a limited amount of capital. A lot of people have misconceptions when it comes to trading. These misconceptions are actually limiting beliefs that are holding you back from trading success, holding you back from living a dream life. Trading is risky. When I first started investing in stocks, I was only 17 years old. That was the age where I bought my first stock, and I still remember it was Apple stock. And it was at $80. I still remember how happy I was, and I thought to myself that, oh, I'm gonna get rich and become a millionaire before 30. I wasn't even old enough to open a brokerage account. And coming from a traditional Asian family, my parents told me that it was extremely risky and I shouldn't play with stocks. But back then, I was reading a lot of finance and self-improvement books, and I came across this beautiful quote: risk comes from not knowing what you are doing. So the more you know about that particular subject, the less risky it will be. So I went ahead and studied everything I needed to know about investing, about trading, how to analyze the charts, how to react to the economic news. I read books and watched YouTube videos. And then once I done my research, I started investing more money into growth and innovation stocks like Tesla and Square. So in my first year in the stock market, I actually managed to outperform the market with my portfolio, surprisingly. As you can see right here, my portfolio returns was about 52.4%, while the index was only 48.2%. Yeah, this might be just pure luck, alright? So if you don't take risks, you will always work for someone who does. Just think about it for a minute. If no one took any risk and everyone played it safe by working a 9 to 5 job, there will be no great companies like Facebook or Google. These companies are created because the founders went ahead and took risks, and in return, they got their reward. No risk, no reward. It's as simple as that. When it comes to trading, there will always be a type of risk called market risk. At any point of time, anything can happen in the world. It could be World War III or another pandemic. All of these things are unpredictable and they affect the market. So yes, 100% there will always be risks. But you can reduce risk by learning everything there is to know on trading. Develop an edge that gives you a higher probability of winning. Oh, I have a full-time job. I'm working a 9 to 5. I'm still studying in school. Where got time to trade? What if I tell you that all you need is 30 minutes per day to generate consistent profits from the market? People think that to succeed in trading, you need to stare at the charts all day. And that's just not true. go ahead and start depositing a few $100 and try to flip it to $10,000 if you are a beginner. You will 100% blow your account and lose all the money that you deposited. I'm able to do it because I not only got the right strategy, but also the experience and the knowledge in the market. Now, if you want to know the exact strategy on how I did it, watch till the end. Now, when it comes to trading, you need money to make money. If you have more money in your trading account, then you can risk more money, and in return, you will get much more profits. So, if you don't want to lose like too much of your hard-earned money, you can consider getting funded accounts. A funded trading account with a prop firm is basically an agreement where the prop trading firm will offer you capital to trade with, and in return, you will have to give them a portion of your total profits. But in order to get funded, you have to go through like a two-step process to actually like prove your trading skills, prove that you are competent enough to pass the challenge, and it is not easy at all. Which is why I'm going to share with you a 4-step framework that will help you master trading and potentially get funded soon. And at the end of this roadmap to mastery series, like I said, I will give away $200,000 funded accounts to 2 lucky winners, and I will announce this soon. So if you want to participate in this giveaway, make sure you follow me on all my social medias to stay updated on this. Link in the description. Now here's another of my student called Bushan, who managed to grow his trading account by 10 times after my coaching. He managed to grow a small account of $100 to $1,000. Once again, he has proved to us that you don't need a large sum of money to start trading. And if you want to learn how he did it, keep watching. Oh, trading is risky. I don't have the time to trade. You need a large sum of money to trade. All these are excuses. Excuses that are preventing you from living your dream life. I know exactly how you feel because I was in your exact position a few years ago. I was scared to start trading as well. I thought to myself, oh, what if I ended up losing all my life savings? When you make excuses just like this, you prevent yourself from living your full potential. Whatever your excuse is, just understand that you will never get to where you truly want to be if you continue making excuses. It's up to you whether you let these excuses take over you or not. The question is, what will you do? Next, I'm going to show you the exact steps you can start taking to master trading in the next 90 days. How to trade for a living so that you can eventually quit your full-time job. These are the 3 pillars of trading that you must master if you want to become a successful and profitable trader. I call it the 3 M's: method, money management, and mindset. Now let's go through each one of them. Method is how you trade the market. There are 2 methods where you can use to determine whether you should buy or sell. Technical analysis. This is basically analyzing the charts to determine whether you should buy or sell using tools like trading indicators, trend lines, support and resistance levels, and candlestick patterns. Fundamental analysis is basically the study of economic news and announcements that will affect the economy. The state of the country's economy will determine the strength of the country's currency. So, if the economy is good, the currency value is going to go up. If the economy is bad, currency value is going to go down. Money management is basically how you manage your risk and reward. You must understand that as traders, our goal is to take the trades which will give us the lowest risk and the highest reward. So, you need to figure out how much money are you risking per trade. What is your risk to reward ratio? What's the maximum drawdown you can accept in your trading account? Money management will allow you to minimize your losses and maximize your profits so you can be profitable in the long run. The final M is mindset. When you are trading with your hard-earned money, you're going to experience a lot of emotions like fear, greed, FOMO, doubts, and all these emotions will cause you to make bad trading decisions. Play stupid games, win stupid prizes. This means that if you trade based on your emotions, you will lose money. Just like I mentioned earlier on, in trading, you don't get paid by your time. You get paid by your decisions. So you need to control your emotions so you can make the correct, the rational decisions that will allow you to make profitable trades. Now, everything begins or ends with your trading mindset. If you are not in a proper trading mindset, you won't be able to make money on a consistent basis. Remember, at the end of the day, you cannot control the market. You can't control how much money you will make today or next week. But there is one thing that you can control, and that is yourself. You can control how you react to what the market is actually showing you. you can control whether you follow your trading plan or not. Now, all 3 M's are equally important, and these 3 pillars will become the backbone of your trading plan. This is like a chair with 3 legs. If you remove one of them, you will fall and hurt yourself, or in this case, your trading account. This means that you need to master all 3 pillars if you want to become a successful trader. A diet won't help you unless you stick to it. You won't be profitable in trading unless you follow your money management rules and you actually stick to your winning trading strategy. Money management can't help you unless you have a winning trading strategy that is backed up by a proven, profitable track record. And there's no trading strategy that can make up for poor money management. You can have the best trading strategy in the world that works 90% of the time, but still lose money because you don't practice proper money management. Example, when you win, you make $50, but when you lose $1,000. Even with a 90% win rate, meaning you win 9 out of 10 trades, one loss can still wipe out all the profits that you made from those 9 winning trades. Now, I'm going to teach you the 4-step framework you can use to master trading. And you can see, it clearly worked for another one of my students called Marcel. He used this exact framework, and in return, the market rewarded him for his discipline. Now, these are the 4 steps that you need to take to master trading. As you can see, it's a loop, it's a cycle. First, you start learning everything you need to know about trading. Then, practice and apply whatever you have learned. After you have practiced enough, and you have become confident and proficient at your trading abilities, this is when you start depositing real money into your trading account and start trading live account. As you trade, you will need to journal and record down your trades so that you can actually learn from your mistakes, learn from your losses, and become a better trader. And the whole process repeats itself. Trading is a never-ending journey. You should always be learning and improving. Trading is like riding a bike. Once you mastered it, no one else can take it from you. Now let's go through step by step. There are 4 ways that you can learn trading. Number 1, watch free YouTube videos and webinars to learn trading strategies and techniques. Number 2, read books about forex trading to gain a better understanding of the market. Number 3, get a mentor to shorten your learning curve. Number 4, invest in a high quality trading course that actually teaches you everything about trading. Now, the key to trading success is to follow someone who is already successful at trading. There is no need to reinvent the wheel and come up with your own trading system. If it has worked for someone else in the past, it's most likely going to work for you too. So ideally, you want to learn from someone who knows what he's doing and is already good at trading. Now, there are a lot of free information out there on YouTube and the internet to learn from. And it can be quite overwhelming because there are thousands of trading strategies out there and you do not know which one to pick. And everything is just so messy and all over the place and you don't know where to start. Which is why I would recommend you to start binge watching my free trading courses playlist on YouTube to learn everything you need to know about price action trading. You'll be able to learn how to use tools like support and resistance levels, supply and demand zones, candlesticks, volume and Fibonacci to determine whether you should buy or sell and where to exit the trade. You are the average of the 5 people you spend the most time with. The people you spend the most time with shape who you are. They determine what conversations dominate your attention. They affect what attitudes and behaviors you are regularly exposed to. Eventually, you will start to think like them and behave like them. That's why I would recommend you to join an online trading community to learn from other traders and share ideas with each others. I have a Discord server named The Trading Tribe where you can join over 40,000 members and talk to other like-minded traders who want to learn just like you. Every tribe member has either achieved or is working towards the ultimate goal of becoming a successful trader, just like you. So like I said, there are a shit ton of nice people in my Discord server that will be more than happy to help you out on your trading journey. You can post your chart setups, ask questions, and even see other people's ideas and strategies and see what works for them. So if you want to become part of my tribe, click the link in the description and join for free. Remember, trading can get lonely. If you want to go fast, go alone. If you want to go far, go together. Surround yourself with successful traders and you too will become successful. If you want to learn exactly how I trade and copy my highly profitable trading system, watch till the end of this class. Valor managed to use my trading system and got funded by FTMO. He then used that funded account and made over 18.5k in total profits. And like I said, watch to the end and I'll show you how you can copy my exact system so you can make profits just like this. Now, after you have learned everything about trading, it is finally time for you to apply whatever you have learned and start practicing so you can actually become good at trading. So this is where you can use forex trading tools like TradingView to practice trading and test out all your trading strategies. And also make sure you open a demo account on MetaTrader 4 and start trading with virtual money to practice without risking real money. And this is what we call front testing. Or you can also use backtesting software like Forex Tester 5 or Bar Replay 2 on TradingView to practice with historical market data. This is what we call backtesting. If you want to win, learn to lose. This stage is where you are allowed to fail. Fail so you can learn. Experiment with different trading strategies and then narrow down to one that works best for you. Find out whether you are a scalper, a day trader, or a swing trader. When I first started out, I was just like you. I hated my job and I wanted to quit so damn badly. Back then, I was working as a busboy, so I had to serve the customers with alcohol and food. And I would always be working until like 2 a.m. and then I would have to go home smelling like alcohol and freaking junk food. I was constantly looked down by customers and I would always get scolded by the full-timers there, the supervisors. And I just hated how broke I was and I wanted to quit ASAP. Like I fucking hated my job. And that is why I only spent about 1 month trading on the demo account and that was it. Then next week, I proceeded to opening a live account and I deposited $500 in that account. And within just a few days, I blew that $500 account. And at about time, $500 means a lot to me. So if I had to start over, I would spend much more time on trading a demo account. So take your time on trading demo. After you have a consistently profitable track record on demo account, you are ready to start trading live. Remember, you should only start trading a live account when you have found a successful strategy and you have done through lots of backtesting and you have learned how to control your emotions and practice proper risk management. A lot of new traders jump straight to trading a live account and end up losing a shit ton of money that they shouldn't have. Do not rush the process. Once you are ready, set up a trading account with a reputable broker and start trading live. I recommend you to start with a small amount of capital and gradually increase it as you gain much more experience. Now, when you are trading, you will experience lots of emotions like I mentioned earlier on. And all of these emotions will cause you to make bad decisions and you will lose money if you let these emotions control you. So how you can prevent this is actually by creating a trading plan. A trading plan is a set of guidelines that define your trading. You need to include these 7 things inside your trading plan. Number 1, what is your time frame? What markets are you trading? How much are you risking on each trade? What are the conditions of your trading setups? How will you enter your trade? Will it be a limit, stop, or market order? And where is your stop loss? And where is your profit target? Now, I used to search for the perfect trading strategy that works all the time. So after I lose a trade, I will go on to find the next trading strategy. And this mistake has cost me a lot of money because I didn't know what worked. My trading was quite inconsistent. I'll win some money and then lose some money. That was my weakness, hopping from one strategy to the next. In reality, there is no such thing as a perfect trading strategy that works all the time. But how did I realize my mistake? Because I recorded my trades in my trading journal and I realized that my trading setups are always different. 1 minute I'll be trading breakouts and another minute I'll be trading pullbacks. And that's the problem. I couldn't pinpoint what worked and what didn't because my strategies were always changing. This is why having a trading journal is so important. It allows you to learn from your mistake and that itself will prevent you from losing money. So record down your trades. Keep a trading journal to track your progress and learn from your mistakes. And you can download the Winning Trading Journal to help you with this. Link in the description. Keep track of all your trades and analyze your performance. Continuously learn and adapt your trading strategies if needed. Keep a trading diary where you can record down your thoughts and feelings before, during and after each trade, as well as any lessons that you have learned. Now you can even keep a visual record of your trades using screenshots of your charts and trade history. What I even like to do is to like literally screen record my entire trading setup and talk through like my entire thought process and what went wrong and what went right, so that I can like keep it somewhere so that I can learn in the future. Now the question is, how do you get profits just like this, like all these people who I showed you throughout this entire video? The first option is to take all this information I have given you today and figure it all out by yourself. This was the path I took 3 years ago. I went through lots of trials and tribulations, lost over $10,000, blew multiple accounts because I thought that I could do everything by myself. If you choose this option, understand that you'll waste valuable months or even years trying to figure out everything on your own. You will lose more money trading and pay more market tuition. You will also miss out on all the extra money you could have made if you're starting out on the right way from the get-go. And there's also going to be a higher chance of quitting if you get stuck. Which is why I created the Trading Blueprint, which is a program where I take you by your hand and teach you exactly every single thing I know about trading, so you can go from zero to making over $100,000 from trading in record time. Which brings me to the second option, which is join the program with the best success stories in the industry. Every single success story you've seen during this entire video has gone through my programs and achieved the profits using the price action trading strategies I have taught them. Inside the Trading Blueprint, we take complete beginners with no prior knowledge or experience on trading and help you master trading from scratch, create a high win rate trading strategy that generates consistent profits, and also teach you my entire trading strategy from the start till the end. So if you just got a few minutes, let's look at what's inside the Trading Blueprint. First of all, understand that the Trading Blueprint is not just a course. It is the best learning experience that is focused on getting you results, helping you become profitable as fast as possible. The Trading Blueprint course has a lot of training videos that are laid out in a very organized step-by-step process to teach you everything you need to know, no matter what experience level you are, in order to get you to a point of trading success. This program is split into 9 phases. These 9 phases will help you go from a complete beginner to an advanced trader. Phase 1 is the beginner's guide. Right, so this is where you start your trading journey by first learning the basics of the forex trading. Right, things like how you make money in forex, what is forex trading, basically an introduction to forex trading. Next, you got phase 2, which is more on technical analysis. Here's where you learn how to analyze the charts using price action tools like candlestick patterns, Fibonacci, key levels, trend lines, and all these technical tools. Next, we move on to phase 3, where I literally show you how I personally trade. It's like an in-depth, a few part, 60 minutes explanation of everything about my highly profitable trading strategy from top to bottom. Like literally, I will show you everything. I'm literally opening my hands up to you. And then phase 4, these are the things to know. You can learn some of my best secrets and hacks I use to increase my trading performance. And phase 5, scalping and swing trading. Here's where I show you my best scalping and swing trading strategies, which are back-tested and proven to work. So it doesn't matter if you are an intraday trader, swing trader, or a scalper. You will all benefit from this course. Also, phase 6, fundamental analysis. Here's where you learn how to trade the news, how to take advantage of all these economic news and announcements so that you can make the correct trading decisions. Phase 7, risk management. This is where you learn to minimize losses and maximize profits using risk management techniques that is only used by professional traders. Phase 8, advanced secrets. Here's where you learn how to trade like the top 1%. And this is for like the advanced traders who want to take their trading to the next level. Here you learn like the secrets used by legit the top 1% of traders that I've never ever really reviewed on my YouTube channel or anywhere else. And lastly, phase 9, we got trading psychology. This is where you develop the proper mindset of a profitable trader so you can conquer emotions like fear, greed, doubt, and FOMO, right? And if you can really master this section, right, 100%, you're gonna have a higher chance of becoming profitable. Now, I believe that the Trading Blueprint is hands down the best trading course right now in this industry. But don't just take my words for it. Here are some feedback from the students who have bought the trading course themselves. You can pause this video and read them yourself. Here's more feedback once again. But my favorite one is this. Isaac is a 15-year-old teenager from New Zealand and he has chosen to invest in himself at such a young age. At that age, I was busy playing video games until 2 AM. And he mentioned in this feedback that no one explains Forex as well as I do. And that is the best part about my teaching. I explain everything, every complicated trading concept in a way where even a 5-year-old can understand. And that alone is why you should learn from me. And after taking the course, Isaac managed to apply whatever he has learned from the course and go on to win 6 out of 8 trades that he took. Our program is focused on helping our students become profitable fast. So we had to go the extra mile. We even included trading tools to guide you and help you become a better trader so you can make more profits from trading. Like I mentioned earlier, the key to becoming successful at trading is to follow traders who are already successful. This means that you need to follow how they think and their day-to-day habits. The habits they do every single day to ensure consistent profits from the market. So I invented the Profits Matrix. The Profits Matrix is a habit tracker that will help you do just that. Follow all the professional traders' habits so you can achieve all your trading goals and reach your fullest potential as a trader. Emotions are why 90% of traders lose. That's why you have to learn to identify these emotions so you can prevent them from taking control over you and your trading account. You can use the rational framework to map your emotional patterns and record down your trades. This will help you gain like a better understanding of your emotions and yourself, and this alone will just translate to more profits. And also the Victorious Trading Plan, which is basically like a custom winning trading plan template that is designed for you so you can craft out your own version and rely on it before every trading day. Now that's not the end. As the time passes, I will still be releasing more trading tools to help you guys out. Like I said, my main purpose with the trading blueprint is to transform you from complete beginner to highly profitable traders. So yes, if you get the trading blueprint, you will also get useful trading tools. Since the dawn of time, humans have always hunted in tribes. We are more powerful when we work as a team, which is why I created the Profits Mastermind. The Profits Mastermind is an ultra exclusive private community built for traders to reach their fullest potential. Inside the Profits Mastermind, you will be able to do the following things: meet and network with other traders, find accountability partners, get your questions answered, complete trading challenges, discuss trade setups and strategies, and also celebrate your wins with each other. Just look at how supportive this community is. Everyone is kind, friendly, and just helping each other to become profitable traders. So yes, you will get access to the Profits Mastermind community as well. So like I mentioned, you will also get access to my best trading strategies on scalping, swing trading, and intraday trading. These are the trading strategies that has made me over 6 figures and also made my students consistent profits. And also, like I said, how I personally trade, right? I'm literally going to tell you guys everything, holding nothing back, showing you guys everything on how I personally trade so you can replicate the process and you can replicate the profits as well. And also advanced trading secrets, right? Something that I have never ever really shared in public before. The trading secrets that literally the top 1% use. Now, the total value of this course is over $10,000, which is why we wanted to charge at least $1,999 at first. But we thought that that price would be too expensive and out of reach for most people. So I'm not going to charge you that. In fact, the actual price is not even half of it. We decided to make it accessible for those people who are just starting out on their trading journey because they are the ones who need it the most, which is why I'm only charging you $497. So let me repeat what you'll get again. Lifetime access to the trading blueprint course, useful trading tools to help you become a successful trader, access to Profits Mastermind community, and ultra exclusive private community built by traders for traders. My best trading strategies, how I personally trade, and advanced trading secrets. All of this for only $497. Now, I would suggest that if you want to get lifetime access at this price, get it today, get it right now. Because in less than 48 hours from the time this video is released, the price will be increased to $697. Price will increase, and in the future, this price may even become a yearly subscription where people has to pay like this amount every single year just to continue being in the program. So at this point, you have two choices. Choice 1, do nothing. If you do nothing with the information you have learned over the last hour or so, what will you get? Absolutely nothing. Or you can choose to take a leap of faith. Be the action taker and invest in yourself so you can live your dream life in the near future. If you want to get the trading blueprint course, click the first link in the description. You are either good at making money or making excuses, but you can't do both. I've given you the opportunity and now it's time for you to decide whether you want to be a bystander or someone who actually takes actions so they can change their life. Whatever your choice is, know that I will always be rooting for you, and hopefully I will see you inside the trading blueprint course. And as always, remember, you're just one trade away. Mwah. I'm finally revealing to you the trading strategy that has made me over 6 figures throughout my entire trading career. And it's the same trading strategy that I used to make over $20,000 in 1 week. I'm gonna tell you everything from the start to the end, so make sure you watch every single minute of this video and get ready to take down some notes. Now, first of all, you must understand that I'm a mix between an intraday trader and a swing trader. I'm no longer a scalper because I'm past that stage, right? I realize that scalping takes away a lot of your freedom because you spend a lot of time looking at the charts. And that's literally the opposite of what I want. The whole point of trading is so that I can get freedom, and scalping does not allow me to do that because I have to stare at the charts all the goddamn time. So right now, I like to enjoy my life a little bit more and just chill out. So yeah, the time frames that I'll be using is weekly, daily, 4 hour, 1 hour, and the 15-minute time frame. Because like I said, I'm a mix between intraday and a swing trader, which means that sometimes I will hold a trade from a few days to even up to a few weeks, right? Depending on where's my take profit level. Now, the first thing you want to do is to identify the trend and market structure. That should be like the first and foremost, the most important step. So what I want to do is to go to my weekly time frame, look at where the overall trend is, so that I can kind of come up with like a bias on whether I should enter for a buy or whether I should enter for a sell. Because you must remember, the trend is your friend. The last thing you want to do is to trade against the trend. You should always be trying to trade with the trend, right? So firstly, we can see that right now AUD/USD is in a downtrend. How do we know that? We know that price is, first things first, going down. First very obvious factor. Next thing is creating lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. So obviously, that tells us that price is in a downtrend. So perhaps we could be looking to enter for a sell. But if you go on to the daily time frame, you could start to see that, oh shit, maybe price is reversing, right? Maybe this is a reversal. Maybe price is reversing from a downtrend to becoming an uptrend. And how do we know that price is going to reverse to become an uptrend? We look at the second thing, which is the market structure. So you guys know, in a downtrend, price should be creating a lower highs, lower lows, lower highs, and lower lows. But in an uptrend, price will be creating your higher highs and higher lows. So if you look at what price has been doing recently, you can see that price has been creating higher highs, higher lows, higher highs, and higher lows. And in this case, if you look closely, even more closely, you can see there's actually a break of structure. So previously, price has been creating a lower highs, lower lows, lower high, lower low, lower highs, right? So this is the last lower high being created. Okay, this is the last lower high being created. And right now, we could see price literally like burst above the last lower high, and it has came back down to retest this lower high to form your new higher low. Right, so this could be the first sign that tells us that right now, price has reversed and it has become an uptrend right now. So in this case, we can't decide whether we want to enter for a buy or we want to enter for a sell, right? You guys must understand that trading is not as easy as what it looks like on the textbook, right? Textbook can say that, oh, uptrend is like this, downtrend is like this. But in reality, the charts look something like these, all right? So you guys need to be very careful when it comes to identifying the market structure, the trend, because one wrong move can cause a loss, right? So every move you take must be calculated, must be thought through. So right now we can see that the market structure could be reversing to becoming an uptrend. So in this case, I'm gonna zoom down to the 4-hour time frame. Okay, zoom down to the 4-hour time frame. Look at what price has been doing lately, and if you see, price has been going up lately, right? Price has been creating a higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. So the daily time frame has shown us that it is bullish. 4-hour time frame has shown us that it's bullish as well, right? So now the higher time frames has shown us that it's bullish, so we should be entering for a buy in this case, right? So right now, what we are waiting for is all the time frames to be aligned, right? You want to wait for all the time frames to be aligned, like all the stars in the skies to align, to give you the confidence to tell you to enter for a buy. Right now, daily bullish, 4-hour bullish. What we want next is to look for a bullish movement in the 1 hour or the 15-minute time frame, because this is where we are be looking for our entry, right? Either on the 1 hour time frame or the 15-minute time frame. So once the 1 hour time frame or the 15-minute time frame has turned bullish, this means it's good to go. This means you can enter for a buy already. If price is like this right now, you can see right now it's like this, right? And if you go to 1 hour time frame, oh shit, it's actually bearish, right? In this case, it kind of goes against our principle of having all the time frames to be aligned. So in this case, if it's 1 hour is actually bearish, in this case, you still cannot enter for a buy yet. You guys must be patient. You guys must be disciplined enough to wait for the perfect trading setup. Remember, trade like a sniper. The last thing you want to do is to trade like a machine gun, take a shit ton of trades, but you end up losing on most of these trades. So trade like a sniper, right? So in this case, I'm waiting for the 1 hour time frame to become bullish. Daily have to be bullish, 4 hours has to be bullish, 1 hour 15 minutes has to be bullish as well for me to enter for a buy. So right now we'll still wait. You can see I'm just gonna fasten this a bit. Okay, you can see like price is like starting to change from bearish to bullish right now. How we can know is by even drawing like a mini trend line right here, right? Draw like a mini trend line. This is what we call a counter trend line, and if price breaks through this counter trend line, this shows us that this retracement, this mini downtrend is done, and price is gonna become bullish again, and it's gonna go up now. So we can wait for this counter trend line to break as well. So as you can see, this is exactly what price did, right? The counter trend line has been broken. Now that all the time frames has been aligned, right? The next thing you must do is to make sure that you wait for price to get to a key level, right? You don't want to be trading when price is in the middle of nowhere, right? And just now I forgot to mention, but you guys should also identify all your key levels, mark up all your key levels on the higher time frame, like the 4 hour or the daily time frame, right? So I can mark up like a key level like right here, or even another key level like somewhere right here. Yeah, this is the first key level, this can be the second key level. Yeah, so by identifying these key levels, you will know exactly where you should enter for a buy, where you should enter for a sell, where to look out for, because you know that, oh, if price is hitting a resistance area, that means most likely it's going to reverse. So maybe you can place a take profit right there. So those are some examples. So I can just mark up more key levels right here, and I can even show you guys another trick, right? You can see, this is what I call the trendline brick magic, the trendline magic tool, right? So you can see previously it has been a downtrend, right? It has been a downtrend like this. So when price usually break through the trend line, price tends to go to the points where it touches the previous trend line. So what I mean by that is that you can see previously trend line, find out all the points that touches the trend line, which is right here, and like right here, and I'll say right here. Because what price usually tend to do is that price, when reverse, right, when price break out of this trend line and it reverse and it start creating an uptrend, right, it's going to go to these points. So you can use these points as your take profits levels. So this is what I like to call the ABCD, right? So you can see this can be point A, point B, point C, point D, right? So price will tend to go up to hit either one of these levels that we have right here, or if you are lucky enough, price can even go all the way up to point D before it starts reversing and head back down. So you can use these levels to like kind of take profit, right? So this is like a nice little trick that you can use. So back to the strategy. So like I said, I'm waiting for price to get to a key level for me to enter for a buy. And you can see, if I go down to the 1 hour time frame, I can see that right now price is actually at a key level, right? You can see this is a key support level, and this is what we can also be called like a area of interest. Okay, area of interest. So right now price is at a key level. You can either wait for price to get to a key level or a supply or demand zone. That is when you want to look for confirmation. So after price get to a key level, right? You know what? Let me just put down the steps for you guys. I almost forgot to put down the steps for you guys. So the second thing is to wait for all time frames to be aligned. Must be bullish on all time frames. Then the third step will be to wait for price to get a key. Wait for price to get to a key level or supply or demand zone, S&D zone, supply and demand zone, right? The reason why you want to wait for price to get to a key level is because the last thing you want to do is to trade when price is in the middle of nowhere. Let's say you enter for a buy like somewhere right around here. When price is in the middle of nowhere, look, if you enter for a buy here, your stop loss must be below the last higher low, which is right here. And your take profit could be at the next key level, which is like somewhere right around here. And you can see the risk to reward ratio is just not worth it. It's just not worth it, guys. So like I said, what you want to do is to just make sure that wait for price to get to a key level so they can have a nicer entry, a tighter stop loss. Because if you trade at the key level, you can place your stop loss below the key level and now you have a much tighter stop loss and a wider take profit, which means that you can risk less and make more money on this trade. What you can do is after price get to a key level, right? Now this is where you want to look for multiple confirmations, or rather what I like to call confluences. Right, so this multiple confirmation can come in the form of candlestick patterns, chart patterns, indicators, moving average crossover, Bollinger Bands, RSI, whatever indicator that you like to use, and also like things like trend lines, Fibonacci. All of these things, right, help to give you additional confluence, additional confirmation for you to enter for the trade. So yeah guys, once price gets to a key level, you want to look at what price is doing at the key level and then get your multiple confirmation. So for the sake of this, I'm just gonna put on my moving averages. These are my 8 and 14 EMA, as you can see right here. This is the 8 and the other one is the 14 EMA, right? And the moving average crossover is a very simple trading strategy. When these two like moving averages cross over each other like this, you can see right here, this is when you know that the trend is gonna reverse. And that is when you know that price is gonna reverse and you can look for a reversal trade setup right there. So right now, let's zoom in even further. Right now we are on the 1 hour time frame, by the way, and we see that price has, first of all, broken past the counter trend line. Price break. That's the first confirmation, the first confluence. Next, it could be this giant bullish engulfing candlestick. So when you see this big bullish engulfing candlestick, right, this big green candlestick, what does this tell us? This tells us there's a lot of momentum, a lot of volume, a lot of pressure, buying pressure, which means that buyers have entered this market and is pushing the price up. Next, this little key support area right here. This is the key support area, or rather area of interest, whatever you like to call it, right? It can also be a demand zone, right? That's the third confluence. Our fourth confluence could be your moving average crossover. You can see previously the moving average has already crossed over right here. When the blue line is above the red line, this tells us that price is in the uptrend and we should be entering for a buy. When the red line is above the blue line, this tells us that price is in the downtrend and we should be looking to sell. So right now, blue line above red line, this tells us that we should enter for a buy. So now that we got our 4 confluences, and the 5th confluence could even be like market structure, right? Right now, price is creating your higher low. Once you got your multiple confluence like this, right? Like I said, you guys always want to make sure that you get multiple confirmation. The keyword here is multiple. The last thing you want to do is to just enter a trade based on one confluence. Oh, I see this big candlestick, I'm just going to enter for a buy here. No, you need multiple confirmation. The reason why you need multiple confirmation is that the more confirmation that you have, the more confluences that you have, the more confident you will be in holding the trade to your take profit. The higher chance that the trade will play out, right? Because remember, the market is random. That means that we cannot control the market, but what we can control is our entry. We can be disciplined enough to wait for the perfect trade setup. So this is what I like to call like a perfect trade setup, right? A perfect trade setup is when I have at least like 3 to 4 confluences and price at a key level, all the stars in the world is aligned for me to enter for a buy, and I'm confident to hold the trade all the way till my take profit. So now I have multiple confluence, that means I'm good to go. Right, that means I can finally enter this trade after analyzing for 10 years. So there's 2 ways we can enter this trade, either on the 1 hour time frame or the 15-minute time frame, right? So if you want to look for an even better sniper entry, you can go down to the 15-minute time frame, right? 15-minute time frame is where you get those like really tight entries. Like example, I would have entered for a buy somewhere right around here when the moving average started crossover, and I'll place my stop loss, right? For stop loss placement, you guys want to place your stop loss based on market structure. Remember, based on market structure. Don't place your stop loss like 5 pips or something, because 100% you're gonna get stopped out like a dumb idiot. A lot of beginner traders, they go into trading thinking that, oh, I have to have the tightest stop loss possible, the tightest stop loss, so that I can really minimize losses. So I need to have a 5 pip stop loss every single time I trade. Majority of your trades are gonna be losses if you do that. So what I want you to do right now is to, give your stop loss a little bit of breathing room and then place your stop loss based on market structure. So in the uptrend, you should be placing your stop loss at the previous higher low. So right now, this is the uptrend. You can either place a stop loss at the previous high low, or we can place it below this key level. In this case, I'm just going to be placing it below this key support area that we have right here, somewhere right around there, and take profit. Take profit is when you want to take profit at the next key level. Where is the next key level? The tip here is to look towards your left, right? Look towards your left to see where price last stopped at. And if you look towards the left, you see that over here, there's a key level that we have right here. Remember our point A, point B, point C, point D? just now we mentioned, right? So this will be the next key level. So that could be my first take profit that we have right here. And the next key level could be right here. The next key level could even be all the way up here, right? So if you are confident about this trade, you can hold it all the way up to this area right here. So this will be a much nicer sniper entry. So this will be more of like an intraday trade, right? If you hold it till this first take profit level. If you hold it all the way up till this next key level, this will be more of a swing trade where you have to hold the trade a little bit longer over the next few days, etc. So yeah, let's discuss a little bit about risk management. When it comes to trading, right? Ideally, you want to aim to get 1:3 risk to reward ratio setups, right? 1:3. So you can see this is a 1:6, right? But if we move it back to the first take profit level right here, this is 1:3, right? This is 1:3, which means that we are risking 1% to make 3%. In trading, you always want to make sure that you get back in return more than what you risk. It doesn't make sense if you risk $1 just to earn back $1, right? It doesn't even make sense if you risk $1 to earn back 50 cents, right? You always want to make sure that you can double the amount of money that you risk, right? You want to get back more in return. So ideally aim for 1:3, because if you have 1:3, your win rate can be a little bit lower, which means you can win lesser trades but still be profitable in the long run. This ties in with win rate as well, right? Ties in with win rate. Example, an average win rate 50%, okay? Average win rate 50%, which means that you win half the trades, you lose half the trades. That is like the win rate of professional traders, right? 50%. And with a 1:3 risk to reward ratio, that ensures that you can become consistently profitable over the long run. This is the goal that you should be looking out for, 1:3. So on each one of my trade, right, I'm risking 1 to 2% of my entire account on each trade. So what this means is that if I'm having a 100k account, I will risk 2% of that, which is what, 2,000, right? I'll risk $2,000 on this trade. So in this trade, since it's a 1:3 risk to reward ratio, I risk $2,000 to get back $6,000. Risk $2,000 to get back $6,000. So this is the risk and the reward will be $6,000. This is how I approach risk. And why I say 1 to 2% is because it depends on the scenario. If I'm more confident about this trade because I have more confluences, right, then I'll risk 2%. If I'm a little bit less confident, I have like lesser confluences, lesser confirmation, I'm gonna risk 1%. So how much I risk depends on how confident I am on that trade, right? You don't want to make sure that you fucking risk 10% on like a low probability trade setup. So the higher the probability of the trade going well, the higher of amount of money that I'm gonna be risking, right? Because I'm more confident, so obviously I'm gonna risk more to try to earn more money, right? So right here, this is how I approach risk. After coming out with this, next thing you must be wondering, when you go into MetaTrader 4, there's something called lot size, which means like, what is the position size? What is the amount of units that you're gonna be buying? And how you can figure out your lot size is by using this principle that we have right here, risking 1 to 2%. Go on to Google or go on to App Store and search for this useful tool, position size calculator. And this is gonna be your best friend from now on, all the way you stop trading. So you can see right here, this is your position size calculator, and all you have to do is to input some values and it will calculate the lot size for you just like magic. So over here, we can put, my account size is 100k, and let me choose the currency pair that I'm trading, which is AUD USD. And right now, I'm risking 2%, so put 2% right here. My stop loss distance, let me check what's my stop loss distance, it's about 22 pips, right? 22 pips, so put 22 pips. Now, you can see right here, it literally lay out the lot size for you. You should be using 9.09 lots, and you're risking $2,000. So I will go on to my MetaTrader 4 and input 9.09 lots. Not more, it can be less, but not more. It should not exceed 9.09 lots, right? Once I input 9.09 lots, I'm going to be entering for a buy, right? After I enter for a buy, I have to see the trade play out, and you can see price eventually go up here and smash the first key level that we have drawn right here. It's really just as simple as that, guys. Like, I don't want to overcomplicate things or make things way too complicated, right? A lot of people try to look for like the perfect trading strategy, so they will go on to YouTube, search for 10,000 trading strategies and experiment with like different trading strategy. It's okay to do that, right? It's okay to experiment with different trading strategy, but what you want to do is to find out what works best for you. My trading strategy might not work for you because we have different personality. His trading strategy might not work for him or her, right? We all are built different. So what I want you to do is to experiment with different trading strategies, yes, study smart money concepts, study ICT concepts, study price action, and then come up with your own trading strategy. You can take 50% of what I just taught you, or even 20% of what I taught you, but then use that to come up with your own trading strategy. Maybe take a bit on here, a bit from there, a bit from here, and then come up with your own winning trading strategy that suits your personality, suits your schedule, and suits your trading style, right? So like I said, this is more of an intraday or swing trading strategy. So it's gonna be a little bit different. Like example, a scalper is not gonna be entering for this trade because this takes like at least like 1 day for this trade to be played out. So yeah, I just want to give you guys like a whole overview of my entire trading strategy. As you can see right here, first things first, identify the trend, the market structure, wait for all the time frames to be aligned, right? Because you want to make sure that your 4-hour time frame is bearish, daily time frame bearish, weekly time frame bearish. Then that is when you can know that, you know what, all the trend direction is aligned together and we can trade with that particular trend direction. And next, you want to wait for price to get to a key level or supply and demand zone. Very, very important, right? You don't want to be trading when price is in the middle of nowhere. You want to get the sniper entry. And how you can do that is to wait for price to get to a key level. Then after price get to a key level, that is when you can analyze the charts, look for multiple confirmation. It could come in the form of candlestick patterns, chart patterns, support or resistance levels, Fibonacci, trend lines, moving average crossover, other indicators, whatever confirmation that you love, use that particular confirmation. That is when you can finally enter the trade on like either the 1 hour time frame or the 15-minute time frame. And in this case, you want to aim to get at least 1:3 risk to reward ratio if you want to become like profitable over the long run. Yes, you can be profitable with a 1:1 risk to reward ratio, but that just means that you need to win more trades, right? You need to have a higher winning rate. For me, I can honestly tell you that I'm not the best trader in the world. I don't have the highest win rate. My trading strategy is not perfect. I'm just gonna make that clear, just gonna be honest with you guys. But what I have is solid risk management, which means that I'm able to focus really, really well on my risk management, managing my risk, money management, and I also have a solid trading mindset. And that gives me an edge over my competition, which is the market. And also, once you have find out how much you're risking per trade, go on to the position size calculator and determine your lot size. Is it going to be a 1 lot size or a micro lot size or a mini lot size? Whatever it is, it depends on your trading account. If you're trading like a smaller account, right, the last thing you should do is to trade with a 1 lot size. That's the mistakes that I used to do back when I was still a beginner, right? Fucking $500 in my account and I'll use like a standard lot size and I'll freaking blow that account in like 2 trades or even 1 trade actually. Yeah, so massive mistake. Stop making that goddamn mistake, guys. I know it's hard for you because you want to get rich quick fast, but this is what it takes to become a profitable trader. And profitable trading can be boring and uncomfortable. Like waiting for the perfect trade setup is not fun. Following your trading plan is not fun, right? It's freaking boring because it goes against human nature, but it is what you need to do. So do the hard things, do the disciplined things so they can enjoy like the long-term freaking fruits. Man, I don't even know where I'm going with this. But yes, that is my entire trading strategy. I'm starting a revolution, a movement, something that's never been done in this trading industry. And it's called Roadmap to Mastery. 90% of traders lose, which means you will not get rich from trading just by learning technical analysis. You don't need any more technical analysis. You need a serious review of how you think. So it's finally time for me to reveal to you what it takes to become a top 1% trader and how to think like one. And the best part about this whole series is that it not only benefits beginner traders, but it also benefits advanced traders. All types of traders, they will learn something. Whether you trade forex, crypto, or stocks, whatever you are, you will learn something. So on 5th August, I will finally reveal to you the greatest secret to my trading success. I'm inviting you to step into the world of professional trading during this entire Roadmap to Mastery series. And at the end of the event, I will give away $200,000 funded account to 2 lucky winners. And you can save your spot right here by like going to this link, thetradingblueprint.kajabi.com, or just click in the link in the description. This is your invitation to live the life you have always dreamed of. Don't just dream it anymore. Live it. If you love my unfiltered and uncensored trading episodes, you will 100% love this series because it's higher quality videos. I spent over $10,000 on the equipment and all the editing and stuff, and there's more amount of research done. So hours of learning went into like learning from the top professional traders, and I've literally like And also I spent a lot of time planning and scripting each one of video. Like literally one video takes 1 week to plan out. The first episode will be live on 5th of August, 9 PM Singapore time. Average is the enemy. Success is your duty and obligation. It is your duty as a trader to reach your fullest potential and become the best trader you can possibly be. And this whole series will help you do just that. So stay tuned for this series that will transform your trading and help you become the best trader. And like I said, if you want to get notified when the first episode drops, make sure you go sign up, link in the description with your name and email, and also click on that subscribe button and the bell beside it. Because I guarantee you that this will change your trading forever. And this will literally revolutionize the whole trading industry. And I hope that you'll be part of this revolution, part of this movement. If you're brave enough, click on that subscribe button. And remember, you're just one trade away. Mwah. As you can see, I'm up like $3,000 right now from shorting gold. And yes, this is a live account, which you can see right here. Live account, real account, guys. And for those people who keep on asking me to show you live results, I've done a video of me withdrawing $50,000 and then I used that money to pay for my dad vacation. I bring him to his dream vacation and pay for everything. There's a video on that, it's called my 50k live withdrawal or something. And there's another video of me turning $500 to $9,000 in 3 days live. I'll literally show you the proof in the video as well. And yes, there are still other videos of me showing live profits. There was one where I was up like 23k and I literally posted like the freaking screenshot on Twitter and YouTube. So yeah, there we go, live trades, live profits. Just wanted to make that clear before I start this video. Without further ado, let's dive deep into this video. Now, one of the few criteria of becoming a professional trader is to understand and trade market structure. If you can understand market structure, you can understand how the market flows, how the market moves. You will be able to get nice entries. You will know when the market is done retracing so they can enter for an optimum entry, so they can have the lowest risk and the highest reward. Now, first things first, before you do anything, we need to learn how to understand market structure. So over here, you can see in an uptrend, we know that price will not just go up in a straight line or go down in a straight line in a downtrend. Price has to push, retrace a little bit, push, retrace a little bit, and push even more and retrace a little bit. So over here, you can see price did this huge impulse move. So it moved up and it starts retracing. So this is your correction phase. And then it makes another impulse move and it makes another correction, impulse, correction, so on and so forth, right? So why this happens is because during the impulse phase, right, when price push up like this, there's not enough buyers to continue for the price to continue going up, right? So there has to be some sort of retracement. So some sellers start to come in and push price down, causing this correction. Now, after price is done correcting, more buyers will start to come in and buy low and sell high, right? So they will buy at this high low, causing the price to be pushed up even further to create a new higher high. So this is the next impulse move. And then it starts to retrace it again and then starts to push even higher. So in an uptrend like we see over here, price will be creating your higher highs, higher lows, higher highs, higher lows. So you can see this high higher than this high, and this low higher than this low. So usually price will go up, break through the last higher high that we have right here, and then it will usually come down to this higher high right here, retrace back to this higher high so they can retest it so that it knows that it's solid, and then it creates a new higher low before pushing up and create a new higher high and retrace back to this previous higher high to create a new higher low. So what we see over here is on maybe the daily or the 4-hour time frame. On the daily or the 4-hour time frame, this is where we have your major structure, right? Market structure is much more clearer. You can clearly see the higher highs, the higher lows. But more often than not, when we go down to like the smaller time frame, the 1-hour time frame, the 15-minute time frame, or even the 5-minute time frame, all this market structure still exists, but it looks a little bit more complicated. So instead of looking like so clean, you can clearly see where's the higher highs, the higher lows, where price is pushing, where price is retracing. It's gonna be a little bit confusing to see the market structure on the smaller time frames. So over here, let's say we are doing our top-down analysis. So we see this on the daily or the 4-hour time frame, and then we zoom down to our 1-hour time frame. So on our 1-hour time frame, this is what the impulse and the correction move looks like. So over here, this is the impulse move, and the correction, and the correction. This is the correction. So in this case, right, you can see it looks a little bit more confusing now.
but the concept is still the same over here. There is still your higher highs and higher lows in the uptrend, there is still your lower lows and lower highs in your downtrend. And what we have in the 1 hour time frame, the smaller time frame, is what we call the minor structure. So over there just now we have analyzed your major structure, and now this is your minor structure. And by the way guys, this is just a zoom in of like this area right here, a zoom in of this, and then we give it something like right here. So you can see, right, this impulse move is this lanky up move over here, and then this correction, this little retracement, is this little downtrend that we have right here. So it's still the same thing, guys. Like you see, in an uptrend, in an impulse move, price is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And eventually, the buyers start to lose steam, like I said, and the sellers start to come in and push the price down, causing the retracement. So over here, you can see, price starts creating a new lower high. You can see this high is lower than this one right here. So the minute price starts creating a lower high right here, right, you will know that, okay, the retracement is about to start, right? This little impulse move is gonna end, and we are moving on to our correction phase that we have right here. So can you sell during this correction phase? Yes, 100%. If you're a scalper, if you're an intraday trader, you can catch some really nice shots on this little down correction that we have right here. However, if you're like a swing trader, you might want to like trade when price is done correcting. So you enter for a buy right here and continue trading this uptrend because you want to trade with the trend. So like I always said, at the end of the day, it depends on your trading style. What works for me might not work for you. So choose one and stick to it. So as I was saying, price created a lower high and then it starts going down, correcting price, and then it starts creating another lower high, lower low, lower high, and lower low. But at some point of time, you must understand that this correction will cease and this uptrend is going to continue. So how we can identify that is when price starts to create a new higher low. So you can see price starts reversing over here, price here the down bottom starts reversing and create a new higher low. This low is higher than this low that we have right here. This tells us that there was a break of structure. Price is going to reverse right now. This correction is done, it's over. So we can look to enter for a buy somewhere right around here and trade the continue, like the uptrend. Now, if you're looking for a sniper entry, you're going to get it from the even smaller time frame, like maybe even the 15-minute time frame, especially if you're intraday trading. So right now, we are still on the 1 hour time frame looking for a minor structure. So now I'm ready for my entry. So I'm going to zoom in down to the 15-minute time frame to look for my sniper entry. So this is what price will looks like on the 15-minute time frame. Yes, it can be a little bit more messy now, but the concept is still the same here. So what you can see over here is actually the correction phase that we have right here. If you zoom it out to the 15-minute time frame, it's gonna look something like this. So as you can see, this is a correction phase, but in the correction phase, it doesn't mean that price will just go down straight. It will go down, retrace, go down, retrace, go down, retrace. That's why causing this whole confusion. But don't worry, I'm going to simplify this for you, alright? So this is the correction phase, and we can see that price got pushed down. The minute price pushed down, it's going to start retracing, right? So it starts retracing, create this little higher highs, higher lows, higher highs, and higher lows. So over here, what we can see over here is actually this little move right here. This little retracement create a new lower high. So this is actually a new lower high on the 1 hour time frame. So the minute we see this new lower high, and when I can enter for a sell is when price break through this last higher low. So you can see, once price break through this last higher low, chances are price is going to continue to go down. So this is the new lower high being formed, and we can look for our short if price break through the last higher low. Thus breaking market structure, which shows us that price is going to reverse and head back down. And then once again, price starts going down, and then price starts retracing again, starts to create another low high. So this new lower high is this one that we have right here, the second new lower high. And same thing, price break through this last higher low, guess what, I can look to sell. So over here, I've gotten like 2 short opportunities. So that's the whole map of like how market structure works, how the major structure and the minor structure comes in together to form your market structure. And it is very important for you to understand both the major structure and the minor structure, because you never ever just want to be stuck on like the smaller time frame and you just fail to see the overall big picture. And I just want to remind you guys that trading is actually very simple. You either buy low and sell high, or sell high and buy low. Fit this concept into market structure, find out what are the optimal areas to look to enter for your buy or look to enter for your sell. And guys, if you want to get good at anything, you need to start practicing. So if you still don't understand market structure, you need to go on to the empty chart, like just plot any chart, Euro USD, GBP USD, AUD USD, and start marking up your market structure. Identify the market structure, see whether the price is in the uptrend or downtrend, and then start marking up your lower highs right here. Another lower high, and then another lower low and lower low. So price creating low high, low low, low high, lower low, and create another new lower high and another new lower low. So this is the major structure on the 4-hour time frame. Downtrend, major structure. So you can see major structure, price creating a low high, lower low, lower high, lower low. So what you can even do is to go down to the 1-hour time frame to look for your minor structure. So once we go down to the 1-hour time frame, we can see that okay, price is actually not that smooth anymore, right? But in a way, you can still see like the downtrend. So you can see right here, price creating a new lower high, lower low, and within this little lower low, right, price is retracing. So it's price retracing and starts creating a new little higher highs, higher lows, higher high, higher low. And then when price breaks through this last higher low, like I said, what we said, and then when price breaks through this last higher low, what we said just now is to enter for a sell. So sell right here. And another thing right here, you can see price creating this little retracement, and this is the new higher low. Once price breaks through this new higher low, look to enter for a sell, and so on and so forth, right? Like I said, all the time frames tie in together, be it the 4-hour, the 1-hour, or the 15-minute time frame. There's no like one single best time frame to trade on because it all ties in together, and you have to make use of all of these time frames if you want to trade market structure properly. So now that you have learned how to read and understand market structure, you must learn how to apply market structure. So I want to give you something that is more applicable so that you can actually apply onto your charts and start trading. So now I'm going to show you my trading strategy, how I personally trade market structure. I'm just going to show it to you guys on GBP/USD live, right? You can see right now this is the live market. You can see the timestamp right here. So over here, first things first, we have to identify the major structure on the 4-hour time frame, right? Because the major structure tells us like where is the overall trend, like where is price going overall, like on the higher time frame. So overall, we can see that price has been creating a higher highs, higher lows, higher lows, higher highs. So higher highs, higher lows, higher highs, higher lows. This is the impulse correction, and it starts creating a new higher high. So recently, this is the new higher high, and this is the new higher low. But if you look closely, there's a chance that this could be a reversal. So on a 4-hour time frame, we have identified the major structure is the uptrend, right? Then we go to the 1-hour time frame to look for our minor structure. So if you look closely at our minor structure, let me remove all these first. You can see that price did this huge consolidation that we have right here, right? This huge consolidation. So the last higher high that we have is right here. And since then, price has created a new lower high. So what does this mean? This means that there's a chance that this could be a correction or even a reversal. So knowing this, you could have easily entered for some short opportunities during this correction. Example, right here, price starts creating a new lower high. You can see this high is lower than this high that we have right here. So when price reaches this zone that we have right here, we should only be looking to sell. So price reach here 1 time, 2 time, 3 time, 3rd time, price reach this area again, and you start seeing like some sort of selling pressure, some sort of bearish candlestick, bearish engulfing candlestick, and all like little dojis that we have right here. Easily you could have entered for sell right here, stop loss above this last lower high, and take profit at the next key level, which could be somewhere right around here. Or another example that we have right here, you can see price has just been creating a higher highs, higher lows, higher highs, and higher lows, right? But over here, price has started creating a new lower high. So a new low high right here because this high is lower than this one. So the minute price created a new low high, we know that, okay, the correction is about to start. Sellers have started to come in. So we can look for shorting opportunities right here. And I will personally enter a sell when price break through this last little low that we have right here. This is the last higher low. And once price breaks it, it just tells us that all hell is gonna break loose. So easily enter for a sell right here. And then once again, price goes down and it starts retracing to create potentially another lower high. So the minute price creates this new lower high, we know that within this zone over here, we should only be looking to sell. We should not be looking to buy. So easily you can enter for another sell right here, and you can start seeing price starts consolidating, and it even start to create a new higher low. So you can see this high, this low, is higher than this one. So a lot of traders might think, oh, this correction is done and price is about to go up right now, because the next thing you know, price starts giving 1, 2, 3 green candles in a row, and it followed by this huge long ass candle. So at some point of time, price literally got pushed all the way up back to this zone that we have right here before it got pushed all the way down. So a lot of beginner traders, they might take this as a reversal. They might think that this little retracement is done and right now price is going to go up even higher. So they enter for a buy right here. Next thing you know, they get stopped out and price reverse against them and they lose a lot of money. Which is exactly why you guys cannot be stuck on like one time frame alone. So if you just stuck on 1 hour time frame alone, you might think that yes, price is going to go up right now and you enter for a buy. So at the end of the day, always make sure you zoom out, look at the overall big picture, and we have seen on the major structure on the 4 hour time frame, price is actually correcting itself right now. So there's a chance that price is going to go down even lower. So after I see this candlestick being formed, right, this long ass candlestick being formed, I know that this is definitely like a zone, like a later supply zone, and there's a lot of sellers at this area. So price is definitely gonna drop a lot right now. So you can end up for another short opportunities right here. Now there is a more intraday approach, right? You can look for some nice sells during this correction. But if you are more of a swing trader who likes to trade the trend, what you can do is that you can wait for this entire little correction to be done. For this entire gigantic correction to be done and start seeing some form of reversal, then that is when you can enter for buy. So example, price is still creating a low highs, low, 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 high, low, 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 high, low, 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 high, low, low. So over here, I want to see price break through this last lower high, come down to retest this last lower high to form your new higher low. Then that is potentially telling us that this correction is done and I'm gonna be looking to enter for a buy because price is gonna go to the moon right now. But until that happens, until you see a break of structure, you should not be entering for a buy yet. And I almost forget to talk about this, but when it comes to entry, right, if you're an intraday trader, like I said, you want to enter on your 15-minute time frame, right? So we can go down to the 15-minute time frame and you can see there's so many opportunities where you can enter. Right here, we can see that price is creating a double or rather a triple top. 1, 2, 3, triple top. And you see a evening star candlestick pattern that we have right here. Easily entered for a sell right here because number 1, price gave us an evening star, a reversal candlestick pattern. Number 2, price is at a lower high. Price is creating a lower high. It's at this supply zone that we have right here. Number 3, triple bottom, right? 3 confluences, easily pull the trigger, enter for a sell right here. And stop loss above the last lower high, like I said, and take profit at the next key support level, which could be somewhere right around here. And you can see price literally went down in our favor. So at the start of this video, I showed you guys how I'm up about like 3k from shorting gold. And I'm gonna take like a few minutes just to explain this live trade that I took. The concept is still the same. Look for your major structure and then look for your minor structure. So over here, we can see the major structure in gold is that price is in the uptrend. Price is getting your higher highs, higher lows, higher highs, and higher lows. So there's impulse, correction, impulse, and even further correction. So over here, we go down to the 4 hour time frame and we can see that price was previously in like a little uptrend. But somewhere right around here, recently, price has started to reverse to become a downtrend. There's a potentially a break of structure that we have right here. You can see, I've identified this is the last higher low and this is a last higher high. The minute price break through the last higher low right here, price break to the last higher low, starts coming up to retest this higher low to become a new lower high. We know that right now price is going to reverse and it's going to go down right now. So over here, once again, you can enter for a sell when price is creating all these little lower highs right here, sell here, sell here, sell here. But to be honest with you, I wasn't looking at the charts doing like this little consolidation because I was quite busy back then. But right now, I have a little bit of free time recently, so I decided to look at gold, analyze gold, see where price is going. And I can see right here, price has just broken past this new lower low. And potentially, when price breaks through a new lower low, it's going to come back up to retest this same lower low to create your new lower high. So I got the idea that price is gonna retrace, right? So the next thing is I went out to the 1 hour time frame to look for my minor structure. And I can see price is creating your lower highs, lower lows, lower highs, lower lows. And actually for this trade, I didn't really go down to the 15-minute time frame because I plan to like hold this trade even longer and swing this trade. So I see that price has just finished creating your new lower high right here. So I entered for a short right here, given that I have a bearish engulfing right here. And then this is price forming a new lower high, and then also price has just break through this support area and it has came up to retest it. So that was my 3 confluence and I entered for a sell right here, raised my stop loss above this last lower high, and right now we are in a little bit of profit as you can see right here. And my take profit is all the way down at this key level that we have right here. So like I said, I plan to swing trade this, so I place my take profit all the way down at this support area. Maybe I would take partial profit somewhere right around this area depending on what price is gonna do. So I'm just gonna be observing to see what price is doing, and then as price creates a new low highs, I'm going to be moving my stop loss from here to like the new low high. So that's just a little analysis on why I entered for this gold trade earlier. And right now price is like kind of like retracing around here, correcting itself after this little down move that we have right here. And you guys must understand, at the end of the day, corrections, retracements, they're all part of the process. Once you place the trade, I will advise you guys to just not constantly look at it. Because if you constantly look at it, you might start thinking, oh no, right now price is gonna reverse and I should get out of this trade right now. And once you get out of the trade, you see the price starts going even further, going in your direction, and you end up like regretting getting out of the trade and tell yourself, oh my god, why am I such a bad trader? Why am I such a brokey? So I just wanted to make that clear. Just trust your analysis and let the trade play out. Whether you hit the stop loss, whether you hit the take profit, I don't give a shit, alright? I'm robotic. And going forward with trading, you should have this mindset. You should adopt this mindset. If you have enjoyed this video, like, subscribe and all the stuff, and you can check out my course, link in the description. And if you want to learn more about advanced market structure, you should definitely watch this video next, because that video combined with this video will really solidify your understanding of market structure. And remember, you're just one trade away. Mwah. In this video, I want to share with you 3 price action trading strategies that have made me over 6 figures. Trust me, these price action trading strategies are simple, effective, and guess what? They are very easy to implement. Without further ado, let's go. So the first trading strategy is actually what we call the break of structure. So how this strategy works is that you want to identify a break of structure and then you want to enter when that happens. So let me just draw it out for you guys to see. So let's say price is like consolidating, going sideways right now. So pretend that this is the daily chart, right? This is the daily chart. And then ideally you want to wait for a break of the structure, right? So price to come down here, break this last low, and come back up to retest this last higher low to form potentially a new low high. And then this is where you want to enter for the trade. So when you look at this, right, if you go down to like, let's say the 4-hour time frame, right, or even the 1-hour time frame, this move right here, this little up move right here will look something like this. Mini higher highs, higher lows like this. And then eventually on the smaller time frame, on the 4-hour time frame, you want to look for your break of structure. Price form a new lower high, start breaking through the last higher low. There we have it, the break of structure. So now the break of structure in the 4-hour time frame has confirmed to us that right now price is going to head back down. This little retracement is done and price is going to continue to head back down. So that is why we're going to enter right here for a nice sniper entry. As soon as price breaks structure, we have a confirmation, we have our confluence, we can immediately enter for a sell. Papoom, baby. So for this break of structure entry, honestly, you can either enter when price creates this lower high or wait for price to break through this last higher low and then come back up to retest it, then enter for a sell right here. I prefer to do it the second way, which is this one right here. You enter after price break structure, create a new lower high after it has retested the last higher low. So in this case, this gives me like a much more higher confirmation or even a higher confluence so that I can be more confident to hold the trade all the way down. But on drawing, it looks easy and easy to trade, but on the charts it's much more complicated. Well, that's true, brokey. Obviously, it's gonna be much more complicated on the charts. If it's as simple as is it like that in the drawing, everyone will be rich, right? Dumbass. So basically, this is what it will look like on the charts, right? So you can start seeing price is actually in the downtrend right now. Price has created like somewhat of a consolidation over here. You can see this little consolidation right here. Price is creating your multiple like triple top over here, and price is just broken past the last lower low. So this is the last lower low and price is just broken through the last lower low, right? And right now, like I said, what we are waiting for is your break of structure on a smaller time frame as soon as price has come back up to retest this last low that we have right here. So easily we have drawn like a little resistance area that we have right here, which I've already drawn for you guys because I'm a good gentleman. So yeah, draw like a little area right here, this little support area, whatever let's call it, support area or the last low. Now we are waiting for price to come back up to retest this low over here, right? That's the key. We are waiting for price to come up to retest this low. And you do not want to enter immediately when price like come up to retest this low and just immediately enter for a sell, because price can easily still go up and this can be a fake out, and guess what? Price can just go up and you've just lost a shit ton of money, dumbass. So what you want to do is to go down to the smaller time frame, right? So over here, remember, like I said, we are on the daily time frame. So this is what we will see on the daily time frame. We want to enter when the retracement is done. So how do you know when this little retracement is going to be done? By looking at the market structure and waiting for the break of structure. So at this point of time, go down to the smaller time frame, the 4-hour time frame, right? So over here we can see that Okay, this is the little retracement. This is the little counter trend, right? So what you can even do is that you can even draw like the counter trend line right here, right? So right now, price is still forming your higher highs, higher lows, higher highs, higher lows, higher highs. So potentially price could approach this zone right here and start to give us some sort of like consolidation over here to show us that this little retracement is losing its strength. So that is exactly what we are looking out for. So we're just gonna wait, and you can see price, boom, price go up there and start forming like this long ass upper wick. So what does this tell us, guys? If you see this long ass upper wick that we have right here, right, chances are there's a lot of sellers selling at this area, right? All the sellers are literally waiting at this area to short the price down, right? But I'm not gonna enter for a sell yet because remember, we are waiting for the break of structure. So you can see price starts forming a new like lower high right here, this high low, then this high right here, and we can potentially start to enter for a sell. I'll enter for a sell once price break through this last low that we have right here. This is the last high low, so that's when I'm gonna enter when price break through it. Bam, right there, guys. You can see immediately price break through the last higher low over here. And if you wanted to enter for a sell like somewhere right around here, right, you should not be placing your stop loss like freaking tight like this, right? You should give it a little bit of breathing room, place it above this area that we have right here. If you place it very tight like this, guess what? Price is gonna stop you out over here. The next time price is gonna come out to retest this area, and guess what? You just lost a whole lot of money just to see the trade go in your way. And you end up thinking that you're the worst trader in the world, blah 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 blah. Stop being a bitch. So next, we are waiting for price to come back up to retest this area that we have right here, and that is what price is doing right now. You can see price is forming a new low high. So the moment price breaks through this last high low, right, this is the break of structure that I'm looking for. Alright, let me just give you a brief recap. So what we did was that on the daily time frame, we waited for price to come back up to retest this low that we have right here. Market structure, guys. Lower high, lower low in the downtrend. So after price has done retested this area that we have right here, we zoom down to the smaller time frame, the 4-hour time frame, to look for our sniper entry. And in this smaller time frame, we are looking for the break of structure because this retracement is an uptrend, and we want to trade the downtrend, right? Because this is the downtrend, the overall higher time frame trend is the downtrend. So we are waiting for the break of structure of this little uptrend. So the moment price come down, break the last higher low in this little counter trend, we can look to enter for a sell and trade in the direction with the overall, the higher time frame trend. Get it? So in this case, enter for a sell right here. I'm going to be placing my stop loss above this last lower high. I mean this last high that we have right here, and place a take profit all the way down at this swing low that I have right here. So if you go down to the daily time frame, you can see that this is actually the last swing low, right? So like I said, important guys, make sure you use all the time frames, right? Not all the time frames, make sure try to combine multiple time frames. The last thing you want to do is to just like stick to one time frame, or like just neglect higher time frames. That's what I mean, neglect the higher time frames. Do not do that. So if you just like look at 4-hour time frame, right, you can see there's multiple levels where I can place my take profit. This area right here, this area right here, all these are levels where I can take profits, right? Take profit 1, take profit 2, take profit 3, right? So all these are examples of where you can place or take profit, basically at levels where price reverse. So you look towards the left, you see price reverse right here, price reverse right here. So somewhat support area right here, support area right here, where you can take your profit. But in this case, we're just gonna take profit all the way down at this last swing low so that we can maximize our profit potential, right? So in this case, let's look at what price does. Price goes down, goes down, goes down, goes down, goes down, goes down. I think it's gonna take a while, and we have finally smashed our take profit all the way down here. Price has finally reached this area that we have drawn right here. I believe you can even go down even lower. Look at this. Price starts creating like a down bottom. You can either get out of here, right? You can either get out at this area right here, somewhere right around here, you're out of the trade, right? Another thing I like to do is that instead of like getting out like somewhere right around here, I will have moved my stop loss that I have, which was above here, all the way up here. I'll move it all the way down to like maybe somewhere right around here at this last lower high. Yeah, so basically wherever price is creating market structure, you should move your stop loss. So over here, move it to here, and price created this new low high, move it to here again, and you can see eventually price goes down even lower, smash our take profit that we have right here, that we have drawn right here, smash our take profit, and it starts going up even lower.
right? As simple as that, guys. So that's the whole concept of using breakout structure to look for your sniper entries. So the next strategy I want to show you is actually called the force breakout strategy, right? This is the strategy that will fake out a lot of retail newbie traders, right? Because a lot of retail traders have the same old advice of when price breaks out, just enter immediately when price breaks out for a buy, and next thing you know, is the force breakout and price reverses in the other direction, and you lose a lot of money. Like 90% of the traders who are absolute brokies, losers, absolute failures. Which is why we need to take advantage of this and trade the force breakout, right? Let me show you what I mean. So in the uptrend, you know, price is creating higher highs, higher lows, and higher lows, right? But at some point of time, price is gonna come down here, retest this last higher low, this same old last higher low, and it's even gonna break past this last higher low that we have right here. It's gonna break past. And at this point of time, newbie retail traders start to think that, oh my god, price is gonna go down right now, price is gonna collapse right now because price has just broke through the last higher low. And they think that this is a valid breakout structure, but little do they know that this is actually a false breakout and price actually ended up going even higher. So in this case, what you could have done is that when price broke through the last higher low, you can enter for a buy when price starts reverses, and it gives you like a nice close above this level that I have right here, like a nice candlestick close that we have above right here. So you can enter for a buy somewhere right around here and then take the profit up. I mean, like watch your profits rocket, skyrocket, whatever you want to call it, man. Now let's look at a few examples on the charts. So over here you can see that I've drawn up like this little higher low right here because price is creating your higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. So this is clear. Today price is in the uptrend, right? So right now, this is the last higher low, right? This is the last higher low. And you can see price is like coming down to retest this last higher low. So look at what price did. Price eventually actually broke past this last higher low, guys. Remember, when price break past it, the last higher low, do not do anything. You want to wait for signs to see if price is reversing at this area, and this is a false breakout, or this is actually a real breakout and price is going to reverse and head back down. At this point of time, I'm waiting, alright, I'm still waiting. So you can see price goes down, but it starts reversing at this area and it actually closed above this little higher low area that we have right here. So what does this tell us? This tells us that this is actually a false breakout and you can enter for a buy, right? So you go down to the 15-minute time frame, you can start seeing like all these candlesticks are just closing above this area, and we also have a double bottom that we have right here. So clear as day, price is going to reverse and price is going to head back up. So you can enter for a buy somewhere right around here, place your stop loss below this low that we have right here, and take profit at this high that we have right here, this little high area right here. Right, this will be a very valid take profit because this is the last swing high, right? And you can see price just rocket up and smash your take profit right there. Very, very simple strategy. Let me show you another. Now this time around, price is in a downtrend because price is creating a lower highs, lower lows, lower highs, lower lows. So over here, this is the last lower high, right? And you can see price is going down even further and it's coming up to start like retesting this area that we have right here. You can see the moment price come up to retest this area right here, this last lower high area that we have right here, do you want to enter immediately for a sell right here? Comment down your answer, yes or no. Do you enter immediately when price has retest this last level? If you answered yes, guess what? You're gonna remain broke because you haven't been paying attention to what I've been teaching you for the past goddamn 20 minutes. But basically, the answer is no, because you want to wait for signs that show you that price is either going to reverse and head back down, or is it gonna break past it? Because price can do any one of these two things, right? And if you enter for a sell here, what if price actually go up and break this area and just go up even higher? You have lost money. So now we want to wait for price to come back up to retest this area first and give us like a false breakout, which we have right here. You can see somewhere right around here, price actually broke past the area that we have drawn and start giving us upper wicks. Upper wicks means what? Sellers selling the GPUSD, pushing the price down. So at this point of time, this was a false breakout, and I see there's also what's this? Evening star candlestick pattern. So easily enter for a sell right here, and take profit all the way down at this swing low that we have right here, or can even take profit at this area right here, or even this area right here, right? So I'm just gonna take profit at this swing low that we have right here, this most recent swing low. You can see price goes down, and smash your take profit. That's the false breakout strategy. Very simple, but yet very practical. The next strategy is called a pullback strategy. So how it works is, let's say once again price is consolidating around this area, maybe after a huge uptrend and it starts consolidating around this area. So you can the resistance area here, you got support area right here. So the moment price breaks out of this last high right here, we are waiting for price to come back down to retest this area or even pull back slightly like this before entering for a buy, right? So how do you know when this pullback is done and price is going to continue to go up? Now, what you can do is that you can put like a moving average, right? You can put like a maybe like a 20 moving average, which will look something like this. And then you can wait for price to retest this 20 moving average and it starts showing you signs that it's going to go back up. Then you enter for a buy right here and you can start to see price going back up. But basically, usually when price break out of a key level, price will tend to like retest that level or pull back a little bit before going up even higher. So what price can do is that you can start pulling back like this, pull back up to this like 20 moving average before it starts going back up like this. So like I said, the best friend for this strategy would be your 20 moving average. So just search the moving average that we have right here and just change it to 20. Right, that will be your best friend that you're gonna have doing this trading strategy, right? So over here you can see there's a resistance area that we have drawn right here, and price is just broken past the resistance area. So now we are waiting for price to pull back before we enter for the trade. So the moment price like starts going up like this, going up like massively like this, right? You should not be entering for a buy, because if you enter for a buy immediately when the price break out, it can be a fake out. Or you enter for a buy like somewhere right around here after price is broke out, guess where the stop loss must be? All the way down here. And look at the distance of the stop loss. That's a super duper wide stop loss and you don't want that to happen to you. So in that case, if you're too late to the market, price has already made its move, you want to wait for price to pull back or rather retrace before entering for the trade. So price starts going down, pulling back all the way down to this area, but it did not touch this resistance area. So over here, we can look to see that price has actually managed to retrace to the 20 moving average. Right, retrace back to the 20 moving average. If you go up to the daily time frame, you can see that price has managed to pull back down to this 20 moving average. So you can enter for a buy somewhere right around here, take profit at the next key level, right? And then you can start seeing price creating your higher highs, higher lows. Once again, higher high and higher low. And then price did another resistance area right here. You can see another resistance area that we have right here. This is another high. And when price broke out of this high, we are waiting for price to come back down to retrace back to this 20 moving average. You can see price retrace back to this 20 moving average. That is when we can enter for a buy and price just continue shooting up, right? So when you're trading this pullback strategy, right, you can either enter after price has pulled back to the 20 moving average or after price has pulled back to the last key level. So if price pull back to this area right here and start showing you signs that it's going to go back up, you can enter for that then as well, right? But whatever you do, you must wait for price to pull back or retest back to either the 20 MA or the key level or the last high, low, whatever you call it. Now, if you want to learn more about price action trading and every single thing I know about price action, you can consider checking out the trading blueprint, link in the description. And also make sure you download my free ebook called The Path to Becoming a Profitable Trader. And smash on that like button if you have enjoyed this video and hit on that subscribe button, because we are posting valuable content just like this one every single week without fail. And since you like price action trading, you should definitely watch this video next. It's gonna make you a lot of money. Remember, you're just one trade away. Mwah. So you're broke, but you want to get funded with large prop firm accounts like $100,000 or even 300k accounts, so that you can eventually make at least $10,000 per month from trading. In this video, I'm gonna help you get there. But first, I need you to stop spending your hard-earned money on large account challenges. How many times have you bought a challenge with your monthly salary and then ended up failing in the phase 1 of the challenge? Listen, I'm gonna show you a much better way to get your first big funded account without spending a lot of money. So if your goal is to get funded with 100k on FTMO or my Forex funds or any other prop firms out there, but you don't have a lot of money to start to spend on, right? I will show you the exact step-by-step guide to turn $49 into $300,000. The first step is to develop your winning trading plan. So to become a successful trader, all you have to do is to find the system, the strategy, the setups that work, and get rid of all the other trading setups that do not work. So I need you to find a strategy that fits your trading style and your personality, right? Everyone is different. What works for me might not work for you because we have different personalities. We have different trading style. You might be a more aggressive guy who likes to look at charts all day. In that case, scalping is for you. But if you're like me, more calm and relaxed guy who gets stressed by looking at these candlesticks every single day, you might be more suitable for swing trading. So at the end of the day, this takes a lot of experimentation. You need to experiment with scalping, intraday trading, and swing trading and find out which trading style suits you the most, and then choose and follow that trading style. Next, you need to have a win rate combined with a solid risk to reward ratio that will make you profitable over a series of trades, not just one trade. A lot of traders think that all they have to do is to make a lot of money on one trade. Wrong. You need to make money consistently over the span of a few trades. So most successful traders, they have a win rate about 50%, alright? This is the average win rate of a successful trader. All the best traders I know, all the best traders you know, the average win rate is 50%, which means they win 5 out of the 10 trades that they took. Right? Out of 10 trades they take, they win 5, which means they win half of the trades that they take, right? So in this case, if you want to become a profitable trader, you need to aim for a higher risk to reward ratio. At least you need to have a 1:2 risk to reward ratio. At least, alright? If you have a 1:2 risk to reward ratio and you have a 50% win rate, guess what? This can make you profitable. So here's an example. Let's say that you are trading a $100,000 funded account, right? So 100k funded account, and you are risking 1% on each trade. So 1% would be $1,000, right? So your risk is $1,000. So your reward, which is 2 times of your risk. So your reward will be $2,000. Okay? So every time you lose $1,000. But every time you win $2,000. So with this in mind, same thing, you have a 50% win rate, which means you win 5 out of 10 trades, right? So let's say you lose 5 trades and you win 5 trades. So every time you lose $1,000, but every time you win $2,000. So let's calculate the net profit. So this is about $5,000. So you lose $5,000, right? But when you win, you made a total about $10,000. Pardon my ugly handwriting, please, but I'm just trying to get the point across. So after 10 trades, you made a total of $5,000. Even though you lose half of the trades. That is why in trading, you do not need to be correct. You do not need to be right all the time. You just need a solid win rate combined with a solid risk to reward ratio, and that is really like the key to risk management. So I will advise you to aim for 1:2 at least, alright? But you should always aim for 1:3 risk to reward ratio. This is my absolute favorite figure. My favorite risk to reward ratio, 1:3. That is how I trade. So all in all, you need to find a winning trading strategy and then backtest the trading strategy and document the win rate and the average risk to reward ratio over the span of 40 to 50 trades. After backtesting it, you should forward test it. So backtesting is to learn about the strategy. Forward testing or demo trading or paper trading, whatever you like to call it, is to learn about whether you can trade this strategy over the next 30 days. So I'll advise you to do this with a FTMO free trial, which brings me to the next point, the next step. So the next step is to use the FTMO free trial as a training ground to help you ensure that you are ready for the live funded account challenges. So when you are trading this FTMO free trial account, you must execute the trade whenever you see confluences every single time without any
hesitation, which means that you need to follow your winning trading plan religiously, day in and day out. So once you learn about this strategy, you will be able to find out the trade setups that work and those that do not work. And I want you to take note of those trades that work and put it inside your winning trading plan. And then from now on, you should only be taking the trade setups that is from your winning trading plan. So now I want to show you an intraday strategy that I use to pass many of my funded challenges, and it is purely based on simple price action. So this is a trade that I took recently which played out really well. So this is what I like to call the A setup. Alright, so right now, before I do anything, I always make sure I do my top-down analysis, which means to analyze the charts from the higher time frame. Because remember, the higher time frame is king, right? Price move much more heavily on the higher time frame. So you should always make sure you focus and prioritize the higher time frame. So right now we're in the daily time frame and we see that price has literally came back down to retest this area right here, this strong support area that we have drawn. Previously it was a resistance area, but now it has broke through it, come back down to retest it, and now it has become your support area. So the moment price retested this support area, I'm going to be looking for my entry. Alright, so that's when I'll go down to the 4-hour time frame to look for more of my confluences. And I can see there is a double bottom being formed right here. 1, 2. Double bottom being formed right here. So that's my first confluence for me to enter for the trade, right? And in this case, I can also use my moving average, my 8 and 14 EMA, right? So at some point of time, somewhere right around here, I will have entered for my buying position when I see the moving average cross over. So my first confluence would be this double bottom being formed right here. My second confluence would be this moving average crossover. So my third confluence could be some sort of candlestick patterns, which I like to look for in the 1-hour time frame. So once I'm at the 1-hour time frame, I see that somewhere right around this area where the moving average has crossed over, price gave me this gigantic, huge, bullish engulfing candlestick, which shows there's a lot of momentum, a lot of buying pressure pushing the price up. So at this point of time, I got my 3 confluence. I will enter for a buy right here. So in this case, I'm going to be placing my stop loss below this last higher low right here, and go to my 4-hour time frame. You can see this is the last higher low, right? So I'm going to be placing my stop loss below it. And for my take profit, ideally you want to take profit at the next key level. And if I zoom up to the daily time frame, I see that my next key level would be right here, right? There's a key level right here. Okay, this is the next key level. And then the next key level after this key level is this one that we have right here, this 2060, this ultimately strong key level, right? So these two are the key levels that I'm going to be looking to take profit. Right, so I can either take profit right here at this key level or even take profit all the way up here. And I'm going to be placing my take profit all the way up here because I know that price has already been making like a very nice steady uptrend. Price has already created market structure, higher highs, higher lows. Now most likely it's going to get pushed up to the next major key level, which is all the way up here. And in this case, you can even draw like a Fibonacci from here till here, point A, point B, and you can see price retrace to the 61.8 level, and it's about to launch up to the negative 27 extension somewhere right around here, or even all the way up here at this midpoint between the negative 27 and the negative 61.8 level. So in this case, this is how I'll just hold the trade. I end up holding this trade for like quite long. I believe it was quite long. And I'm holding a trade for, was it 1 month? I forgot how long it was, but it was pretty damn long. So this was more of like a swing trade, right? So I ended up holding the trade, and you can see price ultimately went up to smash out, take profit, and this was like a 2,000 pips trade, right? 2,000 pips trade. So this is more of a swing trade already, right? This is past an intraday trade. But if you wanted to make this an intraday trade, you know, get in and out within the day, what I would have done over here is that instead of taking profit all the way up there, I would have entered right here. I would have entered somewhere right around here, right? And then just get out at the next key level, which could be right here, this next nice resistance area right here. This is where I would have gotten out. Or I would have even entered for a buy like somewhere right around here, where price gave me multiple confluence and take profit at the next key level, which could be right here, right? Next key level right here, this mini resistance area that we have right here, right? So depending on the trading style, like I said just now, whether you're a scalper, intraday trader, or swing trader, this strategy is gonna work like differently. So you have to always make sure you adapt and find out what works best for you, right? So in this case, if I'm choosing a more intraday approach, I'm gonna be going down to like this 15-minute time frame to look for my entry.
Go down 15-minute time frame, look for my entry, and I see the price has been consolidating at this support area right here. I'm waiting for some sort of break of structure, so to speak. You can see price consolidating, and over here price broke out of this consolidation, coming down to retest this consolidation, and gave us this huge bullish engulfing candlestick. So the moment price broke out, coming down, retest it and go back up, right? There's a break of structure, and I could easily enter for buy right here. Also got my moving average crossover, and just take a quick scalp all the way up to this area that we have right here. Something like this, right? This would be more of an intraday trade for those people who like really want to intraday trade during the FTMO challenge. So like I said, this is all just based on pure, simple price action, nothing too complicated, right? And I'll show you two examples. One is an intraday trade and one is a swing trade. And since these traded setups work, I'm going to put these trade setups into my winning trading plan. So the next time I see any of these trade setup, I'm going to be executing the trade without any hesitation, because I know for a fact that they are going to work. So the next step is to buy a 5K or two 5K funded account challenges from my Forex funds. Listen, if you cannot pass the FTMO free trial, you won't be able to pass the paid challenges from my Forex funds. So there's no point jumping straight to getting a funded account from my Forex funds when you can't even pass the FTMO free trial. So after you buy a 5K funded account challenge from my Forex funds, use and follow the winning trading plan like what you have done for the FTMO free trial, and take trade setups that work. And then once you have passed the challenge and you have made some profits from the payouts, use the profits to buy one 50K funded challenge account. And then just repeat the same process. Use the payout that you earn from your 50K funded account to buy either a 100K account, or even a 200K account, or even a 300K challenge. So the whole point here is to start with $49 to get your first small little funded 5K account. And then everything you make after that is just pure profit that you are earning based on your skill level. And just think about it, if you lose $49, you probably won't sweat, because that's the price of eating out at a nice restaurant, or it's even cheaper than your gym membership. And scaling from a 5K to a 50K to a 300K account is much more easier on the psychology, and you will give yourself time to improve your trading performance at the same time. Now, before you start doing this, you must understand two core important principles. Number one is to focus on the process, not the money. I know I talk about this a lot of time, but this point is really goddamn important. You need to be patient and remember that at each stage you are learning, you are improving, you are literally building confidence in your ability to trade. You are becoming a master at trading and learning how to manage prop firm accounts properly, correctly. And once you learn how to manage these accounts correctly, the sky is your limit. You'll be able to stack accounts on top of each other, and then if you can do this consistently, correctly, you will potentially be making $100,000 a month from trading. So let's say that you are making 5% monthly from your funded account. So on a $5,000 account, and you make 5%, that will be a profit of $250, right? Small amount of money. But if you think about it, you get your 50K account. So you get a 50K account and you make 5%, that will be $2,500 on your account. And then eventually you keep on scaling up and you are trading a 300K account. And 5% of 300K will be $15,000, guys. $15,000. When you finally make 15K from your funded account, you'll be glad that you were disciplined enough to follow your trading plan and put in the work to develop your confidence and mental toughness to trade the larger accounts. Trust me guys, it's coming. Just continue to put in the work and remember, I'm rooting for you. And if you keep going and scale up, one day you'll be managing $1 million in funding. And if you make just 10% of that, that will literally be
$100,000 in 1 month. 100K in profit in 1 month. That's absolutely bonkers, mate. Next, I'm gonna briefly explain how I trade during each phase. Phase 1, Phase 2, Phase 3, right? The risk management behind it. Risk management is really the key when it comes to getting funded by prop firms. So for those people who are still watching this is my secret for you. So for phase 1, this is your first phase, and this is what we call the evaluation phase, right? In this phase, you need to get like a profit target of about 8%. So this is the phase where I'll go a little bit more aggressive, which means I'll risk about 2% to 3% on each trade, right? On each trade that I took, I'm going to be risking about 2 to 3%, right? I'm going to be going a little bit more aggressive on the phase 1 because you have a higher profit target. Now for phase 2, this is where it's the establishment phase. It's the phase where they know that you can trade, but they really want to confirm that you are able to do this for the long term, right? For the long run, you are able to become a consistently profitable trader, not just for 1 month, but for 2 months, 3 months, 4 months, 5 months. So for the establishment phase, the target is about 5%, right? You have to reach about 5% in like 1 month, right? During this entire phase. So in this case, you can chill a bit. That's how I like to do it, because it's literally 5%, right? 5%. So you can risk about 1% to 1.5% on each trade, right? Oh, that's how much I'll be risking during phase 2. About 1% to 1.5% on each trade. And then phase 3 is when you can finally unlock your funded account. You can finally actually get like a funded account, like a live funded account, not just some demo funded account in your evaluation and your establishment phase, right? So for phase 3, when I get my funded account, I'm going to be risking about 0.5% per trade. Alright, why am I risking only 0.5%? So that I can get my first withdrawal and my refund for the challenge that I paid. Right, once I do this, I have like a safety net, and all the other money that I earn from this account is just pure profit, right? It's just pure profit. So your first goal should be to get your first withdrawal and get your refund for the challenge, so that you can like risk free, so that you're risk free right now, and all the other profits that you earn from this account from now on is just pure profit. And with this, it will really help with your psychology, because now you know that, okay, none of my hard-earned money is on the line. Everything that I'm gonna earn from now on is just pure profit. If you want to find out exactly how I trade and my winning trading strategies that will definitely help you get funded, you can consider checking out the Trading Blueprint course. Link in the description. And smash on the like button if this video have helped you guys out, and hit on the subscribe button, because we are posting useful trading videos like this every single week. Alright, so hit on that subscribe button, baby. What are you waiting for? And if you want to learn more about getting funded, this video is for you. Watch this video next, and remember, you're just one trade away. Mwah. I'm not gonna waste your time like all the other finance gurus out there who make videos of them in a mansion, in a Lamborghini, and yet they do not show you their live account. You watch hundreds of videos by these finance or trading gurus, and yet you are still broke, which means that these videos clearly do not work. By the end of this video, you'll learn exactly how to get filthy rich from trading, because I'm going to show you the exact step-by-step guide that I took to get to where I am right now. And most gurus will probably charge you $5,000 for this knowledge, but I'm here to give it to you for free. But there's one thing that you need to do for me. There's this one thing that you need to do if you want this video to work for you, which is you need to be focused. You need to be hyper focused. It hasn't even been 1 minute and you're already distracted by scrolling down to the comments and seeing what other people say, or checking your Instagram, scrolling through your Instagram feed. Am I wrong? You cannot become rich from trading if you cannot focus. That's just the truth. So I really want you to make eye contact with me right now and treat this video like a lecture, from a master to a student, from a mentor to a mentee, and take down notes and learn and really absorb what I'm about to say. And by the way, I've literally written a 2,000 word ebook on how to become a profitable trader, like literally a complete guide, and you can get it in the description, link in the description. Just click on the link in the description and you can just download the free ebook, literally for free. Alright, so I'm gonna become a millionaire this year. Let me repeat myself. I am going to become a millionaire this year. No, I am.
I will become a millionaire this year. And the truth is, a few years ago, I was dead broke. Imagine being so broke that your family cannot even afford a pair of Adidas sneakers. I still remember when I was a kid, I always wanted those Adidas sneakers, like those classic sneakers that my friends will have. And I will ask my parents to buy it for me. Hey mom, can I get these $100 Adidas sneakers? And she always said no, and we always end up going to the wet market to get some cheap $20 shoes. Imagine being that broke. At one point of time, I literally had negative $20 in my bank account. Negative $20. And I would literally used to go clubbing and party until like 3 a.m. And I remember that there's this one day, not one day actually, all of those times where I went to club, I could not afford the taxi home. So I will party until like 3 a.m. and then I will just end up sleeping on the bridge with a bunch of other degenerates until like the next morning. Then I will take the train home. That was how fucking broke I am. That was how pathetic and miserable I am. Now, before you do anything, if you want to get rich from trading, the first step is to set clear goals. Success comes from productivity. Productivity comes from following a clear and defined plan. And following a defined plan comes from having a clear goal. So it all comes down to having a solid goal in mind. Why do you want to get rich from trading? Why do you want to become a profitable trader? Why do you want to become rich? It could be for your family. It could be so that you can travel the world. It could be for your children. It could be for your parents. You want to retire your parents. That's how I started. I started trading because I know that I want to get rich. And why do I want to get rich? Because I wanted to retire my dad. Not because I wanted to travel the world or all that crazy shit, but just because I wanted to retire my dad. Simple as that. So by having a strong why in mind, it will allow you to keep going when the times get tough. Because trust me, when you are trading, you're going to lose a lot of money, and there's going to be a lot of times that you're going to feel like giving up. You're going to feel like, you know what, trading is not for me, man. It's too hard to become a successful trader in trading, so I might as well like go try drop shipping or affiliate marketing or some shit. Or crypto. There's going to be times like this where you will literally feel like dropping everything and just say fuck it and quit trading. And at those times, if you don't have a clear why, if you don't have clear goals in mind, you will succumb to the monkey mind. You will quit. But if you have clear goals, if you have set clear goals, if you have a clear why in mind on why you are doing this, you will keep pushing on. And remember why you started in the first place. Let me ask you a question. What would happen if you do not quit? If you do not quit trading and you keep pushing? Right now, if I close my eyes and visualize, it'll be traveling the world, right? I'll be traveling the world. I'll be having freedom, like time freedom, location freedom, financial freedom. I'll have all types of freedom. I'll be free to do whatever I want, whenever I want, with whoever I want. I'll just be free. And that's a very beautiful feeling to have. So yeah, like just think about why. And right now, I want you guys to literally write down your goals, right? I don't care how lazy you are, write down your goals, right? I literally have like a paper right in front of me right now on the wall that's pasted that says my goals for 2023, which is 1 million subscribers and make $1 million and launch my course and other stuff on there, right? Those are literally my goals, my clear and defined goals on paper, and I've pasted it on the wall so that I can look at them every single day. Make your goals your wallpaper. You can literally set it as your wallpaper as well. So I literally want you to take some time out to write down your goals. It could be short-term goals, it could be long-term goals, right? Maybe short-term goal could be you want to make $100 per week from trading. Or long-term goal could be you want to become consistently profitable. you want to retire your parents, you want to quit your job and just pursue trading full time. All of these are goals that you can put it down on paper and it will keep you on the right track. Right, so write down your goals, right? Short-term goals, long-term goals. And I kind of like to think I kind of like to think of my life as like 5-year crusades. So 5-year crusades are basically like thinking in your life in terms of the next 5 years. What are you going to do in the next 5 years? So right now, if you think about what your life is going to be in the next 5 years, you make all these short-term suffering, short-term losses of you blowing your accounts and accounts after accounts mean nothing. All of these things will mean nothing because you know that in the long run, and then 5 years later, you will become profitable and you will achieve the dream life that you have always wanted to achieve. So, for real, the first step, very important, is set clear goals, right? You need to have a clear goal in mind. You need to have a clear direction in mind. You need to have a clear destination. If you are jumping into a car, you need to know where you are going. You need to have a destination in mind, right? So, yes, at some point of time, you should focus on the process, but you should also have a goal in your mind, right? So that's the first step. The second step, or rather the next thing you need to do, is to rewire your brain. Well, the statistics are like 90% of traders are losers. They are not profitable. So only like the top 10% or top 5% of traders are consistently profitable. So how do you get to the top 5%? If you think about it, 90% of the traders are losing. And if you're following the advice of the majority, which is like, selling at resistance, buying at support, all that majority stuff, it's not going to work because 90% of traders are losing. And guess what? They are following what the majority is following, which is this mainstream advice. So what you need to do is to rewire your brain instead. You need to start thinking like the top 10% of traders. You need to start trading like the top 10% of traders and do what's opposite of the majority. So if the majority is buying, guess what you should be selling? The majority is selling, you should be buying. Be fearful when others are greedy. Be greedy when others are fearful. So rewire your brain and get rid of all the useless information that you have absorbed and start learning and adopting the useful information. What I mean by that is that, let's say you go onto YouTube and you see a lot of different trading strategies out there. Trust me, some of these trading strategies will work and some of these will not work. And chances are you need to get rid of those strategies that do not work if you have learned them in the past. Right? It could be using a shit ton of indicators on your charts. Guess what? That do not work because you need to focus on price. Focus on what price is doing, price action. So it could be right now, you know what? I'll just get rid of all my indicators and focus on price action because that is ultimately what works. What's proven and back-tested to be working? Price action. So ladies and gentlemen, rewire your brain because that is how you can become profitable. Next, the third step is to develop other income streams. Right? So when it comes to trading, you need money to make money. Alright? That's just the truth. Money does not just come from thin air, right? You can't just generate money from thin air. No, it's not possible. You need money to make money in trading. So the more money you have in your trading account, guess what? You have more room to play with, and that means that you can make more money. Does that make sense? Let's say you have a 100k account compared to having a 10k account. On a 100k account, you can use a standard lot size. On a 10k account, maybe you can only use a 0.1 lot size, depending on the leverage, right? But this means that if you can make much more money on a 100k account compared to a 10k account. That's why in trading, you need money to make more money. More money, more money, more money. And the only way you can make more money is by having other income streams outside of trading, right? So how I develop my other income streams is by starting my YouTube channel, my mentorship, right?
All of these things has literally helped me to act as an additional income stream on top of trading, right? So I will use the money that I earn from these other income streams and pump it into my trading account so that I can make more money, right? I'm not gonna sit here and lie to you and say that, oh, my mentorship is so that I can give back to the community and I really enjoy teaching others. Yes, I enjoy these things. But another thing is that it acts as an additional income stream, right? It acts as an additional income stream for me, right? Yes, I love teaching. Yes, I want to give back to the community. But yes, I also want an additional income stream. So 100%, you need to develop other income streams, right? And these income streams allow you to generate money that you can put into your trading account. Because if you only have $100 in your trading account, guess what? You're not gonna make much. And if you are broke and you only have like $200 in your bank account, you should not be putting that $200 in your bank account into your trading account, because you will lose that money. Trust me, you will lose that money. The only way to get rich from trading is to have a larger trading account. How are you going to make millions from trading if you only have $100 in your account? That is absolutely unrealistic. So you need to focus on building your income, right? Increasing the amount of money that you are earning. You could be working at a 9-to-5 job, or you could have a side hustle to help you generate the income. Once you have disposable income, money that you can play with, money that you are okay with risking or losing, put it inside your trading account, right? Not by putting every single bit of money that you have left in your bank account into your trading account, because that will just cause you to blow your account. And when you blow your account, guess what? You are bankrupt. You are brokey now. Now what if you are broke? Now what if you have less than $1,000 in your bank account? What if you don't want to risk your hard-earned money and put it inside your trading account? What you can do is to get funded, right? Get funded by a prop firm, right? So there's a lot of prop firms out there, My Forex Funds, FTMO, which will literally offer you a 100K account or 200K account or 50K account, and in return, you give them 20% of your profits and you keep 80% of the profits or something like this, right? There's a profit split. So this funded accounting, prop firm thing is very, very useful for those people who do not want to spend a lot of hard-earned money into trading, who have like less than $1,000 in their bank account. Guess what? These funded account programs things, they are perfect. They're built for you, alright? They're built for you. But listen, you should not be getting funded unless you have a profitable, proven track record on your demo account. So if you're trading a demo account and you are still not profitable, there is no use getting funded. And when it comes to getting funded, it's actually quite hard to pass the challenges, the different phases, right? Because you need to have like you cannot have more than 5% drawdown, and you need to hit a profit target of 10% or something like this, right? There's a lot of rules when it comes to getting funded. And the whole point is you need to have solid risk management. The only way you can get funded is to have solid risk management. So if you want me to do like a full guide on how to get funded, comment down below as well. And just now, like I said, it takes money to make more money in trading. So if you only have like a small trading account, there is no use trying to flip that small account into $1,000 or even $10,000. You need to rather invest that amount of money that you have into getting a funded account. You can get a 50K account, you can get a 20K account, and this will allow you to play with more capital and allow you to practice your risk management, and this will allow you to make more money, right? Imagine trading a 20K account compared to trading a $200 account. Guess what? On the 20K account, you can potentially make much more money and sustain in the long run. Now, let's say that you have made money from trading, you have made money from your funded account, and you have developed other income streams, and now you're making money. You're making profits here and there. You are balling out. What should you do with this excess money? You should reinvest back into trading or reinvest back into your business. My advice for you is that do not buy stupid shit like Gucci or branded shit just to impress people who do not care about you, who you don't care about. You should instead spend money on making your life more pleasant and easier.
So the priority should always be to spend money on improving the quality of your life before all this materialistic bullshit. So I will advise you to reward yourself by improving your equipment, by making your office nicer and improving your quality of life, because like you'll be rewarding yourself but doing it in a way that is like tax efficient, because you can business expense it, and it also makes you want to work more and work harder. So it acts like an extra motivation for you. Example, invest in a MacBook, or invest in a nice camera if you're a YouTuber, or invest in a nice microphone. All of these things help you to feel more productive and help you to feel more motivated to do your work, and that in return make you more money. And if there's one thing I love to spend my money on is experiences, right? I like to spend my money on experiences. That means traveling the world, seeing how the different cultures of the different countries are like, and just looking at different sceneries, right? Different sceneries, it could be mountains, it could be seas, it could be city view. Just looking at all these different sceneries just excites me, right? Brings out the inner child inside me. So what I can also do is to just invest in these experiences to make your life much more better, to make your life much more rewarding and much more fulfilling. And like I said, do not be stupid and spend your money on some stupid materialistic bullshit like Gucci, freaking Louis Vuitton, all that stupid bullshit just to impress people that you do not like, alright? Now these are just a few things that have actually made me rich from trading. But if you want a complete step-by-step guide on how to become a profitable trader from scratch, that means like what you need to learn and what you need to do, how should you trade on a demo account, all of this stuff, I've literally give you a step-by-step guide, a 2,000 word guide, ebook on the path to becoming a profitable trader, how to build wealth from trading, which you can get in the description below. So click in the link in the description to get access to my free ebook that I've literally spent a lot of time working on. And the truth is, to do all this, to get rich from trading, you need to get on monk mode. And I'll be doing like a full guide on it. So if you want to see that video, just comment down below and let me know that you want to see it, and hit on that like button if you've enjoyed this video and you've learned something from it. Now you definitely want to watch this video where I literally explain to you how to become a millionaire this year, right? I literally give you a full guide just like this on how to become a millionaire. Click on this video right here to watch it, because trust me, you're gonna enjoy it. And remember, you're just one trade away. You will not become a profitable trader if you do not master proper risk management. Risk management is one of the most important things you must know when it comes to trading. It's one of the most important factors that is required to become a profitable trader. So I want you to take out a pen and a paper right now and get ready to take down some notes, because I'm literally giving you the keys to becoming a successful trader. So when it comes to risk management, it's actually very simple, as it only boils down to 4 factors, right? Firstly, we have risk capital. Secondly, we have risk per trade. Thirdly, we have risk to reward ratio. And lastly, we have your maximum exposure. I'm going to take out some time right now to explain each one of them in depth for you guys. So firstly, let's look at risk capital first. What is risk capital? Risk capital is basically the amount of money you are comfortable losing. And if you lose it, it will not greatly affect your financial situation. So a lot of traders often ask me this question: how much money should I deposit into my account? And my answer is always the same. You should only deposit money you can afford to lose. So it's actually different from everyone. For me, it could be $100,000. For you, it could be 10,000. Or for John, it could be $100, right? Basically, you should only be depositing the amount of money that you are okay with losing. You must go in with this mindset that whatever money you deposit into your life account is gone, alright? It's gone. So I would advise you to ask yourself, how much of your total net worth would you be comfortable losing? Example, let's say that I'm comfortable with losing 10% of my net worth. And let's just say that my net worth is $10,000. So if I'm comfortable with losing 10% of $10,000, that means that I am comfortable with losing $1,000. So this is the amount of money that I'm okay with losing. So I'm gonna deposit
$1,000 into my live account, not more. Alright, not more than $1,000. I can deposit $500, $600, whatever it is, but you cannot deposit more than the amount of money that you are okay with losing. Meaning that if you need this money to pay your rent this month, or for your daily expenses like food and traveling, transport, or is your emergency fund, do not deposit it into your live account. Alright, you need that money. You need that money to survive. So you should not be depositing that amount of money into your live account. And also, ladies and gentlemen, if you risk too much of your net worth, it actually messes up your psychology and will cause you to actually lose money. Let's say that right now, same example, my net worth is $10,000, and instead of risking 10%, I risk maybe 60% of my net worth. So I deposited about $6,000 into my live trading account. See, 60% of my net worth is inside my live trading account right now. And today, I start taking a few trades in a row. It turns out I lose a few trades and I end up blowing that account. So now that I blew that account, guess what? 60% of my net worth is gone. I'm only left with 40% of my net worth. It's actually linked, because when you deposit a large amount of your net worth into your trading account, you have this mindset that now you must win every single trade, because your every last stroke of money is on the line. So you will try to force trades. You will take trades even when there is no opportunity. And the worst thing you should do is to deposit every single bit of your money in your bank account into your trading account. I've made this exact same mistake in my first year. In my first year, I remember I was trading. I remember I had like maybe $500 or even $100 left in my bank account, and my goal was to like flip it to $10,000 or even $1,000 just to cover my daily expenses. It was the last drop of my money in my bank account. So the only $100 left in my bank account, I deposited into my live account, and I ended up losing that $100 because every single day I was just looking at the charts, looking for opportunities to trade. And even when there is no opportunity at all, I still take trades. And this causes me to take a lot of stupid trades without thinking through. A lot of stupid trades, as the saying goes, stupid trades equal to losing money. Alright? So I ended up just losing that last $100. So I ended up broke for the entire month. So that is a lesson that I learned the hard way. So make sure you guys take this time out to really think, okay? Think about how much percentage of your net worth you want to put inside your trading account. How much percentage are you willing to lose, right? Are you comfortable with losing? It could be 5%, 10%, or even 1% of your total net worth. And then go ahead and put that capital into your live account. And that is what we call the risk capital. The risk capital. By the way, guys, if you find this boring right now, you should wake up, alright? Because this is very important. This is very fundamental for your trading success, alright? So right now, I'm just going to go through these concepts on risk management with you, and then later, then I will go on to the charts and try to illustrate some examples. So if you are looking for charts, be patient and master these concepts first, and then later I will go through the charts with you guys. So the next thing I want to go through is your risk per trade. So what is risk per trade? Risk per trade is basically how much money are you willing to risk on each trade, every single trade. So this depends on whether you have a high risk tolerance or a low risk tolerance. So once again, it differs from everyone, right? For example, I might be a risky, a more adventurous guy, so I'll risk a higher percentage of my capital. And you might be a low risk kind of guy, like a play safe kind of guy who like to invest in those like safe dividend stocks. In that case, you should risk lesser money. So the general rule for risk per trade is to risk 1% to 2% of your total account on each trade. For me, I personally like to risk 0.5% on each trade, or sometimes even 1%. Right, so this is just how I like to trade, because this allows me to have much more room for error, meaning that I can lose a few trades in a row and I'll still not blow my account. So let me give you an example on this man named Andrew. You can see this derpy looking guy. This man is called Andrew. So Andrew risked 25% of his total account on each trade. right? Because he wants to get rich quick from trading fast. He wants to become a millionaire trader this month. So he's trying to flip his small account to become a few $1 million. Of course, to make money fast, you must risk a lot of money so they can get back a lot of money in return. That is exactly why this stupid ass man start risking 25%. So he start taking his first trade and he end up losing it. And now he is down 25%. He lost 25% of his account. And then he started taking 3 more trades. Okay, so he started taking 3 more trades and he lost all 3 of them. Minus 25%, minus 25%, and also another minus 25%. So he just lost 4 trades in a row, and every time he loses 25%. Which means he lost a total of 100% and he just blew his entire account just because he lost 4 trades in a row. Right now, when you are watching this, you probably think that Andrew is stupid and ignorant. He should have risked lesser. But when you're put in the same situation, you have done the same exact mistake. Just think about it, when you started trading, you also tried to risk a lot of money because you want to get rich quick fast, right? And you end up blowing that account over and over again. This is exactly why it is very, very important that you stick to the risk parameters of 1% to 2% per trade. So let's say right now, instead of risking 25%, you risk 1% per trade. If you risk 1% per trade, every time you lose 1%. So you can lose 100 trades in a row before you blow your entire account, right? You can lose 100 trades in a row. That is a lot of room for error. So like I said, once you have determined your risk per trade, then you can go on and calculate what is the correct lot size to use. So once you calculate the lot size, it depends on 2 factors. Number 1, your stop loss distance. And number 2 is your risk per trade, right? So based on these 2 factors, you're able to calculate a lot size and you already have your risk per trade, right? After you think that, okay, you know what, I want to risk 1% on each trade. Now, that is your risk per trade. So for your stop loss distance, it depends on the particular trade that you take, right? So let's say you take this trade today and your stop loss is 30 pips. Then yeah, the stop loss distance is 30 pips. So once you get these 2 factors, once you find out these 2 factors, that is when you can go and calculate your lot size using a position size calculator. So you can just go Google position size calculator and yeah, you can just come up to this page. So let me give you an example on a trade. Let's say that today I decided to trade Euro USD and I want to enter for a buy because I start seeing price creating a higher low right here. So I go down to the, let's say, the 15-minute time frame to look for my entry. So once I went out to the 15-minute time frame and I decided that I want to enter for a buy here. So if I'm entering for a buy here, I'm going to be placing my stop loss below this higher low. I'll place my take profit at the next key level, which is somewhere right around here. You can see in this example, this trade right here, this stop loss is 58.3 pips. So this is my stop loss distance, right? 58.3 pips. So I will go to my position size calculator that I have and just input the numbers. So you can see currency pair, choose Euro USD because we are trading Euro USD. And then the account currency, it depends on your trading account, what currency it is. So for me, USD. So for the account size, I'll put $10,000. So let's say that I'm Andrew and I'm trading with 10K, alright? I'm trading 10K. And the risk ratio is how much money are you risking per trade, right? If you want, you can put money, or if you want, you can even put risk percentage. I prefer to put risk percentage. So I'll put 1%. I want to risk 1% on each trade. And my stop loss, remember the trade that I just took, the stop loss is 58 pips. So I'll put 58 pips. So once I place the calculate button, it literally does all the calculation for you, right? You'll see that, okay, sizing you should be using is 0.17. So right now, this is the correct lot size that you should be using. You should not be using a lot size that is bigger than this if you are following your risk management plan. So go on to your MetaTrader 4 and before you enter for the trade, go and change the lot size to 0.17 and then enter for a buy. Let me repeat that. You calculate your lot size first and then you enter for the trade. It's not the other way around. A lot of beginner traders, they enter for the trade first by using a stupidly high lot size and then they end up realizing that that's a huge mistake. So make sure you calculate your lot size first before you do anything and then you enter for the trade. So let me give you another example. Let's say that right now I saw that price is at this support level and once again I want to enter for a buy right here. So I enter for a buy right here and then I want to take profit estimated somewhere right around here, and this time I'll place my stop loss below the support level. So in this case, my stop loss is 15.7 pips, so I can just put that down right here. My stop loss distance is 15.7 pips. And how much is my risk per trade? My risk per trade, how much money am I risking per trade? So my risk per trade could be maybe I'm the risk 1% of my account on each trade. So 1% of $10,000 would be $1,000. So I'm risking $1,000 on each trade with a stop loss of 15.7 pips. Now that I get these two factors, I can go on to calculate my lot size. And how do I do that? Go on to the transition size calculator once again. So in this case, I'm trading GBP USD. So let me find where is GBP USD. Right here. And now I'll put account size, same thing, I'm trading with 10k in my account and I'm risking 1% of 10k, which is $1,000. And this time around, what's the stop loss distance? Let me go check again. Is 15.7 pips, right? So 15.7 pips, I'll just round it up, put 16 pips, okay? 16 pips. And press the calculate button and you can see it does the calculation for you, as simple as that. 0.63 lots. You should be using 0.63 lots. So now go to MetaTrader 4 and change it to 0.63 lots. That is how you can calculate the correct lot size that you should be using. So stop asking me what lot size should you be using, because it really depends on these two factors, your stop loss distance and your risk per trade. And your risk per trade depends on your risk tolerance. Now the third factor I want to discuss is your risk to reward ratio. So what is your risk to reward ratio? Your risk to reward ratio measures how much your potential reward or return is for every dollar that you risk. So let's look at this diagram right here to further understand risk to reward ratio and the importance of having a solid risk to reward. So you can see in this example, if your risk to reward is 0.5, meaning that you are risking 1% to make 0.5%. You are risking $1 to make $0.5. You will need a total of 70% of winning trades to cover the expenses of your losing trades. This means you need to win 70% of your trades, 7 out of 10 trades, just to break even. Okay, just to break even. Now, that is a very, very high win rate, and I would say that that is a very, very hard win rate to get, to achieve. I can honestly tell you that professional traders, they have a win rate of about 50% or sometimes even 40%, right? And to get 70% win rate, you are saying that you are better than most professional traders. So I wouldn't say it's impossible, but I'll say it's very hard to achieve. Now, next, your risk to reward. Let's say that you are taking a trade and you are risking 1% just to make back in return 1%. So you're risking $1 to make $1. So in this case, you need a total of 50% win rate. So you have to win 5 out of 10 trades. And like I said, this is the win rate of professional traders. And once again, it's pretty hard to achieve. So why not make your life easier and adjust your risk to reward ratio rather than win rate, which is something that is very, very hard to adjust. Now this is exactly why I trade with a minimum risk to reward ratio of 1:2. If you are trading with a 1:2 risk to reward ratio, that means that you need a total of 35% win rate just to break even. So out of 10 trades, you only need to win 3 or 4 trades just to break even. And I can honestly tell you that is much more possible. That is much more realistic for us, for you retail traders. So I would advise you to stick to a risk to reward ratio of at least 1:2. And if it's less than 1:2, do not take that trade. Okay, the higher the better. And I would kind of advise you to aim for 1:3. So how you figure out your risk to reward is to set your stop loss and take profit first, put it at just the tool and set your stop loss and take profit first, and then calculate your risk to reward ratio. And then you can assess your trade outcome and make better trading decisions for the next trade. So let me show you some examples of charts. So using back this same example on GBP USD, let's say that I enter for a buy somewhere right around here in the middle. Okay, enter for a buy here, and I'll place my stop loss below the support level, and I'll place my take profit and this next resistance level right here. And you can see in this case, my risk to reward ratio is 1. That means I am risking 1% to make 1% back in return. Just think about it. If you are risking money, do you want to get back in return the same amount of money that you're risking? No, that is absolutely stupid, because you want to get back in return double the amount of money or even triple the amount of money that you are risking so they can actually make more money, right? Now, using back the same scenario, instead of entering or buy right here, let's say you entered earlier, you got a sniper entry, you entered somewhere right around here when you start seeing price reverse from this support level. So once again, you place your stop loss below this support level and you place your take profit and all the way up at the next key level right here. And you can see in this case, your risk to reward ratio has now become 4.56. So you are risking 1% to get back in return 4.5%. You are risking $1 to make $4.5. And I can honestly tell you that it's much more worth it. So I will go ahead and take this trade. But I will never ever take a trade if the risk to reward ratio is less than 2. Okay, if it's less than 1:2, I will never take that trade. So if it's like 0.98, no go. Alright, if it's 1.68, no go. It has to be at least 2 for me to take that trade, because ultimately I want to get back in return twice or double the amount of money that I am risking. So the last concept that I want to cover for risk management is this thing called your maximum exposure. So this is more of an advanced topic to talk about. So maximum exposure is basically an overall amount of money that you are willing to have at risk at any one time. So you can only find out your maximum exposure after you have figured out your risk per trade. So make sure you figure out your risk per trade first and then figure out your maximum exposure. So maximum exposure is basically determined by the number of trades I can be in at any one point of time. So let me give you an example. Let's say once again, this man named Andrew, he decides to risk 1% per trade. Okay, he risks 1% per trade. And let's say his maximum exposure is 5%. This means that he can only be in 5 trades at any point of time. So how I got 5 is by taking 5% and divided by the risk per trade. So take the maximum exposure and divide by risk per trade. This shows me how many trades he can be in at any one time. So knowing this, Andrew, he cannot be taking 6 trades at the same time, alright? He should be only taking a maximum of 5 trades at any point of time. So yeah, for my maximum exposure, I like to keep it at 5%, and I will recommend you to keep it at 5% because you should never ever risk more than 5% on any single trade. So that's a very good, nice number to have. So like this video if you have learned something, and hit on that subscribe button for more free trading courses just like this one. And click on this video right here to find out the strategy that I use combined with this risk management strategy. It's gonna be insanely powerful. So click on this video to find out more. And remember, you're just one trade away. Mwah. You will finally understood smart money concepts after watching this video. So in this video, I want to simplify smart money concepts in a way that even a 5-year-old kid can understand. Most of the information that you can find online is all about retail trading. Oh,
buy at support level.
if you search for how smart money and the big banks trade, you won't find much information about it. And today, smart money trading is probably one of the best kept secrets in the world of trading. And today, I want to reveal those secrets with you, to you. Once you learn how smart money trades, you can implement these concepts into your style of trading and make even more money. So let me explain to you some smart money concepts that you must follow so that you can finally become a profitable trader. So firstly, let's talk about boss or break of structure. So in an uptrend, price will be looking like this. You'll be making your higher highs and higher lows. Every time price breaks through a new high, this is what we call a bullish break of structure, or BOS, boss. So there's a break of structure here, there's another break of structure right here, and another break of structure right here whenever price breaks the previous high. So at some point of time, price will eventually lose momentum and start reversing in the other direction. And for this reversal to be valid, price has to break the previous higher low. So this is the previous high low and price has to break below it for it to be valid. So once this move has happened, this is what we call the choke, or rather a change of character, choke.
In order for this chart to work, we want this previous high to be an area of interest, like either a supply or demand zone or an order block. So the stronger the zone, the better it is, right? The better this chart will work. Once we have a change of character, the chart and an area of interest, your supply zone, we can expect price to reverse and start going down. And then as it starts to go down, it will create your lower highs and lower lows and lower highs and lower lows. And as price creates your lower highs and lower lows, it will also create your bearish break of structure whenever price break through a lower low. So when price break through a lower low, it creates another break of structure right here. So this is our bullish break of structure, and this is our bearish break of structure, and this is our change of character. And at some point of time, this downtrend will start losing momentum, like this uptrend right here, and it will start reversing back up, and this will create your change of character right here. So this is pretty much the whole concept of this smart money concepts, break of structure and change of character. For this strategy to work, we want the area of interest, this zone right here, this supply and demand zone, to be as strong as possible, because the stronger it is, the more likely the price will move in the direction that you want it to. Now, what do I mean by strong area of interest? There are two methods that you can use. The first method is what we call the liquidity grab at a supply or demand zone. Firstly, you need to identify a strong supply or demand zone on the higher time frame, like the 1 hour time frame or above. So the higher the time frame, the stronger the area will be. And what you want price to do is your liquidity grab. So what is a liquidity grab? A liquidity grab is basically a forced breakout, right? In this case, where price breaks through a recent high or low, does a fake out like this, and then reverses in the opposite direction. So the psychology behind this liquidity grab is that people will be entering for a sell when price breaks through the recent low, because this is the recent low, and when price breaks through the recent low, the sellers will be selling down because they think that this is a downtrend, right? So when they enter for a sell right here, they're going to be placing their stop loss above the last lower high, which is right here. So if price end up doing a false breakout and price actually comes up, it will hit all their stop losses, adding fuel to the fire and increasing the momentum, causing price to shoot up. So we can take advantage of this by entering for a buy position somewhere right around here and make money as price goes to the moon. The second method to find a key area of interest is by using order blocks. So an order block is basically an area where the smart money and big banks likes to enter and exit. So how do you spot order blocks? You spot order blocks by looking for strong reversals like this and this and this. You can see whenever price goes up here, it reverses down strongly, and when price come back down here, it reverses back up strongly. So this level right here and this level right here is what we call the order blocks. Now let's combine whatever that we just learned, and I'm going to show you a high win rate smart money trading strategy. So for this strategy, make sure that you are using a higher time frame, like the 1 hour time frame. The first thing before you do anything is that you want to mark up your key levels or supply and demand zones by finding where price is reversing or respecting. Right here, whenever price goes up here, it always collapses 1 time, 2 times, 3 times, 4 times. So this is a very strong supply zone, and I can draw another demand zone at this key support area right here. So now I'm going to show you this strategy on GBP USD, the Great British Pound against the US dollar. We can see that there's a support area right around this area here, because whenever price comes back down here, it always reverses, come back down, reverses. So you can see price has just been respecting this support level or demand zone, whatever you like to call it. And over here, price gave us a liquidity grab. So the first thing you want to look for is for price to give us a liquidity grab or a forced breakout at a supply or demand zone, which is exactly what price gave us here. Price broke through the support level, and then it just went back up. So this was a very clear false breakout, or what I like to call liquidity grab. Now you can even mark up your break of structure here, and the next thing you want to look for is a change of character. Price must make
a change of character after the liquidity grab. Do not take that trade if there is no change of character. So it's very, very important that you look out for a change of character after the liquidity grab. So I can spot a change of character right here because this is the last lower high before price collapse, and then at this point of time, this is when price has broken the last lower high, breaking structure, causing a change of character. Now next, when do we actually enter for the trade? We enter when there is a fair value gap. Now, what is a fair value gap? A fair value gap is when price goes up or down so fast that it doesn't give buyers or sellers enough time to enter the market. Therefore, it creates an imbalance in the market. So price will usually come back up or come back down to this fair value gap and reject it. And that is when you can enter for the trade. So you can mark a fair value gap by using a rectangle tool to mark the previous candle's wick before the big move and then taking the next candle wick after the big move. So right here, this will be your fair value gap. So there are bullish fair value gap, which is basically a big fat green candle, and there is also bearish fair value gap like this big red candle right here. So back to the example, you want to enter for a buy when price has came back down to our fair value gap. So in this example, I can spot a fair value gap right here. You can see right here there's a fair value gap, and right now what we want to do is to wait for price to come back down to retest this fair value gap. Then that is when we can enter for a buy. And the reason why I mark this as the fair value gap is that if you look towards right here at this candle here, price went up super fast, right? Went up super fast, gave us a big fat green candle. This candlestick wick, the next candlestick wick, and the candlestick wick before it, I marked up the entire box, giving us the fair value gap. So I want you to know that price can come to the middle of the fair value gap, reject it, and then continue going up. But at the same time, remember, price can do anything it wants. So price can also touches the fair value gap, which is like this area here, just touches it and just reverse and head back up. So if you were waiting for the price to go to the middle, you would have missed out on the trade. So ultimately, it's really up to you on which way you want to do it, right? There is no right or wrong answer. So in this trade, I would have entered for a buy right here when prices came to the middle of this fair value gap, and it's showing me some sort of signs that it's going to reject it and head back up. And I'll place my stop loss below the fair value gap, and I'll place my take profit at where price last stopped at. If you look towards the left, there's a little resistance area being formed right around this area here. So that is where I should place my take profit. And as you can see, this was a 1:3 risk to reward ratio trade. Very, very beautiful trade. And the thing about trading fair value gaps is that you are able to get those nice sniper entries which will give you a high risk to reward ratio. This trade smashed our take profit right here. Very, very beautiful trade. And the next thing I'm looking for is another trade. So to show you this strategy works, I'm just gonna continue using this strategy on this chart. So let's wait, and you can see at this point of time, price created another resistance area, or that's rather a supply zone, and it gave us a liquidity grab right here when price broke through the resistance and then it came back down. So this was a forced breakout. So this was a liquidity grab. And the next thing you want to look for is a change of character. This is a change of character right here, because this is the last higher low before price goes up and like failed to break past, right? So this was a little change of character right here. Price came back down, broke through the last higher low, giving us a change of character. So the next thing I want to do is to mark up my fair value gap, and I can mark up a fair value gap right here because I saw there's a huge push down and there's a big red candle here. So I'll mark my fair value gap right here, and you can see price has went back up to retest the fair value gap. So this is where I will enter for a sell position. When prices came back up to retest this fair value gap, enter in the middle of this fair value gap, place a stop loss above this fair value gap, and take profit all the way down at the next key level. And I can see there's a support level right here. I place my take profit right there. And once again, this was a very, very beautiful trade. We end up smashing our take profit on this trade. It's really, really as simple as that, guys. I know that a lot of YouTubers, a lot of people on YouTube have been trying to make smart money concepts very complicated, very, very hard to understand, so that you guys can buy that course. And I'm telling you, it's complicated, but it's not that complicated. It's still doable, alright? It's still doable, and I'm here to help to simplify this entire process because I understand how you feel. When I first started learning about smart money concepts, all these BOS, CHOCs, BOS, fair value gap, all these foreign terms, I have no idea what the hell are those. And then I went to do my research and I end up being even more confused than I already am. I hope that like this video was able to like help to simplify it, but do not exit this video yet, I'm going to show you more examples because I understand a lot of you guys still probably do not understand this strategy yet, and you have to understand this strategy if you want to trade smart money concepts. So right here, after we close this trade, once again, price is at this support area right here, consolidating around this area, and there's a break of structure over here when price broke through the last high right here. And then at this point of time, price went back up to the same resistance area that we have drawn, and it gave us a liquidity grab once again. Gave us a liquidity grab, and then this is the last lower low or last higher low. And right now, price has broken this last higher low. So once price has broken this last higher low, it gave us a change of character. When price gave us a change of character, next step is to look for a fair value gap. And I can see a fair value gap right here, this big red candle here. And you can see the price went up to retest it. And if you notice, price did not go to the middle of this fair value gap and then go down. It literally just went up, touched the fair value gap and go down. So this is exactly what I mean by what I said just now. Sometimes price can just touch the fair value gap and then just collapse. So in this case, if you were waiting for price to go to the middle of this fair value gap and then go down, you would have missed out on this trade. But like I said, ultimately it's still up to you. So I'm going to show you one last example, and you can see I've drawn some break of structure, and honestly, break of structure, you can draw it on your charts, but this strategy is more about change of character. So right now, price has been collapsing, coming down to our beautiful support area right here, this beautiful strong demand. So price literally gave us a huge liquidity grab right here, force breakout, huge liquidity grab. So the next thing I have to look for is a change of character, and I get a change of character right here because this is like the last high and price has broken the last high right here. So this was a little change of character. And actually within this move, I can actually spot another change of character somewhere right around here. Because if you look closely, right, this price was trying to create a new like lower high and lower low and lower high and lower low, and it failed to do that. So price actually gave us a last lower high right here. So the moment price break through this last lower high, that would be your change of character. This thing is so damn long. Let me just shorten this thing right here, put it right here. The moment price start breaking through this last lower high, this is the last lower high, and price broke through it, this is your change of character. So right now, I can spot a fair value gap right here, and I'm waiting for price to come back down to retest this fair value gap, which it did right here. So the moment price start coming down here to back to this fair value gap, I'm going to be entering for a buy right here, place my stop loss below this fair value gap, place my take profit at the next key level, which is right here. There's a key level being formed right here, right? There's a resistance area. So you can see once again, this was a very, very beautiful trade. And it really is all about rinse and repeating the same thing, right? I have shown you that this strategy works. This chalk, boss and cox. This strategy work, alright? I'm gonna call it boss and cox strategy from now on. It's a very beautiful name, very easy to remember. So make sure that you go apply whatever you just learned on the charts and integrate whatever you just learned into practice, because that's the only way you can master smart money concepts, by practicing endlessly. Like this video if this video has helped you guys out. I really try my best to simplify smart money concepts, which is a super complicated concept, into a way where like a 5-year-old can understand. So smash that like button and hit on that subscribe button for more weekly trading videos. And if you want to learn about how I trade using price action, check out this video right here. Trust me, this strategy is 10 times simpler than the freaking smart money trading strategy, alright? Click on this video right here to find out more. And remember, you're just one trade away. Mwah. If you are not making at least $100,000 a year, you are a brokey, and you need to listen to what I'm about to share with you. They want to keep you poor. The society want to keep you poor. The government want to keep you poor, keep you in debt so they can continue working for them. Saving money will not make you rich. You will still be broke after investing that $100 of your paycheck. If you have a rich mindset, a big dick mindset, you will know that the best investment that you can make is not in someone else's company. It's not in that crypto shitcoin that will flew 10x next year or some shit.
Imagine working over 60 years.
Just so they can enjoy 5 years. How fucking stupid is that? The key to success, or rather the secret to success in life or in trading in general. So the first point I want to talk about is how everyone advice is shit. Everyone is lying to you. They want to keep you poor. The society want to keep you poor. The government want to keep you poor, keep you in debt so they can continue working for them. So the first step to becoming rich is to actually forget everything they taught you and rewind your mind. To become rich, you need a rich mindset, not a brokey mindset. And I always think that a brokey, the definition of a brokey It doesn't matter if you earn $100,000 a year or $1 million a year. You can still be a brokey. It's all about your mindset. As long as you have a rich mindset, you are not a brokey. So, the first advice that I want to talk about is how saving money will make you rich. A lot of people will tell you, save money. Oh, don't buy that coffee. Don't buy Starbucks. Don't buy McDonald's. Save that money instead, and you'll become rich. Is it true or not? If it's true, why are your parents poor? Why are your friends poor? Why are your teachers poor? The same people who ask you to save money, they are poor. They are broke. They do not have $50,000 in their bank account. So this same old advice on saving money, make you rich, all these are bullshit, alright? That's the first thing I want to tell you guys. All this shit are bullshit. Saving money will not make you rich, alright? Let me repeat myself. Saving money will not make you rich. You need to get that through your head. That's the first point. Second point, investing. A lot of people will tell you that, oh, you should buy this stock. You should buy crypto. That will make you rich. Oh, if I invest $100 of my paycheck every month, I'll become a millionaire in 30 years. 30 years? 30 fucking years, and for what? So that you can enjoy being at the beach when you are old, white, saggy, and grey? What kind of bullshit is that? People who are retired, what's the normal retirement age? It's probably like 65 or 60 or something. Imagine working your entire life just to enjoy maybe 10 years of your life, because like the average lifespan is probably like 70 or 90 years or some shit. Imagine working your entire life. Imagine working over 60 years just so they can enjoy 5 years. How fucking stupid is that? So compound interest is a scam. It's not gonna make you rich fast. If you are looking to be fast, to get rich in your 20s, it's not gonna happen by investing in some freaking company out there. What kind of small dick mindset is that? To invest in some company? Think about it. If you have a small dick, you're gonna invest in someone else. You're gonna invest your hard-earned money into someone else's pockets to make someone else rich. However, if you have a rich mindset, a big dick mindset, you will know that the best investment that you can make is not in someone else's company. It's not in that crypto shitcoin that will flew 10x next year or some shit. It is in yourself. That's the best investment that you can make, period. I'm gonna elaborate more on this later on. So, stop trying to find that perfect stock to invest in. Stop trying to find that perfect crypto to invest in. If you are investing pennies, you're gonna get back pennies. Investing $100 per month into your index fund, it's not gonna make you rich. Get that through your head, alright? It's not gonna fucking make you rich. Don't be a dumbass, alright? If investing your paycheck every month into a stock will make you rich, then why are most people still poor? Most people are investing. Most people are investing and trusting compound interest, hee. So that's like the first thing. I mean, that's the second thing, compound interest, right? So, like I said, everyone they taught you, everything they taught you is a lie. Whatever schools have taught you, they are lying to you. Let's say you go to uni and study business. The lecturers over there do not do business. They have never done business before. They have failed at doing business. That's why they come here to be your lecturers. They come here to be your teachers. Your parents are broke. Your teachers are broke. Your friends are broke. So why the fuck are you listening to them? Just because they're older than you? It's all the matrix speaking. Let me tell you, the only way to get rich is to increase your income. It's not by investing. It's not by saving money, saving on that coffee. It's by increasing your income. So the next question that you might have is, how do you actually increase your income? Very good question. There is a million ways out there to increase your income. There's a lot of ways to increase your income out there, right? There's drop shipping, or how to make money online. There is thousands of ways to make money online. Drop shipping, trading, freaking affiliate marketing, YouTube, TikTok, whatever. There's a lot of ways to make money online. I'm not here to teach you guys how to make money online. I'll leave that to Andrew Tate or something. You can join Hustler University or whatever the fuck you want. I'm not here to teach you how to make money online. I'm here to teach you how to get rich and how I got rich. For me, I choose Forex trading. That's the route that I choose to get rich. Forex trading. And I focus on Forex trading. What I mean by that is that I literally only spend time doing that one thing, that Forex trading, just focusing on that, and not giving a shit about dropshipping, affiliate marketing, other fucking form of income stream. So that is what you need to do right now. The first step to increase your income is to pick one method to get rich and focus on that and becoming extremely fucking good at that one thing. Right, so that one thing, like I said, it can be Forex trading for you, or stock trading, crypto trading, affiliate marketing, real estate, whatever that you want. Go ahead, choose that. But chances are, if you are here, you're probably interested in getting rich from trading. Right, you're interested in that. I'll talk more about that later. So, after you pick one method, I need you to study your ass off. Learn everything you can about that particular thing. Right? Learn everything you can about that particular thing. If you pick Forex trading, make sure you become the best at it. Make sure you learn every single thing there is to know about it. Make sure you master it, no matter what it takes. You need to have that drive, that perseverance to keep going, even when times get tough. So that's the first thing. I know I keep on saying that's the first thing. I'm pretty sure I said like a lot of things already, but yeah, I'm just like freaking messed up. So after you focus on that one thing and you spend weeks, months trying to master that one thing, I want you to have this goal in mind. You need to aim to make $10,000 per month. That's the magical number right there. $10,000 per month. $10,000 per month is the magical number, because once you reach that, you are pretty much like set. That means that you can afford like quite a lot of things in life. You can travel to your favorite country. You can walk in a store and buy whatever you want without having to worry about the price tag. You can go to a restaurant and have a nice dinner with your family without worrying about price tag. So $10,000 per month is the first goal that you should aim for once you start making money online. Remember this figure, guys, 10K per month. After you hit that 10K per month, trust me, the next goal should be 20K, 30K per month, and it's very much possible. I'm telling you, it's possible because I did it. Once I hit 10K per month, next month I hit 20K, 30K, 40K, 50K. Very, very much possible. So, aiming to make 10K per month. After you make 10K per month, what's the next step? Continue increasing your income. Continue to increase your income. I'm telling you, you have to continuously reinvest that money back into the thing that you are doing. Let's say you are Forex trading. Reinvest money into it. Reinvest your profits into it. You make $1,000, okay, good. Put it inside your account, maybe take $100 out to reward yourself, and then leave the other $900 inside that account to compound it so that you can make even more money. You can use a bigger lot size now. Reinvest the profits. Reinvest your income back into your business. The last thing you should fucking do is to buy some fucking Gucci or LV sneakers. Fucking bullshit. That's another lie that Matrix is trying to sell you. Consumerism. Oh, you should buy this Nike branded bag to be cool in school. Oh, you should buy Air Jordans, bro. It's like trending right now. Fuck off. Why are you buying such expensive shit when you are fucking broke? And you have to freaking go on finance and try to loan money just to buy that fucking stickers. How fucking stupid is that? How are you buying all this shit when you haven't even retired your parents? Don't be a fucking idiot. Be wise with your money. Reinvest that money back into your business or whatever that you're working on. Trust me, it will really pay you tenfold if you do that. Compared to if you buy that freaking sneakers, which will depreciate over the value. And then some fucker right now is gonna say that, oh, you know sneakers is actually a good investment. Oh, shut up, bro. Fucking hell. All you brokies out here. So yeah, after you make 10k per month and you start making more money, then that is when you can finally start investing in stocks, crypto, or whatever. You don't start investing when you are broke. You invest when you have money to actually invest in. Once you make 6 figures in your business, okay, then now we can start thinking maybe you should buy this stock or buy this crypto so they can grow that money passively. But if you are earning $1,000 per month, why the fuck are you investing? You should be spending that money and spending that time and effort to think about ways to make more money. Have some side hustles aside or some shit. Like I said, if you invest pennies, you're gonna get pennies. You will still be broke after investing that $100 of your paycheck. Why do I say this? Because this is exactly what I did. I remember last time, I would say like 2 to 3 years ago, I was working as a waiter, serving tables in a restaurant. And a lot of you guys know my story. I was serving tables in the restaurant, very, very broke at that point of time. And I was making probably about like $8 per hour or sometimes even $10 per hour. $8 per hour, guys. So yeah, that was fucking broke. So I'll make maybe like $1,000 per month. And then at the start, I'll start buying some sneakers, like some dumbass teenager do, you know, some stupid shit. Buy some nice sneakers. But then as I start learning about money, then someone told me that I should invest. Or I see YouTube tell me that, okay, you know what, the only way you can get rich is through investing. So I start investing like $500. I put $500 into my account and try to buy Apple stock or some shit. So I did that for maybe like a few months. And 1 year passed by. I made some money. How much did I make? $200. $200, guys. Yeah, I'm still poor after 1 year of investing. So that is why I tell you guys to invest only when you have money. Let's say you have made over 6 figures now and you start investing $50,000 into your favorite stock. Now, 1 year later, you'll probably get back $20,000 or some shit like this as profit. And that is so much more significant than making $200 or $50 from your favorite stock after a year. Like you could have spent that money, or rather I could have invested that money into myself and made 10 times more money than that. So let me repeat the steps. Number 1, increase your income. Number 1, increase your income, and how you do that is by finding a method to make money online or in real life, whatever you want. Find a way to make money. And then third step is to focus and try to be as good as possible at that one thing. Literally get laser focused on that one thing, get as good as possible on that one thing. And then fourthly, after you make some money, you make 6 figures, you make 10k per month, then that is when you can start investing into stocks or whatever. But I will still advise you to invest back into the one thing that you are working on. It could be forex trading, it could be your business, it could be your YouTube channel, whatever it is. I will advise you to reinvest the profits back into that, because I have found that that is the best way to become rich. Right, so that's the first part of this lecture. I kind of tell you guys like the 4 steps that you should get rich, and there's a lot more wisdom I'm about to share with you. Next point I want to say is that hard work. A lot of you guys think that hard work is going to get you rich, and I'm here to debunk that myth. Hard work alone will not make you rich. When I was serving the tables as a waiter, I was working very hard. I'll work from day till night and reach home at around 2 a.m., 1 a.m. I was working very hard, guys. I was working super hard. But was I rich? I wasn't rich. I was broke. The thing about working hard is anyone can work hard. I can hire a guy from Fiverr to work hard for me, and I can pay him maybe like $10. Is he rich for working hard? Fuck no. Hard work is no longer significant in the modern age. It's about working smart now. And it's not about how hard you work. It's about what you work on. Think about that sentence for a minute. It's not about how hard you work, it's about what you work on. I hope that you guys are taking down notes right now, because like a lot of this thing is really quite like gem and quite useful. Okay, who's taking down notes? Let me see the lecture chat. Go type it down in the lecture chat right now. Are you guys taking down notes? If you are, say yes. If you are not, say no. Wow, wonderful guys. Wonderful. Wow, there's a lot of people taking notes. Okay, nice. Okay, back to the lecture. I'm actually surprised by how many people are taking down notes, because if I were inside this lecture, I probably will not take down notes, because I'm a lazy piece of shit. So yeah, back to the lecture. It's not about how hard you work on, it's about what you work on. What did I just say? It's not about how hard you work, it's about what you work on. Right, so this all links together. Whatever I just shared with you, it all ties in together. The best investment that you can make is in yourself. I want to emphasize on that sentence. When I said that the best investment you can make is not in stocks, it's not in crypto, it's not in real estate, it's not in Rolex, it's in yourself. I'm going to be frank with you, I'm going to be 100% honest with you. I got the most returns from investing in myself. So what did I do to invest in myself? I bought books, started reading books, self-improvement books, finance books, forex trading books. All of this helped me become the man I am today. I bought courses, I bought online courses, I studied them, I practiced my trading, I applied what I learned from those courses, and it helped me to become a profitable trader I am today. The third thing, I invest in equipments that allow me to work better. A lot of people always ask me like, what do I spend on my money on? I have so much money, so what the fuck do I spend it on? And my answer always shocked them, because I don't spend it on cars, I don't spend it on luxury watches, I don't spend it on a lot of things. Like, yes, I do have a luxury watch here and there, but I don't like necessarily buy them. I don't really enjoy luxury, because I invest all those money, or rather I spend the money that I earn on equipments that will allow me to work better, to become more productive. So it can be simple things like getting a nice quality noise cancelling headphones, or a new monitor, or a new chair, or a new table. All of these things will allow you to work better, and if you can work better, guess what? You're gonna make more money. So technically, all these things I'm still reinvesting back into the business. So those are the three things that you guys can invest on. You can start buying books, or rather invest in books, invest in online courses, invest in equipments. I would say the final thing you guys can invest in is mentorship, right? I'm not here to sell you my mentorship program. My mentorship program is fully packed right now. We have no more slots. But if there's one thing I will tell my younger self, is to invest in a mentor. Find a mentor. I can't believe like how important it is to have a mentor. If I had a mentor, I would have mastered trading maybe within 1 year. It wouldn't have taken me so long, and I wouldn't have lost so much more money. The key to success, or rather the secret to success in life or in trading in general, is to follow someone who is already successful at what they do. You are listening to me right now because I'm already successful at trading, and I am wealthy in my 20s. That is exactly why you are following me right now. You are listening to me right now. So my advice for you would be to find a mentor that you can look up to. It can be me, it can be another YouTuber, it can be another guy out there in the industry. I don't give a shit who it is, but find someone and try to like learn everything you can about that person. Follow him on all the social media, follow him on Instagram, follow him on YouTube, follow him on TikTok. and then start watching all his videos so that you can start emulate his thinking, start thinking like him or her. That is how you can actually become successful. You start emulating the successful people. What I did was that I did not have a mentor, so my mentor was like books. So I will read a lot of books, and then like my mentor will be like the authors, and I will visualize myself living their life and like applying what they learn and how they think. Oh, Bill Gates does this. Oh, Steve Jobs does this. And I will try to emulate how all these successful people live. Oh, they have a morning routine. Okay, you know what? I need a morning routine too. Oh, they meditate. Okay, you know what? I can meditate too. I can start journaling too. All of these are beautiful habits that you can work on. So those are the 4 things that I would advise you to invest in if you want to invest in yourself. Those are the 4 crucial things. The 3 reasons why you are poor. There's only 3 reasons why you are poor. You guys probably heard these 3 reasons before. But you know what? I'm still going to say it anyways. The 3 reasons why you are poor. Number 1, you are lazy. I would say a lot of people right here listening to this, you guys are maybe not lazy. You guys are probably like working hard, but not hard enough. For me, every single minute of my day, I'm spent working. If I'm awake, I'm working. Other than lunch and dinner, I'm working. And I would say that I work not because like I have to, but because I enjoy it. It's my purpose and it brings me fulfillment, right? So that is why I work. I don't have time to sit there and watch Netflix, watch some movies like a little bitch. If you're doing that, you're lazy. You're scrolling TikTok in the middle of the day when you could have been using that time to work on your side hustle or learning trading. Get the fuck out of here. You're lazy. You are choosing to look at their Instagram models page instead of watching the trading geek videos. Oh, you're lazy. Get that shit out here. You're lazy. So I would say like 80% of people here, you are not lazy. Maybe it's just the 20% that needs to hear this. You guys need to work harder if you want to be rich, man. Like, no cap. I know I said that hard work is not significant, but you still need to work hard at what you do, alright? Second reason why you are poor. You are arrogant. Oh, no. I'm not arrogant. I'm actually pretty humble, guys. Oh, I'm pretty humble. Then why the fuck are you not watching my videos till the end? You are arrogant because you think you already know this. You think that you are already good at trading just because you made $10 today from trading. You think that you are a master. So there's nothing for you to learn anymore. You don't have to watch my videos anymore because you think that you are the best right now. That's being arrogant. I'm telling you, if Elon Musk walked in the room right now and he tell me how to make money, I'm gonna sit there, shut the fuck up and listen to him. I'm not gonna speak a single word. I'm gonna listen to him and then ask him questions. I'm gonna be open-minded enough to absorb his knowledge. Because this motherfucker, Elon Musk, is richer than me. So I'm gonna listen to him. And that is called having humility. You need to have the humility to say that, okay, you know what, I'm not there yet. I need to listen to this wise man and his wisdom. I need to take down notes. And the thing about trading is you will never ever be so-called perfect at trading. Trading is always about improving and learning. Even at this stage right now, I'm still studying trading. I'm still exploring advanced trading strategies. I'm always learning. I'm learning how to make better YouTube videos. I'm learning how to improve my trading. I'm learning how to become more disciplined at trading, even at this stage. There's always someone out there that is better than you, and you need to have the humility to say that I'm not there yet and start learning. So that's the second point. You are arrogant. I mean the second reason on why you are poor. You are arrogant. The third reason is stupid. You are fucking stupid. If you are poor, you are stupid. I mean if you are stupid, you are poor. Okay, basically that's the third reason. And I really believe that no one here is stupid. I really believe that everyone here listening to me right now is smart enough to come into this lecture. If you are smart enough to come into this lecture, you are smart enough to make money. So I'll say the people who are stupid is probably like maybe like not inside this call. Some other people out there. So those are the three reasons on why you are poor. Lazy, arrogant, and stupid. So based on these three reasons, you guys can go ahead and like figure out what you need to work on. It could be laziness, it could be arrogance. If you're lazy, okay, tell yourself that, you know what, instead of scrolling TikTok for 1 hour a day, why not spend that 1 hour on studying trading, watching the Trading Geeks videos till the end. Keyword, till the end. Which brings me to the second reason, arrogance. You are not watching my videos till the end because you think that you already know the thing already. Oh, I didn't know supply and demand good enough, so I'm not going to watch this video. Oh, I didn't know how to trade support and resistance. That shit is so simple, so I'm not going to watch this video. No, you fucking don't. You fucking don't. You're doing it wrong. You're drawing the supply and demand wrong. So have some humility. Suck it up. Suck up your ego. Put your ego aside and start learning. Taking down notes. I'll say that these three reasons kind of stop me from being rich also. So I'm here to tell you guys that you can get rid of these three things. Lazy, arrogant, stupid. You can get rid of these three things. Josh Hughes asks, how do I not be lazy? Very good question. Very, very good question. How do I not be lazy? Dear Josh, discipline. If I have one word for you, is to be disciplined. What does it mean to be disciplined? It means to do the hard things, especially when you don't feel like it. Today I woke up, I didn't feel like doing anything today. I felt like just lying in my bed. Oh, I'm so tired. I feel like just sleeping in the bed. Oh, I feel like just laying in the bed and scroll TikTok instead of getting up and do work. Discipline is getting up, getting the fuck up, tell yourself to get the fuck up and still do the work, even though when you don't feel like it. That is discipline. So I would say, start developing discipline. Start developing resistance to the slave mind. Your mind is weak. Your mind is telling you that you should play that video game. Your mind is telling you that you should jerk off to freaking porn every day. Your mind is weak. Do not listen to your slave mind. So start developing the discipline to do the hard habits. I would say that there's a video where I make on my YouTube channel. It's called 3 Habits That Make Me a Successful Trader in My 20s. Go watch that video, implement those 3 habits into your life, and this laziness, illness, this sickness will be gone. Alright? So I hope that has answered your question, Josh Hughes. Jesus Christ, guys, there's a lot of recommendations. Okay, so a lot of you guys asked for books suggestions. I'll probably make like a video on book suggestions soon, but basically, I'll recommend you to read these 3 books on Forex trading. Number 1, 10 Essentials of Forex Trading. Number 2, Trading in the Zone. Number 3, Naked Prices or something, is Naked Charts or something. Yeah, basically read these 3 books. You said increase your income and then invest, but how do I increase my income without investing? Dear Kosai, you have not been listening to my lesson. Increase your income and then invest. Increase your income means that you need to start having a side hustle first, right? It could be making YouTube videos. It could be like what Nicholas said, learn a skill that brings you money. Once you learn a skill that brings you money, you learn how to make money online, you start having money, then that is when you can invest. You don't start investing first when you are broke. You invest after you have made money. So Kaitan asks, any books recommendation for better discipline and self-improvement? I would say there's a few books. Number one, Marcus Aurelius Meditations, very beautiful book. Number two, 12 Rules for Life. Number three, the 10x Rule by Grant Cardone. Alright, let me just answer a few more questions before we end here today. QQ asks, do you recommend The Intelligent Investor? No, not really. It's a thick ass book that's like freaking wrote by Warren Buffett or some shit. Warren Buffett read it and he became rich or something, but nah, I never read that book. Okay, Truth has been asking a quick explanation of Fibonacci retracement levels. It's very hard for me to explain here because I cannot share my screen, I cannot show my face. So I'll say go watch that YouTube video that I did on Fibonacci retracement. Don't be lazy, literally go search on YouTube Fibonacci retracement by the Trading Geek and you can see there's 2 videos what I made. Coercion asks a very good question. How you fight your own ego? Is this should be mastered too? Very, very good question. Ego. Ego is the enemy. Ego is the enemy, right? So to fight your own ego, as much as I want to tell you that I have the answer to that, I do not have the answer to that. My answer will be what I did for myself is that I accept that I'm not up there yet. I'm open-minded to rich people advice, successful people advice, and then I go out there and start learning. And I accept the fact that the market is powerful, the market can do anything it wants. So if the market is showing me that price is going up, I'm going to be flexible enough to enter for a buy instead of entering for a sell just because my ego said that I should enter for a sell. So I'll say to become more open-minded to suggestions and wisdom, coercion. Okay, Behemoth asks, do you know other good mentors beside you? Not really. I would say there's a lot of YouTubers out there doing the same thing as me, so you can go search for other trading YouTubers. So yeah, don't worry if you guys weren't able to like hear some part of the lecture or my mic is mute for some time. Because all of this is recorded and I'm gonna send the recording or rather post the recording onto YouTube. So don't worry about it, guys. Okay, last few questions before we end here today. What are the side hustles we can do to make $500 quickly? Coercion, good question. I would say, you see, that's the thing. Everyone want to make money fast. Everyone want to make money quick. There's no such thing as quick. There's no such thing as fast. If you want to get a 6-pack abs, it's not going to get you there overnight. You need to put in the work for months, weeks, or even years. So I would say, go out there, learn how to make money online first. Learn the side hustle first. Once you start getting good at that side hustle, then you can start maybe like making $500. It could take years, it could take months, it could take weeks to do that, alright? It took me like maybe like 1 year just to make $500 on YouTube. It took me 1 year. So are you able to wait that long? So I'll say, like I said, a lot of side hustles out there. I'm not gonna tell you what side hustle to use because I personally use forex trading. So yeah, there's a lot out there. You can do your research. Freaking editing videos can make you money. I don't know, like affiliate marketing make you money also. Yeah, guys. The one best side hustle to make $500 fast is OnlyFans. Go create an OnlyFans. Alright, guys. So whatever that I taught you here, everything that I to you today about how to get rich is all useless if you do not apply what you just learned. I understand that some of you guys might have taken down notes. Now is the time to go apply those notes. Go apply whatever you just learned. Go out there, find that side hustle, learn everything you can about it. Start making money, aim to make 10K per month. And then that is when you can finally start investing or something. Knowledge is only power when it is applied. So it's useless. You have just wasted 40 minutes sitting here listening to me if you do not go out there and actually apply what you just learned. So if you want to become rich, apply whatever I just told you. Do whatever it takes. Work hard. Master the skill that you want to master. The skill that will make you money, that will make you happy. And your life will become much more purposeful, much more fulfilled. And you will make more money than the entire past generation do. So that's my final advice for you here today. I want to thank you guys for attending this lecture. 270 people over here. That is crazy. Thank you guys for attending this lecture. And I hope that you guys have learned something inside this lecture. I just wanted to like spread some wisdom here. So right now, it's 8:42 PM right now. In about 20 minutes, I'm going to be dropping a YouTube video on the only way to trade profitably. So after this lecture, wait to be on YouTube so you can go watch that video and start studying trading again or something. Remember, do not let the ego get into your way. Do not be arrogant, be humble, have some humility to say that, okay, you know what? I'm not that good yet, so I'm gonna try to become better at that thing. It's always a continuous journey. Life is always about improving 1% better every day. So with that, I leave you here today with all this wisdom, and I hope that you guys have an amazing day, and I will see you guys soon. And remember, you're just one trade away. Mwah. I'm gonna make trading looks insanely simple in this video. This is the only video that you will ever need to watch to know how to trade profitably. The rest is a lot of practice and a lot of experience. Trading is not easy. It requires a lot of time and effort to become a consistently profitable trader. But this is literally all the stuff you need to know. It's nothing complicated. It's not that it's not rocket science. It's all basic market structure. I really believe that trading is all about doing the same old simple stuff over and over again. I'm gonna be honest. This video will not help you if you skip around. So if you want this video to help you, you must watch this video all the way through till the end and take down notes. The first thing that you must understand is that the market will never ever go down or go up in a straight line like this. No, in a downtrend, price has to go down, retrace a little bit, go down even more, retrace a little bit, and go down even more to create your lower highs and lower lows. Lower highs and lower lows. So this is market structure, right? And in the uptrend, price will be creating a higher highs, higher lows, higher highs, and higher lows. So as you can see, this is just how the market moves. It moves in waves. It will never ever go down or up straight. If it goes down or up straight, everyone will be a millionaire. In theory, it looks quite clean and quite easy to spot, but in real life, it does not look like this because the market can create something like this. Goes down, creating dang, 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 bong, bang, bang. So this will be like a downtrend market structure or so. So you can see in real life, it's a little bit more like messy and complicated. But don't worry, I'm going to simplify it for you. So how do you know when the market is reversing, when there is a break of structure? So example, in this downtrend, right, you start seeing like price losing momentum at the end right here. You start seeing price losing momentum and it starts like going up to create a new higher highs and higher lows. And it starts breaking the last lower high and coming down and create like your uptrend market structure like this, right? This is when you know that, okay, this downtrend is done. We are now in the uptrend and we should be looking to buy instead of selling, right? So now let's apply whatever we just learned onto the charts. So for the sake of this video, I'm going to keep things simple. I'm going to be using one currency pair and one time frame. Okay, the currency pair that we're going to be looking at is GBP USD, the Great British Pound over the US dollar. And the time frame that we're going to be using is the 1 hour time frame, alright? You can use the 4 hour time frame, you can use the 5 minute, the 15-minute time frame, use whatever time frame that suits your trading style. So right now, as you can see, clear as day, price is in the downtrend and it's creating your downtrend market structure, right? Because price is creating your lower highs, lower lows, lower highs, and could potentially create another lower low right now. So right now, what I want to do is that I can mark up like the last lower high, which will be like somewhere right around here, and I also mark up the last lower low somewhere right around here, right? So right now, if price wanted to create a new lower high and lower low, right, this is what it will do. It will break through the previous lower low, the last lower low, and then come back up to retest this last lower low to form a new lower high and go down like this. This is what market structure means, alright? This means that price is in a valid downtrend. So in this case, we are gonna be patient and wait and see what price does next over the next few hours or the next few days before we decide to do anything. Remember, a good trader knows when to trade and when not to trade, when to stay out of the market. And right now, price is in the middle of nowhere. It's not at the key level. We're gonna be staying out of the market, alright? Be patient. So you can see, price actually like is consolidating around this area here, and it actually went back up to retest the same last lower high, which is around this area here. This is the last lower high, right? So right now, price can do two things. Price can either like start reversing and heading up like this, creating an uptrend market structure, or price can come back up to retest this lower high and continue to go down even further. Which one do you think is most likely going to happen? Look at this strong downtrend on your left side. It's just been collapsing, heading back down. So the most like possible scenario is the second scenario where price retesting this lower high and it's going to continue to go back down, right? So in this case, what I'll do is that I'll have entered for a sell somewhere right around here, and then I'll place my stop loss like above this last lower high, maybe somewhere right around here. You never ever want to place it so tight like this, okay? Because you're gonna get stopped out. Always make sure you give it a little bit of breathing room so that your stop loss can breathe, so that when price goes up to retest this area again, it will not hit your stop loss and you won't get stopped out just to see your trade go in your way. So that's where I'll place my stop loss and then place your take profit. Honestly, I will recommend you to hold the trade until the trend is over, right? Until the trend is over and you see that price is reversing. You see some sort of signs that show you that price is reversing. So for now, I'm just gonna hold the trade. So we wait and see. So you can see price collapse and hit our take profit. Okay, but at this point of time, I'm still holding the trade because like I said, I want to hold the trade until I start seeing like price reversing and creating your new lower high or whatever, right? So you still wait. So you can see price is still dropping. And I think at this point of time, I start seeing like price consolidating around this area here, right? This is when I'll just like close this trade, take the win, go celebrate, alright? I mean, no, don't celebrate. Maybe don't celebrate, like take the win, alright? Take the win and look for another entry to enter on this trade. So this trade, it was a pretty banger. So in this trade, let's say that you risk $1,000, right? That is how much money I risk on each trade, right? $1,000, because that's like potentially like 1% of my trading account, which is, let's say I'm trading a 100k account, 1% would be $1,000, okay? Let's say that I'm risking 1% on this trade. So if I'm risking $1,000 on this trade, this is the 4.3 risk to reward ratio. That means I would have made over $4,300 on this beautiful trade. This one trade over the span of what? Less than 24 hours, I've made over $4,300. That is the beautiful thing about trading. It's really quite simple. You just have to apply basic market structure over and over again. So in this case, let's say we close this trade. Let's say maybe we got lucky, we won the first trade. Okay, we got lucky, whatever. So let's look for another entry on this trade, right? So first trade, we won this trade. Now I'm looking for another entry. So we wait. So right now you can see price starts consolidating around this area because price could potentially be creating another lower high before it starts like collapsing down even more, right? So remember, we are using basic market structure for this strategy. So we want to see what price does over this like lower high right here, so we still wait and see. You can see just consolidating at this area here, not going anywhere. And you can see, right, since price is like consolidating around here, you can see like at this area here, this is your new lower high. Okay, this is your new lower high. Price is not breaking above this area, so there's some sort of resistance at this area telling you that, okay, you know what, price want to go down at this area. There is sellers waiting at this area to short the market down. So I'm still going to be waiting very patiently. And you can see somewhere right around here, price came back up multiple times already, alright? And at this point of time, this is when I will enter for a sell position, maybe somewhere around here. Right, somewhere around here, I saw that price is rejecting this lower high for multiple times already, so I'm going to place my stop loss above here. And then once again, I'm going to hold the trade all the way until the trend reverse. So we wait and see. Okay, you can see price is creating another lower high. Okay, and over here, price got stop loss out. Alright, so at this point of time, I could have taken profit at this area when I start seeing like price is consolidating and it's like starting to reverse and like reverse back up. I could have, right? That is one thing I could have do, like just close the trade earlier, somewhere right around here, right? Another thing I could have do is that I could have moved my stop loss into break even. Okay, so once price went into my profit right here, once price is somewhere right around here, I should have placed my stop loss into break even, move it into break even, so that when price eventually go up, stop me out, guess what? I did not lose any money. I broke even on this trade. So those are the two things that you could have done. But let's say you did not do any of this and you ended up losing this trade, right? You end up losing this trade. It is what it is. If I lose this trade, guess what? I'm down $1,000. Alright, I'm down 1%. So down 1%, down $1,000. It is what it is, guys. The thing about losses is that you must never take it like to heart, alright? Never take losses to heart. Sometimes the market can just do what it wants, okay? Sometimes the market can just do what it wants and you never ever know where price is gonna go next. No matter how confident you are in your trade, there is no 100% certainty that price will go in your way. All we can do is to figure out where price is gonna go and try to hold the trade until it does not make sense anymore. Does that make sense? So yeah, at this point of time, you can see prices went up and broke the last lower high being created right here. Does this mean that it's going to reverse and it's going to become an uptrend market structure right now? No, because price has not shown us any valid break of structure yet. If price wanted to break of structure, it needs to come back down, retest this area here, create a new newer higher low right here. Then that is when I will enter for a buying position. So right now, it's still wait. And you can see price starts pulling back to this area here, like what we expected it to do, right? So at this point of time, I need to see some sort of signs that tell me that, okay, you know what, price is going to continue to go up, and then that is when I will enter for a buy. So you can see price is like consolidating around this area once again, and at this point of time, price is giving us a higher low. So right here, you know that price has already created a higher low. Guess what? Enter for a buy. Do not be like so stubborn and fixated on the previous trend, like, oh my god, it has always been a downtrend for the last 5 weeks, so it should continue to going down. No, you should not have that mindset. You should not have that stubborn mindset. You should be learning how to be flexible, not just on bid, but on the charts, right? You must learn how to be flexible, because remember, the market can do anything it wants. So if it's reversing and it's showing me that price is going to go up, I'm not going to be stupid enough to hold some sort of sell position. I'm going to reverse my bias and change to a buy position. So at this point of time, I will have entered for a buy like somewhere right around here, place my stop loss below this last higher low. Remember, this is a new higher low, so I can move like a new higher low right here. Place the stop loss below this higher low. And then for my take profit, once again, I'm going to hold the trade until it starts like reversing and create a new lower high. So we wait. Okay, so somewhere around here, it's still going up. So at this point of time, what I would do is that you see price has just created a new higher low at this point of time. So what I'll do is to move my stop loss, the previous stop loss which is right here, move it all the way down here. right? So this is like a break-even stop loss. So if price go down and hit our stop loss, guess what? We'll break even. And I think I'll start taking profit like somewhere right around here because there's like a little resistance area. If you look towards the left, yeah, you can see there's a little resistance area at this point of time. So take profit somewhere right around there. So yeah, you can see over here, the third time price come back up and it failed to break past, right? Close that trade, alright? Because like it got rejected down, close that trade, alright? Just close that trade. So very beautiful trade once again. Once again, you start seeing some sort of selling pressure coming into this market. And you can see price is just like consolidating at this area here, not going anywhere, just going sideways, right? So at this point of time, trust me, guys, it is best if you just close the trade somewhere right around this area here, this resistance area, because price has failed to break past this resistance area 1, 2, 3, 4, 5, 6, 7, 8. So this shows us that this is a very powerful resistance area because if you look towards the left, at this area, price literally collapsed 1 time, 2 times, 3 times. It just collapsed at this area. So there's a lot of sellers present at this area here. So do yourself a favor and close that trade. So on this trade, let's say that you risk $1,000 on this trade. So you have made over $1,000 on this trade because one is a 1:1 risk to reward ratio. And I know I always ask you guys to aim for at least 1:2 risk to reward ratio, which is what you should do, by the way. But in this case, we had to close the trade early because it starts consolidating at this resistance area, right? We do not want to be so stupid to hold the trade all the way up to 1:2, even though you know that price is gonna like start reversing at this area. So you're gonna be flexible once again, close the trade, made $1,000 on this trade. So for total, we made about 4.3k plus the $1,000 right here, and then we also lost $1,000 right here. So the net profit is still 4.3k. We still made over 4.3%. So at this point of time, let's go through a few more trades, right? So you can see price starts like breaking through the resistance area, and it's like consolidated. Okay, you can see right here, right here. After it's done consolidating at this area, it knows that it's not gonna break past this area. This uptrend is not gonna continue. Guess what? This is your time to look for a sell position. This is the golden hour to look for your sell position. So at this point of time, I can see that price has starting to reverse at this area, right? It gave us a lot of red candlesticks at this area, showing us that price is not breaking past this resistance area. It's getting rejected at this resistance area. So what you should do right now is to look for a sell position. So remember your last higher low. Where's your last higher low? This is the last higher low, right? Because you can see this is the last higher low, and price has managed to break past the last higher low, and it has came back up to retest it before it like literally collapsed. You can see this is exactly what price did. Break past, come back up to retest it, and then just collapse all the way down here. So this is the first sign that tells us that the price is reversing and we should be looking to sell. So right now, I'm going to be entering for a sell, but I do not want to enter for a sell here yet because this is the push phase, right? It's a push phase. If you enter for a sell here, guess what? Your stop loss will be all the way up here, and you don't want that. You want like a nicer stop loss, a nicer entry like this. So we're going to wait for price to pull back, and then look to enter for a sell position somewhere right around here. So right now, I'm just going to mark up this little higher low right here. So right now, we still wait for market to pull back. So you can see right now the market has pulled back up to this area here, the previous higher low, to create a new lower high. So at this point of time, I will have entered for a sell position somewhere right around here when I see that the market is like unable to create a new uptrend market structure, and it's like reversing and it's going to go back down. That is when I will enter for a sell right here. Place your stop loss above the last lower high right here. This is the last lower high. Place it a few pips above it. So for my take profit, I just place my take profit at where price last stopped at, which is somewhere right around here. You can see if you look towards the left, at this area there is a support area, and this is also the last higher low in the uptrend, right? So this is where price last stopped at. Very obvious on why you should place your take profit here, because at this area there's a lot of buyers at this area. If you look at this, there's a lot of buying pressure at this area. So buyers are waiting at this level to enter for a buy. So that is why I want to exit my position at this area here. So we wait, Okay, you can see over here, price went down somewhere around this area and took our take profit. So at this point of time, you have closed this trade. 1:2.42, beautiful, made another $2,000 on this trade. At this point of time, I've lost track of how much money we made. So I'm just gonna put it in like risk reward ratio. So we plus 4.3R for the first trade, and then we broke even on the next two trade. And then the last trade, what we did was that we actually won 2.4R plus 2.4R. So total, we have made a profit of 6%, right? 6% on this beautiful trade. Total profit of 6.7%. So if you risk $1,000, guess what? You have made a total of $6,700. Okay, total of $6,700. So the general rule is to risk 1% on each trade. So if you do not want to risk 1%, if 1% is too much for you, I will recommend you to risk 0.5%. Okay, so you can either risk 0.5% to around 1% on each trade. So, like I said, if you're trading a $100,000 account, 1% of that will be $1,000. So in this case, we are using the example of 100K account and you're risking 1%. So we will risk $1,000 and we have made a total of 6.7R, which is equal to $1,000 times 6.7, which is just equal to $6,700, right? So remember, this figure is like, it depends on your account size. So if you only have like, let's say $1,000 account, right? $1,000 account and you risk 1%. 1% of $1,000 is what? $10, right? And you made over 6.7R. So in this case, you will have made over $67, alright? $67. So as you can see, the amount of profit that you make depends on how big your account is and how much money you are risking on each trade. And the reason why I recommend 0.5% to 1% on each trade is because it gives you much more room for error. If you risk 1% on each trade, you can lose 100 trades in a row before you blow your account. But if you risk like, let's say 50% on each trade, right? Instead of 1%, you risk 50%. You risk half of your account and on each trade because you're trying to flip that small account to a few $1,000,000. Let's say you're doing that. If you lose this trade, you just lost half of your account. Never mind. And if you lose the next trade, you just lose the other half of your account. So you just went flat broke and blew your account because you lost 2 trades. How stupid is that? You lost 2 trades and you blow your entire account. And trust me when I say that it's very, very common to lose 2 trades in a row. It's very, very common, guys. You're not gonna win every single trade that you take. So you have to take into account that and make sure you risk the right amount of money. How much money are you willing to risk? What's your risk appetite? Are you a risk taker or a more like conservative trader? So find out what works for you, because what works for you might not work for me, and what works for me might not work for you. So as you can see, we have won 3 out of 4 trades currently, and I want to show you guys more trades, more examples to show you guys like, you know what, market structure is not that hard, alright, to help you guys master market structure. So at this point of time, price is not going anywhere, right? It's going sideways. And honestly, I freaking hate sideways market. You can see price just going sideways, not going anywhere. There is no clear trend. I do not like sideways market. It's very, very clear. I do not trade sideways market. Okay, you know what? Price is gonna collapse right now. How do we know that? We look at these multiple red candlesticks in a row. These are huge red candlesticks, a lot of momentum candles. So in this case, what you can do is that you can ride this momentum, right? So when you see any of these huge red candles breaking out of this support area, there's a chance that this is a true breakout. This is not a fake breakout. This is not a false breakout. A false breakout is something like this and something like this, where price will break out of the support area and just poke his back up like this, put his head back up like this. So how do we know when it's false breakout or breakout? We look at the amount of volume. So you can see in this area here, there's very less volume, right? You can see the candlesticks, they are small candlesticks. Very less volume at this area here. But over here, there is big fat candlesticks piercing through this support area, showing us a lot of momentum, and this is a very nice breakout. So at this point of time, you have entered for a sell right here. Place your stop loss above the last lower high right here, or even above the support area, and then place your take profit all the way down, hold the trade all the way down until this trend is over. So you wait, and then you can see price is collapsing over here, price collapsing, and it's creating your new low high, and right here there's a new low high right here, and I will say I will have hold the trade even further until I start seeing some sort of sign that tell me that this trend is over. Okay, like some sort of like sign, which means by this, okay, you can see price starts like reversing at this area here, starts giving us some sort of green candlestick at this area. So at this point of time, I will have closed this beautiful trade, right? Close this beautiful trade, get out of this trade, because I start saying that, okay, you know, our price is going to like start retracing and even go up or something. Okay, so right now, close this sell trade. So right now we wait for another entry. We see what price does, and you can see price is creating your new higher highs and higher lows. If you look towards the left, this is the last lower high before price collapse, right? So right now, if price break through this last lower high, there's a potential chance that it's going to reverse and head back up. So right now we still wait. You can see that's exactly what price did. Price started breaking past this last lower high with huge momentum. So at this point of time, what you could have done is that you could have entered for a buy somewhere right around here where price break through this last lower high, because this is giving us an uptrend market structure right now. It's no longer the downtrend market structure. It has reversed and it's become an uptrend because price is creating your higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is the last higher low. So I'll place my stop loss a few pips below this last higher low. Place your take profit maybe like somewhere right around here. Basically hold the trade until I start seeing it's like reversing. So you can see it's like consolidating at this area here, not going anywhere. So at this point of time, you could have closed the trade like somewhere right around here, when it's like consolidating, not going anywhere. But at the same time, yeah, I see there's like price is forming a resistance area around here, and it's not going to break past it. So when price reaches, just close the trade, okay? You know that price is rejecting this level. There's a chance that this overall downtrend is going to continue, right? This overall downtrend, this main downtrend is going to continue. So at this point of time, what you can do is that you can look for sell position right now, because you see that price is rejecting this resistance area. So you can enter for a sell right here. This stop loss below it. Please take profit all the way down here. Because I see that price is rejecting at this resistance area. That's the first confirmation that tells us that price is going down. And if you zoom out, right, you will see that the overall trend is still in a downtrend, right? It's still in a major downtrend. So this uptrend could just be a little retracement. You could have even draw like a trend line somewhere right around here, and you have saw that price has just broke out of the trend line and come back up to retest this trend line. So you see, this is a very, very beautiful trade. Let's wait. And wait, price is still consolidating. Oh my god, it's taking forever to consolidate. This is a bad day trade, honestly. And you can see price going down. And you can see, right, the reason why I place my stop loss above here and not like so tight like this is because I want to give my stop loss a little bit of breathing room. Imagine I place it like this. I would have gotten stopped out right here. So you always have to make sure you gave it a little bit of breathing room. So you can see, wait. Yeah, you can see price ultimately went down to smash our take profit somewhere right around here before it starts reversing, right? This was another very beautiful trade, and honestly, I do not want to show you guys all wins and no losses, because the point of this video is to be unfiltered and show you guys that this strategy does not work sometimes, but so far most of the trade has been a banger and we have been winning in a few trades in a row. Yeah, so I'm gonna try to show you guys some losses, right? Trust me guys, I'm trying to show you losses. I'm not trying to hide from you anything. I want to be unfiltered and show you everything, the good, the bad, the ugly. So to add on to this list, we have plus another 8R, this 8R if I'm not wrong, 8R, plus another 1R and 4.6R, plus another 1R, plus another 4.6R. So far we have only lost one trade. Alright, we have only lost one trade, and remember, trading is random. There's always a 50-50 chance that you're gonna win or lose a trade. And yeah, so out of this, how many trades have I taken? 1, 2, 3, 4, 5, 7 trades. We won 6 out of 7 trades. Okay, so right now, we're gonna continue with this. You can see price is in a downtrend market structure, because if you look clearly, right, this is a new lower high, okay? This is the previous lower high, this is the new lower high. So this is the last lower low, and then price could potentially create another lower low somewhere right around here and reverse and go back down like this. Okay, so we still wait and see, erase all this stuff, and right now we see, play the long game guys, play the long game, and see the reason why price starts retracing a little bit around here is because there is a little support area right here. This is the last lower low guys, this is the last lower low, and price is just broken out the last lower low. So you wait, okay, consolidating, and yeah, not going anywhere right now, it's not going anywhere right now. Okay, you can see price is creating a new lower low finally at this point of time. You can see price has just broken the last lower low and is creating a new lower low somewhere right around here. So once again, very beautiful thing. I could have entered for a sell somewhere right around here, but I did not because I want to look for like a more clear entry. So I'm just gonna be waiting. You can see price consolidating, and it's like going up right now. So at this point of time, it's going up. It's creating a little uptrend right now, beautiful uptrend. So I'm waiting for price to come back down this area here, then I'll potentially enter for a buy because this is the last higher low, right? So you can see price has came back down to this area here, starts consolidating at this area. I'm going to be looking to enter for a buy somewhere right around here, and there's also another like resistance area being formed right here. So at this point of time, I believe it's just consolidating around this area. Since it's consolidating, there's not much opportunity for me to enter for a buy, and yeah, honestly, I wouldn't have traded like these few days at all. I do not trade when price is consolidating, guys. That's a very important point. If you want this strategy to work for you, this is a market structure strategy. You should be looking for trends. You should only be trading when the market is trending, either up or down. When the market is consolidating like this, lots of uncertainty, I'm not going to be trading, okay? I'm not going to be trading, as simple as that. I want to keep things as simple on this channel, and the truth is, I do not trade sideways market. I do not trade when the market is consolidating. Remember, there will always be opportunities another day. If this week, price is going sideways, guess what? I'm not going to be trading the entire week at all. I'm not going to be taking a single trade because I want to see clear opportunities. I want to see my trade setup being formed on the chart, and then I will take that shot. But if it's not present, be patient. Do not force any trades, because if you start forcing trades, you will lose money. Now let's calculate the results. So we made about 4.3R, and then plus 2.4, plus 8, plus 1, plus 4.6R. So in total we made about 20.3R. Alright, 20.3R. So if you risk $1,000, guess what? You have made a total of $20.3 thousand. Alright, $20.3 thousand. So this is how much you can potentially earn in, I think this is 1 month, how much you can potentially earn in 1 month of trading if you are trading $100,000 account and you are risking 1% per trade. Okay, you're maybe made about 20k, 20% per month. And honestly, this is super duper good. Alright, this is quite good, and honestly it's quite, I would say, like, it's not that realistic for beginner traders, because beginner traders, as long as you get like 5% plus 5R, that is already good for you per month, okay? So ultimately, to me, trading is not about being right or wrong, winning or losing. It's all about making sure that your losses are as small as possible and your winners are as big as possible. That is how you can become profitable, when your winners literally engulf the losers. That is how you can become profitable over the long run. So how do you do this? You need to practice proper risk management, like what I did here, right? I make sure that I risk 1% on each trade, every single trade. So you can see 1%, 1%, 1%, 1%, 1%. It's very consistent. And I managed to make all this using nothing complicated, no fancy 5 indicators on my charts, nothing. Pure price action, market structure, just by looking at higher highs, higher lows, lower highs, lower lows, to see what price is doing, what the candlesticks are showing me. That is how I managed to become profitable. This is my own personal strategy, and I hope that it works for you. I hope that you take maybe at least 1% of this entire video and go implement it into your own trading journey. Because remember, knowledge is only power when you apply it. If you watch this video, after you're done watching this video, you're gonna go back to trading randomly using stupid indicators and just like trading when the market is going sideways. It's useless, right? It's useless watching this video. You should apply what you just learned from this video, and trust me, you will achieve so much more success if you do that. So make sure you like this video if this video was helpful to you, and hit on that subscribe button for more weekly trading videos just like this. And remember, you're just one trade away. Mwah.
Today, I'm going to teach you the concept of top-down analysis, or some may call it multi-time frame analysis. Top-down analysis is basically analyzing the charts from a higher time frame down to a lower time frame. You will need 3 time frames. The first time frame that you need is the direction time frame. This time frame allows you to identify the direction of the market. Is price going up, or is it going down, or is the market in sideways? The next time frame that you need is your behavior time frame. This time frame will give you a clear direction of what price is doing. Is there a lot of momentum? Or is the market breaking structure? Or is there a lot of weak rejections, doji candlesticks? Is the market retracing to create your new higher highs and higher lows? So that is the second time frame. For your third time frame, this is where we're going to be entering the trade. So this is your entry time frame. If the price is in the downtrend, you should be looking to sell. And then if price is in the uptrend, you should be looking to buy. As simple as that. So these are the 3 time frames that you need. Then the time frames that you should be trading on depends on your trading style. For me, I am more of a mix between intraday and a swing trader. So the time frame that I'll be using for this is that I will use the 4-hour time frame for direction, use the 1-hour time frame for behavior, and use the 15-minute time frame for my entry. But if you are a scalper, you will not be using the same time frames. You will probably be looking at different time frames. Maybe your direction time frame could be the 1 hour, and then your behavior could be the 15-minute, and then your entry time frame could be the 5-minute. So ultimately, the time frames that you're using, the top-down analysis that you are using really depends on your trading style. So make sure that you tailor this strategy to work for your trading style. So for this example, we're gonna start doing our top-down analysis by using the 4-hour time frame first. So that is our direction time frame. The reason why I choose the 4-hour time frame is because the structure is just so clean, and it clearly allows me to identify like the overall trend direction instead of going down to like the 15-minute time frame where the price is just going up and down, up and down, up and down. A lot of you will look at everything that is going on right now and be very confused on whether you should go in for a buy or go in for a sell. But that is a wrong way to trade. Since I am day trading, I really do not care about what price is doing all the way back here. I am focusing on what price is doing right now, what price is doing today, which is over here in this area right here. So that means that I'm not going to be plotting a shit ton of lines on my charts just like this. Like, just look at this, it just looks so confusing. How are you able to find out like what price is doing if you have so many lines over here, and now you just confuse yourself even more? Just like I said, I'm more of an intraday trader, so I'm going to be focusing on what price is doing right now, what price is doing today. So on the 4-hour time frame, we can clearly see that price is in an overall uptrend. But right now, today, price is like consolidating over here. So I'll take my box tool and mark the high of this consolidation and mark the low of this consolidation right here. So right now, what we want to do is to wait for price to give us a clear directional bias. At this point of time. At this point of time, price can either break above the high to show us a lot of momentum to the upside, or it can break this low right here and push down even further. So those are the 2 scenarios. Right now, I'm just bar replaying this, but if I am live trading, I'm gonna wait for the 4-hour candlestick to close first before making my decision on whether I should go in for a buy or a sell. Let's look at what price does next. You can see price is breaking the low, and most of you will enter for a sell right here, because you hear that same advice all the time. Just sell when price break through the support level. And I want you to look at the next candle after price break through the support level. It literally gave us a big green candle. What I'm gonna tell you next is gonna change your trading forever. I'm gonna give you the secret sauce for free. So right here on the 4-hour time frame, we can see that the overall momentum is up. And then we go to the 1-hour time frame and we can see that the momentum is going down. And then next, you go to the 15-minute time frame. Now, which way do you think the momentum is going right now? Is it going up or is it going down? The momentum is going down. Look at this. Just look at this. It's obviously going down, right? However, on the 4-hour time frame, it was going up. So you can see it's kind of like contradicting each other. The 4-hour time frame, the higher time frame, is telling you that price is going up. But then on the 15-minute time frame, price is showing you that it is going down. And remember, the higher time frame trend is always stronger than the smaller time frame trend. So the 4-hour trend, the 4-hour momentum is stronger than the 15-minute time frame momentum. So this uptrend, the overall uptrend, is stronger than this mini 15-minute downtrend. So in that case, what we want to do is to trade with the overall trend, the higher time frame trend, which is the overall uptrend, the overall up momentum. And in that case, we should only be looking to buy. But we are not going to buy right now because the momentum right here is still going down. We want to wait for price to shift in line with the 4-hour time frame trend, which is the overall uptrend. So right now, what we need to do is to wait for the trend on the 15-minute time frame to change from bearish to bullish. Once we get a strong sign of price being bullish, that is when we can enter for a buy. And right here, price has not really given us any strong sign of price becoming bullish yet. So we still wait. Let's look at what price does next. You can see price is just like coming back down to retest this area one more time. You can see price just consolidating around this area a little bit, just consolidating. At this point of time, we are still waiting to see what price is going to go next. Because if you want to enter for a buy, we have to wait for price to come back up to this level and just like continue going up. That is when we know that this entire thing was a fake out and price is going to go back up just like this. Let me just go back to the 1-hour time frame to see what price is doing, to like monitor price. And we can see like right now, price is not giving any strong sign that price is going to go up yet. And as you can see, price came back all the way down here to retest this level and gave us this big juicy candlestick right here. And price has just broken this little downtrend line that we can draw right here. And you can see price has just pierced right through it. Now remember, for your entry, you should go to the 15-minute time frame, right? So you can see price has just broken through the downtrend line that we have drawn right here. Previously, price, whenever it come back up here to this trend line, it always hit back down. Come back up, hit back down. So it's just broken through this little wall right here that we have drawn. So right now, the momentum has shifted from a downtrend to an uptrend right now. So now the 15-minute momentum is up, the 1-hour momentum is up, the 4-hour time frame momentum is up, and it all lines up together like magic. Remember this rule: never buy in a downtrend, and always wait for confirmation for uptrend to be present. So I will enter for a buy position right here when I see this giant green candlestick, which shows us the momentum has shifted. Place my stop loss below the trend line right here. Place my take profit all the way up at the resistance area, like somewhere right around here. The last high right here at this area here. Because remember, the last time price was all the way up here, right? It literally toppled all the way down here. So you can call this like supply zone, whatever you want to call it, supply or resistance area. That is where I'm going to be placing your take profits at. If you are unclear on where you should place your take profit, always look towards the left right here to see where price last stopped at. So you can see right here, price last stopped at here before it collapsed all the way down here. So you can also place your take profit all the way down here. So for this example, I'll place it all the way up here because this is like a very strong area that, you know, like price is going to respect. So we still wait. So right now, let's look at what happens next. Okay, price is like slowly going up, and right there, it just smashed your take profit right around that area right there. I want to show you another way where you could have entered for this trade. So let's go to the 1-hour time frame, and you can see right now, prices came back all the way up here. Remember, if you see price like right here, you cannot be entering right here, because if you enter for a buy here, your stop loss must be all the way down there. That is crazy, and you do not want to be entering for a buy right here. You want to wait for price to pull back to a key level, then you can enter for the trade.
So right now, I'm going to show you another way where you can enter for this trade, enter for this buying position. So at this point of time, we're going to wait for price to come back down to this level. So we wait and see like price is coming back down to this area right here. And when price come back down to this level and it touches it, you cannot enter for a buy immediately because that will be trading on impulse. You are assuming that the market is going to respect this level and head back up, and that is trading on impulse. You never ever want to assume what the market is going to do. You always want to make sure you react to the markets. Trading on impulse will lead to disaster. So once again, you want to wait for confirmation. So prices came back all the way down to this area, and we wait and see what price is doing. It didn't really give us any confirmation yet, so we still wait and see. Okay, we wait, and you can see price went down even further. At this point of time, you want to apply the strategy that I just showed you, the top-down analysis. So on the 4-hour time frame, we can see that price is in an uptrend, and right now on the 1-hour time frame, we see that price is in a downtrend momentum. And if we go to the 50-minute time frame, you will also see that price is in a downtrend momentum. So what do you want to do in this case? You want to wait for the 15-minute time frame and the 1-hour time frame momentum to shift from a downtrend to an uptrend. Then you can enter for a buy. You want to wait for the 4-hour, the 1-hour, and the 15-minute time frame, all 3 time frames to line up perfectly. So right now we still wait. And as you can see, like price is like starting to go up right now. Very, very beautiful. This is the upshift momentum that we are waiting for. And if you're wondering why the price reversed at this area, let me show you this beautiful trick. Go to the 1-hour time frame, and if you look towards the left, you can actually see that there is a demand zone at this area right here. There's a demand zone at this area right here. I'm not going to go through how to draw your supply and demand in this video, but make sure you watch till the end, and I'll link you to a video which I did on how to trade supply and demand. So right now the 1-hour time frame is up, the 15-minute time frame momentum is up, the 4-hour time frame momentum is also up. At this point of time, what you can do is to enter for a buy. So I'll enter for a buy like somewhere right around here, and I want to place my take profit at the next key level. And right now price has not given us any recent key level yet, so I can just literally zoom out all the way out here, and I can see there's a very strong key level at this area right here. I place my take profit all the way up there. The reason why I place it up there is because, like you can see right here, the last time price went up this high, it literally reversed all the way back down. So this is like a very strong supply area. And let's look at how this beautiful trade play out. You can see literally price went up and smashed our take profit right there. And I think this is more of a swing trade already. Like I said, I'm a mix between intraday trader and a swing trader. So this is how I would trade the multiple time frame analysis. Like this video if this video was helpful, and if you want to learn more about supply and demand, you need to check out this video right here, so that you can understand how to trade supply and demand, which is a very, very important concept that you must know if you want to become a successful trader. Click on this video right here to find out more. Welcome to the tribe, and remember, you're just one trade away. Mwah. If you can master supply and demand, you'll be able to make so much more money from trading. These are what I'm going to be covering in this course. But if you want this course to work for you and you really want to master supply and demand, please do not skip through the video. I'm going to start off by teaching you what is supply and demand, why you should trade it, and then how to draw, how to find supply and demand zones, and how to actually trade these zones. When should you enter for the trade? Last but not least, I'm going to teach you how I personally trade supply and demand. My own secret supply and demand strategy. So what is supply and demand? Supply and demand is basically aggressive selling and buying. That's it. We want to see aggressive buying and selling because this tells us that all the big boys like big banks and institutions are entering into the market and pushing the market in that direction. I want you to look at these candlesticks right here. Big fat momentum candles tells us that there is a lot of aggressive selling. There is a lot of momentum and volume pushing the price down. On the right side, we see green momentum candles, which tell us that there is a lot of aggressive buying, a lot of buying pressure, a lot of momentum pushing the price up. So these are what you should be looking for when trading supply and demand. These momentum candles tell us that smart money is in the market. On the other hand, if you see small candlesticks just like this is not demand, alright? This is small baby buyers. We do not want to see small candles like this because there is no volume or momentum by the smart money at all. Why should you trade supply and demand? Let me tell you why I trade supply and demand. Because I want to trade with the big boys who have a lot of money. I want to react to the price when these big boys enter the market. The best way to see them entering into the market is by waiting for supply and demand. Supply is when the market is going down aggressively, and demand is when the market is going up aggressively. So I want to see these nice momentum candles that tell me that the big boys have come out to play. Remember, we are retail traders, we are brokies. We do not have enough money to move the market, while these guys are dealing with millions and billions of dollars. Let's say that you have insider information and you know that the big boys, smart money, billionaire traders, whatever I like to call them, are buying at this key level right here. So when you enter for a buy, you are a dumbass if you said no. Of course you would, it's literally free money if insider trading wasn't illegal. Because you know that these people have the money and the power to move the market. So obviously you want to ride the wave with them. Because the last thing you want to do is to trade against them. But that is what a lot of retail traders do. Now that you have understood why you should trade supply and demand, let's talk about how to actually find these supply and demand zones. The first step is that you want to look for at least 3 momentum candles in a row. So you can see right here we have spotted 3 green momentum candles in a row. It can be more, like it can be 4 or 5 green candles in a row, but the minimum is at least 3 momentum candles in a row. Remember, you do not want to see tiny small little candlesticks just like this. You want momentum candles, the big boys. So in this example, I will just use these 3 green momentum candles right here. So the next step is that you want to find the area where the move started. So this up move right here started from the previous candle. So this is the previous candle right here. So in this case, what you want to do is to take out your rectangle tool and mark the high and the low of the previous candle. So just draw like a little box and drag it all the way up here like this. So now the area between these 2 lines will become the demand zone. So right now what we want to do is to wait for price to come back down to this area and then enter for a buy. But price already did that, right? Price literally went down to retest the demand zone before shooting back up. So if you enter for a buy here, you have made a load of money. Just another example. There is literally 3 momentum candles in a row right here. So we take our box tool and we box the previous candle, the high, drag it all the way down to the low, and then drag it to the right side just like this. So this will be your supply zone because the last time price was here, it got pushed all the way down here. So this is your supply zone and we are waiting for price to come back up to this area and look at what happened next. Boom, boom, boom. So right now, price has managed to come back up to this area and I want you to observe to see what price does. It literally collapsed. You saw that. I hope you saw that. It literally went back up to this supply area that we have drawn and collapsed. So that's the first way that you can use to identify your supply and demand zones. The next way is consolidation. You can see right here, price is just going sideways, not going anywhere. So what you can do is that you can draw a box to box up this entire consolidation. And look at what price does. Price literally went up all the way to touch this consolidation box before heading back down. So that is your second way. The third way is to identify an area with wicks. So wicks basically show us that price is rejecting that area, right? So you can see right here there is multiple long wick candles at this area here. So what you can do is that you can draw a box around this area here, just drag it all the way right here. So you can see the next time price came back down to this area, price literally shoot all the way up there. So this was a very good demand zone. There is also another supply area right here. You can see there is multiple long wicks being formed at this area, which show us that this area is like a very strong area that price is always rejecting. So if you draw towards the right, you can see that next time price came back all the way up here, it literally collapsed all the way down to the demand zone. Now that we have understood how to identify supply and demand zones, we have to know how to trade them. So right here, I have spotted 3 green momentum candles, which means that the demand zone is somewhere right around here. So after I spotted these 3 momentum candles, I'll be looking at the previous candle before this up move is formed, which is this red candle right here. So I will take my box tool and literally mark from the high all the way down to the low and drag it to the right just like this. So this is your demand zone. So right now we are waiting for price to come back down to this demand zone to retest it before entering for the trade. So there are basically 2 ways where you can trade this. You can either place a buy order at the demand zone so that when the price gets down there, your broker will automatically get you into a buy position, or you can manually enter the trade after you see what price is doing at that area, which is the one that I like more. Because remember, no matter how strong the demand area is, there is always a chance that price is going to break past it. So right now, I'll be patiently waiting for price to come back down to this area. So we see what price does, and as you can see, price is approaching this area right now. And the second price come back down to this area and touch this area, you should not enter yet. You must wait for confirmation. That is a very important point. You have to wait for price to show you that it is gonna head back up. So right now you saw that price has came back all the way down here to this demand zone, and it gave us a long wick doji and also multiple long wick candlesticks, which show us that price is rejecting this demand zone and it's gonna shoot back up. What does these candlesticks tell us? It tells us indecision in the market. It tells us that price is rejecting this area, but we cannot assume that price is gonna go back up yet. We have to wait for the next candlestick or the next few candlesticks. Let's look at the next candlestick. So right here, price gave us a big green bullish engulfing candlesticks. This tells us that, you know what, the buyers are back into this market. The big boys is at this demand zone, loading up their buy orders, and you already know price is gonna go to the moon now. So this is where I will enter for a buy position right here. Place my stop loss below this last higher low, or if you want to play it safe, you can always place it below the demand zone. For this example, I'll just place my stop loss below the last higher low right here. So for your take profit, I want to place my take profit at a key resistance area or a key supply area. So I'm going to be looking towards the left and see where price last stopped at. If you look towards the left, you will see that right here, price gave us 3 red momentum candlesticks. So right here, there is a supply zone. So how I mark up my supply zone, remember, is that you want to look at the previous candlestick, mark the high to the low, and literally drag it up just like this. So I'll place my take profit all the way up at this supply area right here, and place my stop loss a little bit tighter, somewhere right around here, below this bullish engulfing candlestick. And this is like 1 to 2. Let's see how this trade plays out. Price went up and smashed our take profits. I want you to look at what price did when it came up to this supply area that we have drawn here. It gave us 1 wick right here, this upper wick right here, which show us that there were sellers at this point of time that was pushing the price down. But the buyers are way too strong. That is exactly why price continued to go up even further. Literally just rinse and repeat this strategy. So after I've closed this trade, let me just remove this, and I'll just keep on drawing my new supply and demand zones. Since price has just broken past this supply area and invalidated it, I'm just gonna remove this, and I can see there's another like demand zone somewhere right around here, because there is multiple wicks being formed right here, which show us that maybe this is like a little demand area. So we can see like right now prices came back all the way down here, and you can see what price did after it came back all the way down to this demand area. It should back up. At this point of time, price has just confirmed to us that this is a valid demand zone because price gave us 3 green momentum candlesticks. So I can just like redraw this little demand zone because like I want to draw it at this previous candle, you know what I mean? So I'll just like drag it from this previous candle, the mark, the high, the low, drag it to the right side just like this. And right now I'm waiting for price to come back down to this area and show me some sort of confirmation before entering for the trade. I almost forgot to mention to you guys, but I also draw like a little supply area right here because price gave us multiple long wick rejection at this area. So this is like a little supply area, and right now we just wait and see. You can see right now prices came back all the way down to this demand zone, and he has broken past it just like a little bit. So do you think we should enter for a sell here? This is what retail traders are doing. Retail traders will just enter for a sell when price breaks through like a little support area or whatever. And look at what price did next. It went back up, so this was ending up like a little fake out. So at this point of time, this gave us a confirmation that price is not breaking past this demand zone. This demand zone is solid and we're gonna head back up. This is the bullish confirmation that we are waiting for. You can see like the green candlesticks are getting bigger and bigger. So at this point of time, I'll just enter for a buy somewhere right around here. Place my stop loss below this demand zone. Take profit at the supply area that is being formed right here. And look how this trade play out. Okay, you can see price went up, and right there, boys, right there, we just smash our take profit, making this a very nice supply and demand strategy. 2 wins in the bag, baby. Now, since you are still watching this, I'm gonna give you a little secret. I'm gonna show you how I personally trade this supply and demand strategy. My own strategy, my own supply and demand strategy. When I am trading, I do not just like to rely on one confirmation. I need multiple confirmation. So what I like to do is that I like to use all the other technical analysis tools in my arsenal to give me more confirmation for me to enter for the trade. For example, this trade right here, the moment price starts retracing right here, just like this, right, I will pull out my Fibonacci. So I pull out my Fibonacci, drag it from this swing low all the way up to this swing high right here, and literally just drag it across like this. So right now I am waiting for price to retrace all the way down to either one of these retracement levels. I've done like a full length tutorial on Fibonacci retracement and how you can use this to get high win rate trades, which you can check it out after this video. But basically, how this Fibonacci retracement tool works is that I'm waiting for price to come back down to any of these retracement levels, this 38.2, 50, 61.8 and 78.6, and then I see some sort of confirmation and I will enter for a buy, and I will take profit at the negative 27, the extension level right here. So basically, the moment I start seeing price retracing, I'll just pull out my Fibonacci retracement, and I'm waiting for price to come back down to either one of my retracement levels. So we still wait and see. You can see price is like heading back down, and it came down all the way down to this 61.8 level before it starts retracing right here. At this point of time, I'm not going to be entering because I know that most of the time when you are using Fibonacci, you cannot be entering when price just bounce off one time. You need to wait for price to come back down to retest this same area, which makes it like a more solid area before getting into the trade. Now this is where the real fun begins. This is where the magic happens. You can see right here, this is the 61.8 retracement level. But at the same time, it is also our demand zone. It's also our demand zone right here. We have just discussed that this is our demand zone, right? So I'm not going to explain it again, obviously. So right now, we are waiting for price to come back down to this demand zone or this 61.8 level and give us some sort of confidence for us to enter for a buy somewhere right around here. You can see this is literally like the additional confluence that you need. My Fibonacci retracement level lines up with my demand zone. So in this case, what I will do is that instead of risking my usual 1% per trade, I would risk even more. I will risk maybe 2% on this trade because right now I am more confident in myself. So right now I'm still waiting for price to come back down to this area before entering for the trade. So we see prices came back down to this area, and you can see price is just showing us that like it's going to reverse and head back up. At this point of time, I will have entered for my buy position right here. Once again, place my stop loss below this 61.8 retracement level or demand zone, whatever, and then place my take profit at the negative 27 extension level. You can see just now I place it at the supply zone, right? But now I'm going to be placing it at the negative 27 extension level because I trust the Fibonacci, it will do the thing it does. So we wait, and you can see price is like going up. Okay, and right here we have just smashed our take profit, guys. It's really just as simple as that. You have to understand how to use Fibonacci retracement. If you still don't understand how to use Fibonacci, you are doing yourself a huge disservice. Which is why I want you to check out this video next, where I literally give you like a complete course just like this on the Fibonacci retracement to help you become profitable. Click on this video to find out more. And remember, you are just one trade away. Mwah.
So you can see this is a 1 to almost like 10 risk to reward ratio, which means that you are risking $1 to make $10. A lot of you guys have been asking for the part 2 of the sniper entry video. So here it is, sniper entry chapter 2. So just to recap, why do we want to get sniper entries? Because we want to make money. And we want to get those trades where it gives us like a low risk but high reward trades, right? Like those ridiculous 1:15 risk to reward ratio trades. You know what I'm saying? Right now, I'm just going to show you this entire sniper entry strategy on some random pair that I will probably never trade, just to show you that this strategy works on any currency pair. So I'm just gonna use NZD, GBP, NZD, British Pound, New Zealand dollars. Alright, let's go, man. Yo, this is a disgusting pair, man. I really pity people who trade these. No offense if you trade these though. So before you do anything, you always want to set up your charts for success, right? So what you want to do is to mark your support and resistance, your supply and demand. Basically use all the tools in your arsenal to help you like mark up the charts. So I can just mark up like a little demand area right here, and we can also see like a little supply zone right here, right? Whenever price gets up here, it always like end up reversing and heading back down. Okay, and then there's one more supply zone right here. So now that you have marked up like your support and resistance, supply and demand, whatever, the next thing you must do is that you want to trade from one key level to the next key level. It's really just as simple as that, guys. Your goal is to trade from one level to the next level, and then from this level to the next level. So right now on this chart, I can see there's literally so many opportunities where you have entered for a sniper entry. Let's look at this example right here. You can see that right now price is at like this very strong supply area or resistance area, right? So obviously, if price wanted to break past it, it would not like freaking consolidate around here. No, it would just like break past it with a lot of momentum. But that is not what price is showing us. Price is literally just showing us that, okay, they're just small candlesticks right around this area here, and it's just like consolidating, going sideways here. Since there's like a giant consolidation right here, we can just draw like a little box around here, right? Around here. So this entire area is your consolidation area, and this shows us that price is not breaking past this resistance area. Chances are, if price is consolidating around a key level, it is not breaking past it unless it's waiting for some like news announcement for it to just pierce past through. Since we kind of know that like price is not going to break past this resistance area, that means that we should be looking to sell, right? So we should be looking to sell. At this point of time, this is when price has finally broke out of the box. So you could have entered right here for a sell position when price broke out of the box. But if you are talking about sniper entry, super sniper entry, we cannot be entering right here because this is kind of too late, man. You want to be entering somewhere around here, right? So if we zoom in right here, we can see that price actually formed like a double top right around this area here. So the moment price showed us that it went up once, go up again, failed to break past this level twice, we could have entered for a sell position, right? Along with other confluence, because remember, we can't just enter based on one chart pattern, right? We need other confluence. So the first sign is that this is the double top pattern. The second sign will be this is a very strong resistance area or supply zone, whatever you like to call it. And then the third confluence could be this morning star candlestick pattern. I mean evening star. Oh my god, I always get confused between these two. But this evening star candlestick pattern right here, you can see this one green candlestick followed by a doji followed by a red candlestick. So for those of you who do not know what is evening star, this is a oops, not this one, maybe like yeah, this is the evening star candlestick pattern. You can see right here. When price form evening star, this means that price is about to go down, right? It's basically like a candlestick pattern that show you that price is gonna reverse and head back down. Yup, so we have seen that right here when price did this evening star. So now with that, we have our three confluence we can enter for our sell position right here. Or a fourth confluence could even be the moving average crossover. You can see like at this point of time, the blue line is still above the red line. But right here, this is when the red line starts to cross over the blue line just right here. You can see right here. So this is the moving average crossover, and we can enter for sell position right there. Enter for sell here. I'll place my stop loss above this resistance area right here. Place my take profit all the way down, guys, all the way down at the next key level, which is all the way down here. I can see like there's a very strong support area down here. You can see the reason why I place my take profit right here is because remember, price move from one level to the next level, so there is a very strong support level right here. So chances are price is gonna come down to this level next. So you can see price price came all the way down here. So this was like a ridiculous 1:4 risk to reward ratio trade. And with that said, there is so many things that you have done during this trade, right? Whenever price starts to like retrace and create structure, you need to move your stop loss. So you can see price went down, come back up to retrace to create your new lower high. So at this point of time, when price created this lower high right here, I would have moved my stop loss all the way like down here above this last lower high right here. Trading view kind of don't allow me to do it, but basically I'll move my stop loss from right here, which is the original stop loss, move it all the way down here, right? Because this is the new lower high. This is structure. Price will respect structure, because if price actually break past this level, chances are it's gonna like continue heading back up. So guess what? You actually got stopped out, and in that case where you actually did got stopped out, but you have moved your stop loss right here, guess what? You are actually still in profit. So technically, if you lose the trade, you are still in profit. That is the crazy thing about this strategy. Yeah, so you always want to make sure you move your stop loss into structure. So you can see price went back down once again, come back up, retrace to create your new lower high. So my stop loss right here, move it again to right here. So now, even if you lose this trade and your stop loss get like smashed right here, right, you would still be in profit, baby. You will still be in a lot of profit, right? So that is why we move our stop loss so that we can protect ourselves and our capital. So when price retraces, another thing you can do other than moving your stop loss is that you can scale in, right? You can scale in and add another position. So when price actually like go down and retrace to create your new lower high right here, this is when you can enter for another sell position. You could have entered for another sell position right here. So now you got not just one sell position, but two sell position in place, going down to your overall take profit. So now you can make like double the amount of profits. So make sure that you can consider scaling in when price creates your structure. Okay, here's another example. You can see that price has just been like going down, but it's approaching our very strong demand area, right? Our very strong support level, which means that there is a very low chance that price is actually gonna break past it. And you can see when price actually approaches this level, the candlesticks are getting smaller and smaller. You can see just smaller, small candlestick, which tell us that there is not much selling pressure. There is not much momentum that's gonna push the price down and break past this level. Nope. The buyers are going to come in and take over the market. So at this point of time, when you see these multiple small candlesticks, you want to wait for some sort of big green candlestick which show you that there is buying pressure, and now price is going to reverse and go to the freaking moon. Yup, so you can see like price actually like go up, retrace to create your new higher low. So at this point of time, when price starts retracing and creating a new higher low, this is the first sign that tell you that price is going to reverse from a downtrend to a uptrend. Alright, that is the first sign that tells us that, right? But we still want to wait for like more confirmation. So what I will do at this point is that I'll just draw like a little Fibonacci right here. You can just draw a little Fibonacci right here. And if you do not know how to use Fibonacci, do yourself a favor and go watch my videos on Fibonacci retracement. I've already done 2 videos, and you are really doing yourself a disservice if you do not know how to use Fibonacci. So you can see, okay, price retrace all the way down to like the 50 extension level. Yeah, you can see right here, this is the 50 extension level. So you retrace back to here twice, create your double bottom. 1, 2, double bottom, and it just starts reversing, right? So at this point of time, this is when you have entered for a buy position somewhere around here. When you see that price is not breaking past this 50 extension level, place it your buy order right there, place your stop loss below this last higher low right here, and I'll place my take profit at the -27 extension right here, or even a 61.8 level.
But since this video is on sniper entries and not on Fibonacci, I'm gonna be placing my take profit all the way up at the next key level, which is all the way up here, right? All the way up here, because this is like the very strong resistance area, and as you can see, price went up and smashed our take profit. So you can see this is a 1 to almost like 10 risk to reward ratio, which means that you are risking $1 to make $10. And if you guys know me, you will know that I will only take the trade if the risk to reward ratio is 1:3. Yep, so this is a ridiculous sniper entry. And remember, as price creates structure, make sure you do two things: move your stop loss and also consider scaling into the trade. So right here, as price goes up and create your new higher low, right here, this is when you have moved your stop loss from here, which is your original stop loss right here, right? Move it to the new higher low, guys. Move it right here, and as price goes up, create your new higher low, keep on moving it, right? Keep on moving it so that eventually when you get stopped out, you are still in a whole lot of profits. And I will have also like scaled in for another buy position somewhere around here and also around like here. So total I'll have like 3 trades running to my overall take profit, and I will have made like bank on this big beautiful uptrend. Now let's look at like a currency pair that is like more common and more boring for us ordinary humans. And let's look at AUD USD, one of my favorite currency pairs. So you can see I have my beautiful key levels marked up here. We got your supply zones, your demand zones, support, resistance, whatever you like to call it. And we also have your beautiful trend line. So at this point of time, you can see that price approaching this beautiful strong support level that we have drawn right here. What a handsome support level. And price is not breaking past it. So that's the first sign that tells us that price is going to reverse and hit back up. The second sign is that price broke through the trend line right here. This area, this is when price break through the trend line. The third sign that shows us that price is going to go up is your moving average crossover, boys. You can see at this point of time the red line above the blue line, but right here, this is when the blue line crosses over the red line. So at this point of time, this is when the moving average crossover occurs, and right now this shows us that price is in an uptrend. So now we got your multiple confluences, multiple signs to tell you that you should enter for a buy. At this point of time, what you can do is that you can enter for a buy position when price break through the trend line, right? But that is still kind of like pussy way trade, you know what I'm saying? Like you want to get sniper entries, you cannot be entering when price break through the freaking trend line. You want to be entering when price is not breaking through the trend line. Before price break through the trend line, you want to enter. So I will have entered somewhere around here when the moving average has crossed over. And right now, because we are in the 4-hour time frame, and the moving average crossed over right here. But I'm pretty sure if you go down to like the 1 hour or the 15-minute time frame, the moving average has already crossed over somewhere around here. So I'll just enter right around here, place my stop loss below this supply, this freaking support level right here, place my take profit all the way up at this like resistance area right here that we have drawn this very strong red area here. What a beautiful red head. So you can see this is the 1:4 risk to reward ratio trade, and you can see price went up and smashed our take profits. Okay, now let's take a look at GBP JPY. So another point I want to add is that if you actually get stopped out like this, right? Let's say that your stop loss is right here, and then you got stopped out when you enter for this buy position. What I need you to do is to be flexible. So what I mean by being flexible is that you always want to make sure that you do not impose your thoughts onto the market. Remember, the market can do anything it wants. It can literally do anything it wants. It can go up if it wants, it can go down if it wants. Your job is not to predict the market. No, your job is to adapt, right? Your job is to adapt and react to the market. React to the market, boys. So what I mean by that is that I can literally tell my friend that, hey bro, Euro USD is going up. But then I see Euro USD on my chart going down, even though I thought it was going up. Guess what? I'm gonna be flexible and enter for a sell position. I won't be stupid enough to enter for a buy just because I told my friend that Euro USD is going up. That is what I mean by you gotta be flexible in order to make money in this market. One of the main reasons on why I win a lot of trades is because I'm flexible. I can admit the fact that I'm wrong about that trade. Like I can switch from a buy to a sell very quickly depending on what the market is showing me. If you found this video helpful and you want to see a part 3, make sure you smash the like button and comment down below and let me know. And bro,
make sure you hit on that subscribe button. Welcome to the tribe, and remember, you're just one trade away. In this video, we're going to talk about how to get sniper entries. I'm literally talking about those entries where you get in and you immediately go into profit. Yup, that's the entries we're going to talk about today. So when price is at like a resistance area just like this, what you want to do is to draw a box around this consolidation. Like look at this, price going sideways, draw a box around it. Alright, so whenever price is consolidating, just draw a damn box around it. Do not trade consolidation. I hate trading consolidation. So a lot of YouTubers will ask you to enter for the trade when price break out of the consolidation box. But that is not sniper entry, that is shit's entry, and we want to get sniper entry, right? So what we want to do is to go down to the 15-minute time frame, alright? 15-minute time frame. So if you want to get sniper entry, you must look at market structure. Here's what I mean. So right now, price is still consolidating, and I want to wait for price to show me some sort of lower high, right? Once I see some sort of lower high, that is when I know that, okay, price might be breaking out of this consolidation box, and then that is when we can enter for the trade, and that is what price is doing right now. You can see price is creating a low high, and over here price is just going sideways, not going anywhere, up and down. But then right here, this high right here is lower than all of this. You can see all of these highs. This one is so damn low. So this is where we can enter for a sniper entry. So what we can even do is to like draw another box like right around this area here, change the color to this one right here, and now we want to wait for price to break through this small little box that we have drawn. Alright, so we just wait. Okay, you can start to see like some sellers start to come in when you see this big fat red candlestick, which tells us that there's a lot of sellers in the market right now, so we can prepare to enter for the trade. So we wait. Okay, right here guys, this is when price broke out of this consolidation box, this small little consolidation box. This is when price is going to continue and head back down. So this is when we can get in for a sell position right here. And what I'll do is I'll place my stop loss above this last lower high, because this is the last lower high and this is the last swing high. So this is your structure. So we always want to place your stop loss based on market structure. So I'll place it a few pips above this last lower high. For your take profit, what I like to do is to go to the 1 hour time frame and place my take profit at like the next major key level. Alright, the next major key level is all the way down here, right? So we can put it all the way down here. And look at this. 1:11 risk to reward ratio, boys. You are risking $1 to make $11. You are risking $1,000 to make $11,000. How mad is that? And right now, let's just look at what price is going to do next, and then we can go from there. Okay, you can see price go down. Alright, go down. Okay, right here guys, you can see price went back up to retest the box. Okay, so at this point of time, you still have not gotten stopped up yet because you place your stop loss based on market structure. But what you can do is to move your stop loss to make this like a risk-free trade, right? So what I will do is that I want to wait for price to create like a little lower high right here, and then this is when I'll move my stop loss from here all the way up to this right here. This is the, because this is the new lower high, right? You want to move your stop loss into profit. So the worst case scenario is that if we get stopped out, guess what? We break even. So we still wait for price to create your lower high first. Okay, right here you can see this is your new lower high already. So what I'll do is I'll place my new stop loss right here. I mean, I'll move my stop loss right here. What am I saying? I'll move my stop loss from here, right here. It was originally up here at this 1.22 level. I'm gonna move it to this level, 1.219 level. So right now, stop loss will be right here. And guess what? If you lose this trade, if you get stopped out, you are actually break even. You don't even lose any money. How mad is that, bro? You don't even lose money. So the reason why we do this is because we always want to make sure like we preserve our capital. We want to preserve our money, right? As traders, we want to reduce our risk as much as possible. And also why we place it right here instead of like some random place is because this is the new lower high, and the price will respect market structure. What I mean by that is that price won't like go up and then break this like last lower high and then continue going down. No, price won't do that. Price will respect market structure. So price will have to create the lower high to continue going down in this downtrend. And if you move your stop loss at like some random point like right here, guess what? You're gonna get stopped out, man, and you do not want to do that, alright? You always want to wait for price to create your new lower high, create structure first, then you move your stop loss so that it become a risk-free trade. Say it with me, risk-free trade. So yup, now your stop loss is right here, and let's just continue and see. Okay, you can see price just collapsed, and now we are like way into profit. So at this point, if I'm using like a one lot size, I'm probably making like, I don't know, $1,000. I'm not even sure, but basically you are in a lot of profit. And guess what? The worst case scenario is you get stopped out and you break even. So at this point of time, you can consider scaling in. Actually, not at this point of time. Right here, when price created your new lower high right here, right? This is when you can consider scaling in. So what I mean by scaling in is that you can add another position on top of the first trade that you have. So right here, you enter for one sell position. So at this area here, you can enter for another sell position right here, right? You see some sort of moving average crossover on the 15-minute time frame. Right here, you can see the moving average crossover right here. You can enter for another sell position. So now you have not one but two sell position going into your take profit. This means you can potentially like double your profit, double the amount of money that you can potentially make on this one nice trade. So you place your stop loss above here, and now same thing, take profit all the way down here. So now we got two trades running to our overall take profit, which is way down here. And the reason why we consider scaling in is because like, if this actually go down as we plan, we not only make money on one trade, we make money on two trades. So we can literally get double the amount of profit. Yep, so now let's see what happens next. Now that we have our two sell position in place and you can see price go down. Okay, right here, price created a new lower high, guys. Guys, this is when price created a new lower high. Right here, this is when price created a new lower high, right? So the reason why this is a low high is because this high right here is lower than this high. And this one is lower than this one. So what do you do next? Same exact thing. Keep on moving your stop loss. So now your stop loss was right here, right? Now it become right here. So now your new stop loss will be right here. So the first trade, you move your stop loss to right here. And then your second trade, you also move your stop loss right here. And guess what? If you get stopped out on the first trade, you still make profit. Because right now we are in the profit zone. And then if you get stopped out in the second trade, guess what? You actually break even. How mad is that? So now, both of your trades are freaking risk-free, man. So if you lose, guess what? You actually break even or you are actually still in profits. Yep, so we will move both of our stop loss right here to this new lower high. And at this point of time, what you can do is that, yep, you can consider scaling into another short position. Enter for another sell position right here. And now you have three trades. Not one, not two, but three trades running to your take profit. How mad is that? I know I keep saying how mad is that because this is really madness. Once you get this concept in your trading journey, it's gonna change your trading forever, man. Yep, so same thing, this stop loss, you can place it above this lower high, take profit at this major key level. Now we got three trades running all the way down to our take profit. And at this point of time, this is the most satisfying thing ever. You see all three trades of yours go down to the take profit. As simple as that. But don't worry if you still do not get it, I'm going to show you one more example. Now that you have closed these three trades, the next thing you want to do is to wait for the next opportunity. So right now, price is at this support, which means that price can potentially reverse, right? Because this is a very strong support area. So what we can do is that we can draw a box once again right here because this is a giant consolidation that I hate, alright? I do not like consolidation. So at this point of time, you want to wait for price to create higher low. So in the uptrend, it's basically like the opposite of what I've just showed you. So at this point of time, we wait for price to create a higher low. So over here, it's just going sideways, 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 sideways. But then look at what happened right here. This is when price create a low that is higher than all of this low. So this tells us that, okay, maybe price is about to explode and head up, right? So what you can do is that you can enter or buy position somewhere around here when you have your three confluences, moving average crossover, whatever, all of that stuff, and then you place your stop loss below this last higher low, and then you place your take profit all the way up at this next resistance area. And where is the next resistance area? All the way up here, the red color zone that we have drawn, all the way up here. Now, this It's a beautiful sniper entry. Look at this. Like price literally went all the way up there. That is so crazy. Like price went all the way up here and now it's creating a new higher low, right? Whenever price creates a new higher low, remember you have to do two things. Either move your stop loss into profit. So right now this is your first stop loss. You can move your first stop loss to right here, right here. And when price is right here, you can consider scaling it into another trade. So you can enter for a buying position. When price is this bullish engulfing candlestick, big fat green candlestick, and place your stop loss below here and take profit all the way up here. Now you have not one but two trades going into your take profit and you have made a banger on this one big trend direction. So if you want to get an entry that gives you like an insane risk to reward ratio like 1:5, 1:10, 1:15 even, you must be aggressive. You must be so aggressive. So a lot of people are really afraid to get in and that's what stops them from making money. So this sniper entry aggression that we do here is the difference between making $500 and making $5,000. Yup, it's a super big difference if you get in right here compared to if you get in right here. Huge difference, guys. If you want to see a part 2, make sure you comment down below and smash that like button and hit on the subscribe button and the freaking bell beside it. I really do think that sniper entries is one of the most important things that you must master in trading. That is why make sure you comment and like on this video so that I can release a part 2, so that it will motivate me to release a part 2. Alright, so welcome to the tribe. And remember, you're just one trade away. Mwah. I quitted my 9-to-5 job after mastering these 5 trading rules, and I never have to work again. So, if you want to escape your job and live your dream life, master these 5 rules. Firstly, don't fall in love. Don't fall in love with your trade means that you should not get attached to your trade. Let's say that you entered for a buy right here and you place your stop loss right here. And then you start seeing like the trade going against you like this, like it just keeps going down and going down, so you end up keep on moving your stop loss because it's like so near your stop loss and you're like so scared, right? You're like, oh my god, no, it's gonna hit my stop loss. So you keep on moving the stop loss, keep on moving it, and then the trade still keep on going against you and keep going down, and ultimately you can't take it anymore because the loss is like way too big, so you end up taking like a big L. Stop trading like that. I want you to remember that the market can do anything it wants. So once you place your stop loss, just leave it, and if you do get stopped out, just move on to the next trade. The next thing is that you do not want to fall in love with your buyers. So right now you can see it's a bullish market, price is in an uptrend, price is going up. So you should only be looking to buy, right? But then you start seeing price break market structure, break through the trend line and reversing to become a downtrend. In this case, you do not want to be attached to your bullish buyers. So right now, price has broken market structure and is in a downtrend right now. So instead of still continue looking to buy, you should be looking to sell right now. So you never ever want to like fix your buyers onto the market because the market can do anything it wants. Once again, the next thing is don't fall in love with your market. Let's say that you have been trading EURUSD for a few months now. It's your favorite currency pair on the list, but then you start seeing that it gets slow and choppy recently because maybe this month there is not much volatility in EURUSD. But then you see GBP USD moving like crazy. In this case, go trade GBP USD. Alright, just because you've been trading EURUSD for like a few months now does not mean that you are in a marriage with it. Alright, you don't care about that shit. Just move on to GBP USD, find a currency pair which have much more opportunity than trade that one. Do not be so fixated on your favorite currency pair that you just neglect those that give you opportunities. If you fail to plan, you plan to fail. If you want to build a house, you need to follow a blueprint, right? Because if you anyhow build the house, that house is going to crumble. That is exactly why you must create a solid trading system, because a solid trading system essentially acts as a blueprint for your trading. So a trading system comprises of 4 things. Number 1, a trading plan. So a trading plan consists of a lot of factors like what time are you going to be trading, what currency pairs are you going to be trading, and then which brings us to the next point. It also comprises of your risk management plan. How much money are you willing to risk per trade? What lot size are you going to be using? all of these things takes into account your risk management. And what should your risk to reward ratio be? Like for me, if it's less than 1:2, I will not take that trade. Next, before you start trading live, you have to make sure that your trading strategy works. Because if you don't, you're going to be so frustrated and you're going to lose a lot of money. So make sure that you use a winning strategy that is tested multiple times and you know that it works. A trading strategy is very important because it allows you to understand when to enter for a buy, when to enter for a sell, when to stay out of the markets, and where you should place your stop loss and where you should place your take profits. Next, you also need to have a trading journal. Having a trading journal is so important in your trading because it allows you to write down all your trading mistakes so you can learn from them. Number 3 is become a good loser. As humans, we hate to lose, right? And we have been conditioned by society that, oh, losing is bad, failure is bad, hehe. I want you to change the way that you think about losses. Losses are not bad. Losses are only bad if you do not learn from it. Every single loss puts you much closer to a win because you have to lose in order to win in trading. We hate to be wrong, right? But I'm telling you, it is okay to be wrong in trading because you can lose a few trades in a row and just win one and be profitable if you practice proper risk management. Professional traders, they are very good at taking losses because when they lose a trade, they don't feel like, oh, I'm the worst at trading. They take a loss and then they just move on to the next trade as if nothing has ever happened. So that should be the mentality that you need to adopt. You need to remember that losing is really part of the game. So for me, I don't care if I lose a trade because I know that when I win big. So I can lose 3 trades in a row and still be profitable. Number 4, don't break your trading rules. I know you hear this a lot, but it is true. The more disciplined you become as a trader, the more money you make from trading. I know it's super duper hard, but you have to try to become more disciplined. Things like follow your trading plan, journal your trades, use the correct lot size. All of these things will help you become more disciplined. Successful people, they are very disciplined. When people ask me like, where do I get all this motivation from? I tell them that I'm only able to get to where I am today because I value discipline over motivation. The man who works when he don't feel like it will always beat the man who works when he only feel like it. Think about that for a minute. Remember guys, discipline can make you rich. So many beginner traders, they keep making the same mistake over and over again. Which brings us to the next point, which is always improve. This is very important guys, because as a trader or as a human, you must always be learning, you must always be improving, which is why I would advise you to aim to become 1% better every single day. Because like, I understand that you probably can't go from a total loser to becoming a disciplined trader the next day, right? It takes a lot of time, it takes a lot of discipline, it takes a lot of dedication. So that is why I would advise you to really just aim to be 1% better. So becoming a better trader does not mean that you need to make more money when you are trading. You can still be losing and become a better trader. Because becoming a better trader is all about reducing the mistakes that you make. Becoming a better trader means that you are making less and less beginner mistakes. Last time you might use a lot size that is way too big for your account, but now you practice proper risk management and you don't do that anymore. You don't commit the same mistake anymore. That itself is progress. That means that you have become a better trader. And when you become a better trader, that means you are becoming a more disciplined trader. And when you become a more disciplined trader, money will come. So I really want you to adopt this mindset of becoming a better trader instead of trying to make a lot of money in the short amount of time. No, just adopt this mindset of becoming a better trader, becoming a more disciplined trader. Because when you do that, trust me when I say that, money will be coming to you. You won't have to chase money anymore, money will be coming to you. Bonus tip, never ever quit. Why are you making excuses? You are broke. There is nothing for you to lose except for maybe your hard-earned money. But there is nothing for you to lose. All the benefits of trading outweighs literally everything. When you do actually master trading, you will achieve the freedom that you have always dreamed of. You'll be able to live your dream life. You'll be able to get your location freedom, which allows you to work wherever you want. You can be sitting on a nice beach in Puerto Rico and then still be making money. You don't have to worry about money anymore because now you can actually put food on the table for your family. And you don't have to work for your stupid boss anymore. I came from nothing and I still made it because I did not quit. So please do not give up, because I believe in you and I hope that you can believe in yourself. I still have a lot more tips to share with you guys. So if this video reach 200 likes, I will release a part 2. And if you enjoyed this video, make sure you hit on that subscribe button.